All right, welcome back, everyone. Hope you guys are having a great day as always. And I think everything is working here. We're waiting on one of our other members, our analysts, to hop on. And when they're on, I'll go ahead and put them up here. But we're going to get started because the time is already past 9:45. And we're going to be talking about a couple of topics, one of them being Amazon. I haven't made a video on Amazon in a while now. But as you guys know, the earnings report just came out and the stock rallied significantly here. I'll go ahead and share my screen. We'll talk a little bit about what happened. Let me put it here. Where you at? I think this is it. Yeah, here we go. So you can see here from the past 5 days, earnings reports comes out here. Market loves it. Let's discuss it real quick. So basically what you have to think about, and I'm going to try not to rehash too much once our guest comes on, but we were paying attention to a couple things, right? One of them was cloud, advertising, retail. So three segments in particular that were quite important. Cloud grew about 12% year over year. That's AWS mainly. And what the takeaway that you want to kind of get from that is, despite AWS's current size, it's still growing at a nice clip. Not an amazing clip like it once was, but arguably the law of large numbers now applies to AWS. And so we can't expect the same level of growth as they showed in the past. Now, that growth to me is satisfactory. The retail segment growth, that was also actually in line with what I was expecting. We saw, no surprise to anyone, we saw what the data was coming out, or what was already released regarding Prime Day sales. So there was an expectation that retail sales was going to be quite strong. And the main component that I was really curious about, which grew at 22%, was Amazon advertisement. So Amazon ads is what grew at a pretty nice clip, regarding both, relative to its size, it's kind of expected that it would grow a little bit more. But in this environment, when you see the likes of Meta and Alphabet not growing the top line in ads as much, nearly as much, Amazon is growing in a tough environment, which is what we really wanted to see from the get-go. So I'm going to tout my own horn here, or pat myself on the back. A lot of the things that occurred in Amazon's earnings report now, and I think in the previous one as well, was something I wrote about back in October of last year. Now, where did I write this? Well, I wrote this in the Discord community. So I do analysis write-ups on various equities, and one of them was on Amazon stock. And I discussed why Amazon was significantly undervalued at that time. Unfortunately, I wasn't able to purchase the shares, but community members who were able to purchase the shares, I'm quite jealous of you. I had to purchase after the certain window occurred, and then I was able to accumulate shares at, unfortunately, a higher price, but still a pretty good price. All in all, I believe I'm up around 30 to 40% on all my Amazon shares that I hold currently. Now, Amazon, what happened? Like, let's talk about that. Let's dissect that a little bit. My main premise, my main thesis around Amazon was people had, for one, forgotten just how much cash flow this company is capable of producing when it wants to. And I went over in my write-up about looking at the past results of Amazon, and when they were producing tons of cash flow, what were the situation, or what was the situation at that time versus where we are today. So at the time, this was again 2022, when I was writing this article, was focused on the capital expenditure being quite high. And people were wondering, and I actually got comments like this, believe it or not. I know now, maybe less believable, but it's funny how living through this, you see people's perceptions, takes on certain investments change drastically. People who were very bearish on Amazon back then are now suddenly bullish on Amazon. Just pay attention to those people. But going back towards that time period, what we noticed is people were very concerned about Amazon's ability to produce strong cash flows, and completely ignoring, despite, even though I would lay out my idea, and I think I laid it out clear and concise, that, hey, well, the capital expenditure they're doing right now, it's not the norm, and they're doing this so that there's not going to be that, well, let me rephrase it in a better way. that wasn't maintenance capex. There was a lot of growth capex in there, and no matter how hard I tried to explain that, some people did not want to hear that. I don't know why. I'm making it sound like they got angry or something. They didn't get angry. It's just it didn't get through, unfortunately. I think I made it as simple as possible. And the same thesis occurred with Salesforce. And I think I'll wait when Andrew comes on because he'll talk a little bit about this. But he said that Salesforce showed him that this strategy can work very well. Now, what was the thesis on Salesforce? Well, Salesforce was another stock that I pitched, and it was very much the same thesis, more or less, which was these are cash producing machines that they can just turn on the spigot when they want to, and people forget that. And people were forgetting that at the time when we purchased Salesforce. And so showing that those results kind of reinvigorated or further solidified the thesis on Amazon for some people. And then again, I will let Andrew talk about that a little bit when he gets on. I just got a message from him that he's on his way. So what's the audience bruh moment? All right, so let's see here. Don't want to do that. I'm just trying to make sure I don't skip over people's questions and comments, etc. Bruh. Okay, yeah. Okay. We don't have any questions just yet. We'll talk about L3 Harris. I think we're definitely going to talk about the defense sector because that's one of the topics we covered or want to cover today. So I'm going to go ahead and go over Amazon's earnings slide. And so this is what some of the things that discussed. And I want to go ahead and start here at the free cash flow slide. So this is what we were working with in the past quarters and what we were discussing as investors, really kind of focusing on this part within the write-up. That again, Amazon, when it wants to, it can produce a tremendous amount of free cash flow. And by the way, from management's guidance or what management's strategy is going forward is to focus on producing more and more cash flows into the future. So that's not really changed here. Now, the other component, net income, I'll find the net income slide here because it's also important to talk about this. The net income slide, why is this important? Well, keep in mind that the previous quarters had the write-offs for Rivian. So we talked about that as well. And I think that I mentioned that in my last video on Amazon. So all this to be said, none of this should be quite a surprise to people who've been following Capital Mindset and have been following along in the analysis on Amazon. And the position sizing within Amazon in the personal holdings, it is now it's third in terms of size. It actually outpaced Alphabet. Netflix is still number 2 because Netflix has performed extremely well. Meta has just blown up out of proportion. It's sitting at about like a 40% allocation, followed by Netflix at like a 9%, and then Amazon's like close to a 7% allocation, then Alphabet, and then the remainder, which I still have to do a portfolio update for YouTube. But as far as the holding company, what you guys get as part of Capital Mindset Discord Gold, you guys see in the holding company, the dollar figures, and you see where Amazon is, right? Because Amazon has that newer strategy, so to speak, or that where we started that portfolio from scratch. And that's what got a lot of love because at the time I was acquiring Amazon, I was also putting in a lot of capital. So Amazon is number 2 in that entity. So he sold this. I did sell this. We can talk about that too. And you guys can ask whatever you want. Have you bought more discs? And I'll talk about Disney because there's a reason for why, but it hasn't changed. My thesis hasn't changed. So there's many reasons why someone might sell something. And I don't know if you're part of the community and you're asking from what you've seen in the portfolio, and you're more than welcome to ask. We'll go ahead and let me write that down so I don't forget to talk about Disney. Because otherwise we'll get into other topics and I'll completely forget about it. So let's write that down as one of the topics we get into. Okay. Iger comments. Well, we'll talk about Iger. Are you worried about the less integration AI platforms compared to Alphabet and Microsoft? Less integration between AI platforms and cloud compared to AI? No, well, actually within side of Amazon, I think they have one of the strongest AI departments that's not really talked about all that much. I think Microsoft, in terms of publicity gets the highest amount of publicity, followed by probably Alphabet. And I think Amazon doesn't get any publicity whatsoever, but I kind of like that because they're operating underneath. Now, if you know people who work at Amazon, and specifically who work at Amazon AI, you'll know that they are working on pretty interesting things. Now, they're not as show-offy as they are with or as other companies are. But Amazon's robotics division and Amazon's AI division are one of the best, if not the best. We'll see who kind of comes out on top. It's going to be quite competitive. We'll see who is able to apply it the best. But all of these large tech companies, they're all investing in developing their own AI solutions. It's just who has the best marketing from a consumer standpoint versus who has the better applied technology. And I think that Amazon has not focused a lot on getting attention towards the AI capabilities and what it's working on, right? Because Microsoft with OpenAI has been very good at kind of getting that attention. So everyone now thinks ChatGPT is the cutting edge of AI. And I know I said that on purpose because I know some of you within my community are individuals who work in AI, and that just triggered you to call ChatGPT AI. I get it. It's a language model, but for the let's say the common tongue, and if I wasn't in conversation with you guys, I would also call it AI. So in common tongue, let's call it AI. But I know that it's not AI. Do not worry. Warner Bros. Discovery, Moon. We'll talk about Warner Bros. Discovery too. How about this? I'll talk about Warner Bros. Discovery alongside Disney. And we'll talk about that because we still have to go over the defense contractors. We're going to go over some other stocks that we were pitching in the past. So now we're going to talk about it publicly and kind of give some thoughts, some interesting investments. Some stocks I haven't been able to make videos about, but the community knows about, and I've been investing a decent chunk. I know that they're in the portfolio, and I haven't even made videos on them, but you see them when I do my portfolio updates. Hey, there's that investment, and he's never made a video on. Well, I can talk about that here. Okay, so Albus Dumbledore is the pinnacle of AI. So yeah, for context, what Christopher is talking about here is we're working on a better one, but we integrated some language models into the Discord. So you can interact with Albus Dumbledore and a couple other characters that, by the way, I saw that some people were using it to give them recipes for cooking, which is interesting because I saw that Albus Dumbledore was like giving people cooking recipes. But yeah, I'd say that what okay, who's saying this? What is that? Oh, let's see. I'm saying Fuhat. Fuhat's distracting me. Wait, Amazon is 1.6% of my portfolio. Buy my course, bro. That is also true. So if you're an index fund investor, you have Amazon in your portfolio because it is one of the largest market caps out there. All right. But anyways, getting back to Amazon, what was the main surprise / concern? The market was just surprised in general because they're seeing a company that's going from low cash flows to suddenly high cash flows. Now, should you be buying Amazon now? I think you kind of miss the boat for the most part. If you don't have, and this is not financial advice, this is just like shooting the shit with you, right? So if someone were to ask me, should I buy Amazon now? I think that's the wrong approach. A lot of retail investors are going to look and say, it went up a lot, bro. Now it's time to buy. And I think Strongman's going to definitely appreciate that, right? Because it's true. And he's observing that. And it's very frustrating, right? Because in 2022, when it was the time to buy tech, no one wanted to buy tech. And now you see, and let me kind of get into this rant a little bit. You're seeing all these YouTube channels. I lost count of them, that they're all pretending like they were the ones running into the fire when they definitely were not. When now that the tech stocks have went up, I love the term year-to-date bros, right? That's the new term. And I beg you guys, start using that more often. Let's make it more mainstream to use, at least among people who know. Just call them year-to-date bros, right? And a year-to-date bro refers to someone who uses the year-to-date chart and says, look at my returns, right? Look at my returns. I'm gonna actually pull up here on the side here, and I'm gonna probably pull up the holding co portfolio. I'm not gonna show the holdings in this because this is for Discord, but I'm gonna show, for example, a year-to-date return percentage as kind of like a joke. But the problem is with people on other channels, right? And A lot of people in these other channels remain unnamed, but you guys have an idea. You go on Twitter, you'll see them. They'll put the year-to-date chart because in the year-to-date, a lot of their poor investments are suddenly up a lot. And then they can pretend as though that's kind of, or they don't say it outright, but it implies that that's their return, right? And so they just show the year-to-date chart. I know that a huge culprit of this is Palantir stock. So Palantir stock investors have used the year-to-date chart of Palantir to say, hey, look at my investment returns. I do have a video on Palantir. I actually did have an investment in Palantir way back in the day. Go check out that video. And I always have the video actually listed here. So if you go to here, and you can see this on the one available. This is available to the gold members. So it's constantly, let's say, up. And then the one that you guys see anyways, this is always available, the past trades part. And you can see here, I made it like super easy. Oh, by the way, if anyone can help me out with the work here, I gotta find this video. Someone sent me the link and I put it in. I don't think I might have deleted it afterwards. But anyways, I gotta find the link to the video explaining these sales. But I made it pretty easy for everyone. So you don't even have to hunt these videos down. So the links are there and it explains basically why I sold, right? So if anyone was curious, but this Palantir video is a little bit special. I put it there because during the bull market hype, a lot of Palantir investors were buying it and let's say losing money in it. And it's kind of funny because both for Palantir and SoFi, I traded them. I don't like to do that often, but to have fun, I traded them and I made a decent amount of money on both investments. So here it's just going over the trade, etc., showing the receipts as well. And then the SoFi investment, I didn't make videos on that because I got really busy, but those within the community, you guys can vouch for me right now in the chat if you want to. But I did trade Palantir and I made a higher percentage return probably than most of the SoFi investors out there. So anyways, going over, oh, Andrew's here. Hello, Andrew.
What's going on?
Talking about the year-to-date bros, right?
Oh, the year-to-date bros?
Year-to-date bros. I want people to start using that terminology, year-to-date bros. Okay.
I love it. It's like, oh, guys, look, Palantir's up 170% year-to-date. Zooms out. Oh, I bought at 25.
Yeah.
Nice.
Yeah. We need to make that much more commonly phrased because I think it that's honestly how you sometimes can help take down fraudsters is you use memes, right? You make fun of them. You make them for the joke that they are. They're not to be taken seriously. So yeah, I was just talking about Amazon basically in the earnings. I don't know if I wanted to say, and I wanted to wait for your input on this because I don't want to put words in your mouth. And by the way, I want to also say Andrew here, he's really passionate about ad tech. So he was one of the people that first put, and I think my camera's moving there. He was one of the people who first put like the, I guess, smell to my nose as the powerhouse that Amazon is going to be in ad tech. Because he had some ad tech plays that he was invested in. He has, I mean, how prolific of an ad tech investor are you? I don't want to.
I am very much an ad tech investor. One of my plays is not had a bad earnings report, but I think ad tech on average is like 30% of my single stock portfolio. So yeah, I'm quite heavy in that sphere.
Yeah. So when Andrew was like, hey, by the way, like, you know, Amazon ads is going to be pretty interesting. And this is way back, I think in last year. And then when I dug deeper and deeper into it, I basically came out of it saying, my gosh, Amazon's going to have I saw their strategy at that point. I saw what they're trying to build, the ecosystem they're trying to build. And while everyone's focusing on retail, I was saying like retail doesn't even matter. The retail is just there to get you in. And then once you're in, the other two, well, cloud doesn't really need retail to succeed, but ads is the real profit driver for retail. So if they find a way to make retail very profitable, that is just literally icing on top. And so it's amazing.
The other thing that's insane about their ads is people don't understand how fast they're growing. If I remember right, they had quarter-over-quarter growth ads, Q4 to Q1, right? Which is unheard of. So everyone has advertising revenue go up in Q4 because it's like Christmas, it's Black Friday, it's all that stuff. and then Q1's like a big drop off. They had sequential growth, which I remember I saw that in the Q1 report, and I was like, oh my goodness, like this thing is growing an insane amount.
Yeah. No, that's
So
something we talked about a little bit before you came on here, was
mm,
Amazon surprising people in terms of they grew while everyone else showed, well, granted, normal and expected weakness, but Amazon didn't show weakness in that category.
right. And I think and I shared a little like private chat message with you. It was an eMarketer article from like a couple days ago. It's just a screenshot of it in the private. Um, but basically, it's saying right now of the retail media advertising, like the whole market right now is like 45 billion. But of that 45 billion, about 40 billion is Amazon, and that market's supposed to grow to about 100 billion by 2026. So, like, if you extrapolate that out, that's absolutely nuts. The growth, like, they have right there, just laying out in front of them, like waiting to be taken, and the margins on that are super, super good for Amazon.
Yeah, people sometimes have a hard time wrapping their heads around a company like Amazon. It's already so big. How much bigger can it get? No, there's actually a lot for them to take out here. What they're tackling as an enterprise, there's a lot of levers they can pull to make new businesses. They're a spawner. Legitimately, I would call them a spawner. And the iRobot acquisition, I said this in the write-up. And I'm referring to the write-up, by the way, in the Discord investment ideas. So in the write-up, I talk about what's their goal with iRobot. Why do they even want iRobot? Is that a big deal? Because some people are making a big deal of iRobot as if they're just poor capital allocators. Realistically, the poorest capital allocation decision Amazon did in 2021 was overbuilding their infrastructure, which made their numbers look a lot worse from a cash flow perspective temporarily. And this is something was I not harping that idea?
No, you definitely were like, hold on one second, just gotta send that. Okay. You were the thing, sorry, repeat the question. I'm not gonna lie, I had to send that text off. Sorry.
No, you're good. So I was talking about how basically all the worst capital allocation decision Amazon did was 2021. They overinvested in infrastructure,
Yes.
and that made their cash flows a lot worse. And that was something I was trying to, was I not? And that my question was I not harping on that pretty much in 2022
No, you
over
were
and over
saying
and
that,
over again?
and I think you even didn't Jassy even say on a call, like, he admitted that much?
Yeah, no, he admitted that it was a
And
failure, but
like, that was, you're like, "That's what I've been saying." Like, that's it right there. Um, Everyone got a little ahead of themselves in COVID, and I don't think Amazon was any exception there.
yeah. And what well, to kind of comment on late notice's comment here, I'm so jealous of Amazon, so way too early, should have never touched it. This is a common mistake we all learn from. It's, like playing with the soap. When we have a great asset, it's not always prudent to kind of optimize it. Sometimes if you know what you own, you should really be careful to mess around with it too much. Now, that's the point, though. You have to know what you own, because if you don't know what you own, you're not going to fully appreciate for what it is. And when bad news comes out, you might not know if it's actually bad or if it's just headline news, etc. We'll talk about that when we get to Disney, for example, and the defense contractors, because I did promise everyone, I know you wanted to talk about defense contractors. We're going to talk about defense contractors today. We also have this comment from Luis, right? Amazon is an amazing capital allocator, almost at the level of Berkshire. No, I agree. They are an amazing. I'm just telling you, the one part where they messed up really is what caused this whole freak show, this whole panic with Amazon in general. And we took advantage of it because honestly, we saw the sentiment around Amazon and generally big tech as a whole be rather muted in late 2022 or pessimistic. And so if you were an accumulator of big tech at that time, your portfolio has done well. Again, not to rant too much into it, but right now every freaking YouTuber is like big tech centric, but whatever. So let's see. Bezos wants to know how does it look like he's dropped through Alexa. No. Okay. So that's the other thing that I'm not even, let me see if there's a slide. I think there's definitely a slide on If not, they talked about it in the call, but I don't know if there's a slide on their penetration for smart home. Oh, they did talk about this too, by the way. You can see it's not even diluting that much. Segment AWS. I don't think they have a slide for smart home penetration. Breakdown. Yeah, they don't have a slide for it. But point being, what I wanted to get at with that is another lever that we have no real idea how they're going to really drive value besides data. So the data is the obvious point, and that optimizes the retail business, optimizes the advertisement business. But in the future, I know that, for example, Amazon has been doing a lot of partnerships with builders, home builders, so that they come straight from the get-go with Alexa integration in a lot of these houses. And I think one of their partners is Toll Brothers, if I remember, or is it Lennar? I forget which ones are their partners, but Google is also, I imagine, getting into that as well and trying to partner with home builders to make that an option. But Amazon is right now ahead of the game. So
I didn't know that was the thing with partnering with the home builders.
Oh yeah, no, I forget which one that is. I'm gonna Google that right now because we still use Google.
But I mean, isn't and I don't know because I missed the start of your talk, but wasn't this Amazon earnings report simply the proof that it's the CRM? It's the same thing CRM went through.
I wanted you to be on here to say that. Yeah.
Okay.
No, I mentioned that you said that the other day.
Yeah, because like the whole thing that sold me on Amazon was when Fabio bought Salesforce. And I was like, why would you buy this like garbage? Like they're not a garbage company. This didn't seem like that that great of a buy. And then Fabio basically said like they can optimize real fast. Just watch. And literally in like one quarter, boom, they optimized everything. And I was like, oh my gosh, they can optimize that fast. Like, what does that mean for Amazon? Because I thought with these big conglomerates, it would take longer to optimize and really start getting this cash flow out. So that's one of the reasons I went. That was when Amazon. I think my cost basis was like 105. That's like when I started buying because I was like, okay.
You saw. Okay, that is possible.
Yeah, exactly.
Because I think I pitched Salesforce. By the way, when I'm referring to pitches, we do, just to mention everyone, we do a private live stream once a week. Now it's on Wednesdays, where we come up with our pitches and we present it to the community. So this was, I think, when did I pitch Salesforce? December? I think December. Yeah, I think it was December. I don't think it was November. I think it was December.
I remember.
I'm pretty sure I was in the cabin.
Yes, you were.
So that was December. That was definitely
December. But you had bought it before that point, or
yes.
No?
I had bought it like a week or two before that, but it was still around the same price.
It was December. Okay.
Mm-hmm. Yeah. Oh, I remember when I bought Salesforce. I bought Salesforce. Yeah, the week before the cabin, on the way to the cabin, and a little bit at the cabin. So yeah, so that was December, and then I pitched it while I was in the cabin. So
okay, that's what it was.
Salesforce, the main premise of the pitch was this is a company that is, I don't think its quality was under question, but people were questioning how profitable can these SaaS businesses be, these big tech companies, but specifically in like the software space. I think people know Microsoft can be very profitable, but something like Salesforce, because up until that point, Salesforce hadn't shown any accounting profits. And then so I was trying to explain to the audience, to the members at the time, hey, when the management is saying that they are going to outline this path to profitability, right? They're already at that scale that tomorrow they can decide to be profitable. And what Andrew is referring to is quite literally, they laid out the plan, and then the very next quarter they executed. Market rewarded them, and then proceeded to have, it went from like 100 and teens to now 215. I think it was at 230 at one point, came back down, but we'll talk about that.
No, I mean, so if we're just summarizing, just real quick, the Amazon earnings, was it just operating cash flows that was surprising for you? Is there in advertising, or is there anything else?
No, nothing. That's why I was saying nothing really surprised me, although international surprised me, but not a big surprise. International surprised me because I thought there was going to be a little bit more weakness in international. It turned out that, international was about on par in terms of growth, right, with domestic.
Mm-hmm.
I thought, given what was going on internationally, but albeit I was not investigating too deeply international as I probably should have. That's probably why it caught me a little bit off guard to the upside, right? Not to the downside, thankfully.
Right.
That's just a positive surprise. But the advertising, I was expecting or hoping for / expecting stronger growth to peers. I was expecting the growth that we got in AWS. I was not expecting 20% plus in AWS for sure, but the fact that it still grew at 12%, and I remembered when our previous update to the members on Amazon, when we were comparing them to Microsoft, I made a point, and I'll share this point now with everyone publicly on YouTube, that Microsoft, and I think you brought this point up actually, but then we highlighted it and talked about it more. So I'm going to try to remind you. We mentioned that Microsoft bundles a lot of things in cloud. And so the
Yeah.
growth rate on cloud is a little bit misleading.
Mm-hmm.
So we don't know how much of it truly was Azure, because a lot of things from Microsoft get plopped into cloud. While Amazon, it's AWS. It's pretty
Yeah.
simple, pretty straightforward. So
No, it's like Microsoft and Google does a little bit, but they always break out GCP because GCP is like such a better
yeah,
outlier than the rest of their cloud. But yeah, that's the thing with Microsoft is that you always look at it and you're like, oh, Microsoft Cloud grew this much, but how much of it actually is Azure? And did we find out? Because I was listening to, did Microsoft break it out a little bit this quarter?
I did not check out Microsoft. To be
Because
frank,
someone
there's
made a
so much going on with my portfolio that I was not able to look at
I
too much
was
outside.
listening to guys give summaries of earnings, and they made a comment. They said, like, I didn't realize AWS is twice as big as Azure. So, like, that's my understanding of how the difference in scale. I could be wrong. Like, I was listening to, um, it was Chit Chat Money, and they're pretty good. So usually they know what they're talking about.
Yeah.
Um, but they're like, wow, I didn't realize like it was that much of a discrepancy. I think people thought it was a lot closer. So I need to look at that and see if they broke anything out.
Yeah, we need to. It's probably going to be a good idea to check them out just to see a comparison against AWS. We did get some questions here because this is related to this, and also I did give a pitch on Uber, and we recently had our other analyst Leo pitch Uber. So for those who have been part of the Capital Mindset community for a while, you remember that last year in June, July, there was a whole weekly call dedicated to Uber and Lyft and comparing the two. I made a comment around that time that continues to this day. I never got to buy Uber, so before anyone thinks that, my commentary on that did not mean anything monetarily to myself, unfortunately, because I did not execute on that commentary, but the commentary was there nonetheless. And yes, financial freedom with Dennis is correct. So when we were talking about Uber, we said that Uber is one of those companies because we looked at, for example, the breakdown of the income statement and on the surface, right? It begins like this. The question begins, Uber is a platform that connects a driver and a customer that wants a service. Why on earth are they not profitable? That's, reasonable question to ask. And you go down and you see, okay, well, first of all, the gross margins look pretty terrible for a tech company because of how they recognize the revenue. Now that's accounting technicalities, but just to, well, maybe some of you will appreciate this. Basically, they record the entirety of the transaction as revenue, and then what's included in that is what is paid to the driver, and so that's why their gross margins are so low. If they were just an intermediary or a platform and they did not recognize the actual ride fare as revenue and just only their cut, their margins would be somewhere around 80 to 90%, their gross margins. Okay, so that's why their margins look so terrible. Now going further down the line items, and I'm going off of memory here, you can see that the research and development arm was quite large, and that's something that they don't necessarily have to have so large. And funny thing, that's actually one of the things that they finally decided, hey, we're gonna not spend as much on, and that was the point. That was the point. So Uber can decide, is one of those companies that was deciding, hey, we're gonna focus on profitability now. A couple other factors played out, and this is something I'm going to do my best to represent our other analyst, Leo. His points, right? And these are his points that he was highlighting when he pitched Uber. What was it, a month or two ago?
Yeah, that sounds about right.
I think it was like a month or two ago. But anyway, so he pitched Uber to the community, and the points laid out by Leo was the scale that Uber had achieved at that point will allow them in the near future to show the market how profitable they can become versus peers like Lyft, who were losing share in the ride hailing business. And as venture capital started to dry up, the appetite for risk in these losing money ventures starts to dry up. Uber can kind of now start to show their dominance, show their scale in these markets, including competition with food delivery with DoorDash, which, by the way, was funny because if you turn the clock back a year ago, that was believed to be a terrible business for them to be involved in. Turns out now that no, it's actually quite contributive to their bottom line. Okay, so that's kind of the new vision or the new outlook that Uber has, and it's starting to kind of make sense. So that initial question that sparked that commentary, Dennis, came from that. It's like, well, that doesn't make sense. Like it makes sense to me that they should be quite profitable. What's causing that? And then that's what, sparked that investigation. I currently, for full disclosure, do not own Uber stock. Although it is kind of on my watch list to acquire, even at these levels. Unfortunately, when I made that commentary back in the private call, I didn't add to it. I would feel a lot better at those prices, because back then those were the prices where everyone was spitting on Uber. Now I think the market's kind of come to a realization a little bit about Uber, simultaneous with just the market in general being quite expensive if you're a tech company. So maybe start like a watcher position, small position, gets into like those single digit percentages, 1%, maybe 2. And then we get some sort of pullback, market gets a little bit pessimistic, or we just give away some of those gains we've had in tech. And then I can maybe think about allocating new capital more to Uber. I don't know, but that's just some things that are going through my head.
No, I find Uber interesting as well. And on forward-looking metrics, it's like very cheap.
Yeah.
I think it's interesting. Like, it's one of those things, they reached an inflection point, and it's been a dog for ever since it IPO'd, is what it feels like Uber has. But now I looked at it, I think it was at like 20 times or 24 times free cash flow forward. And I was like, that's not bad for a company that's going to really optimize itself and grow top line at like 15%.
Mm-hmm.
Just as like and I'm in the same boat. I haven't bought any, but I wouldn't be surprised if I end up buying some here soon.
Yeah, they're showing. I mean, this is like a common theme, because I'm going to bring up Dennis's other comment about Meta right here, and then we'll come back to the other comment, because Dennis, you're just coming out with these comments that are prudent to the conversation or driving the conversation forward. Let me go ahead and put up Uber's stock price, by the way, because we're talking about Uber and I had Amazon up there. So going off of Uber here, you can kind of see in like the past 6 months, it's absolutely roared. But the Meta did the same thing. They changed 2023 from let's go into the metaverse to 2023 is a year of efficiency, and they flexed their profitability. Yeah. The thing is, I don't agree with that entirely. I think, well, I agree and disagree. Where I disagree is I didn't see them in 2022 as that's what they were doing. I swear to you, and if you want proof of this, go watch my Meta video, the one in November. Yeah, go, Andrew.
I'll say the narrative was, let's go to the metaverse. That was not the narrative that Meta was pushing out. But that was the narrative. Because we talked about this after the Q3 earnings report, remember?
Yes.
And then I'm on record. I don't know what happened to the video. Someone got rid of it. But I'm on record saying, like, Chamath doesn't know what he's talking about. And when he was talking about the metaverse spend that Meta was going to do, I'm like, I don't know where these numbers are fictional.
I'll tell you what, because I know the video was on the other YouTube channel and Sense YouTube channel, and that was
Yeah.
the video was taken down. But I'll vouch for you in Discord, and other Discord members can vouch for you that you were. I would not call you bearish on Meta, but you were cautious on Meta. And then when Meta got to those prices, I remember you weren't saying, "Oh, I was right." You were saying, you were looking around what other people were saying and saying, they're kind of crazy.
Right. That's exactly.
Because like you came at it with a very fair approach. Like you were not optimistic on you. For example, I think
Right.
Andrew, you were cautious about what Apple was going to do to Meta.
Yes.
But when it got to that price, you were like, well, my reason for being cautious is not the reason why it's down. You have these wackos making up stories.
That's exactly it. Yeah, because even on their own call, they're like, "Oh yeah, we're investing in like data centers and AI," and everyone's like, "Metaverse." I was like, I don't think people like. I think we overestimate how much people listen to earnings calls or actually read like the actual things put out by companies. But that's a whole nother story. But yeah, like I was looking around, I was like, where are they getting this from? Like, where is this narrative coming from?
That's how I felt. I felt like we were all looking at the same earnings report, and I didn't know what earnings report other people were listening to. And I'll give Amazon. Amazon's a little bit, I'll give that one and saying that's a kind of a more difficult story to piece together. Meta's a difficult story to piece together, but I'm saying like that the narrative that where it came from, I was like, where is it coming from? And again, like people say, like if you're hunting for Meta and Netflix opportunities, that both were great opportunities for my portfolio last year. Those are rare. Those are very rare. Because just how I think insane the market gets. Like another example, actually, prior to Meta and Netflix, before the YouTube channel existed, was oil. Right? Remember ConocoPhillips, Occidental Petroleum. Like that was another moment. And I would say the other one that I invested in was Unum. Right? Unum was another one that I can't expect Unum to ever trade at those levels ever again. Ever. Like, do you know the value that Unum was trading at?
No.
Have I went through the ratios with you before?
No, I don't.
So
that was before I think I was with like that was before. When was that?
Oh well, Unum was 2020. When I acquired Unum was 2020.
So I didn't even know who you were. So, but no, you never went through that with me. I didn't know. What were the ratios?
So Unum's like a price to book was sub 0.2.
And in Unum, they are a
Insurance,
they're
casualty
a what
insurance, corporate insurance, etc.
What was their price to book?
I think it was sub 0.2.
Wow.
Yes. Well, context was COVID.
But if you're P&C, how does COVID affect you? What was the
so the fear was with all the people getting sick, Unum's gonna have to pay out like the sick employee insurance. It's like pay the yeah, exactly. So that was a scare. Turns out that wasn't as much of an issue as what people thought. And let me show Unum's price. Unum was like a huge winner back then, and it's no longer my portfolio. My God, yeah, it got back up to 50. All right, so if I had held it, because it's actually higher than when I sold. I sold in the 40s, so finally got back up to book. This is book right here. Back then, book value was $50. So you were buying it like. Let me show you the 5-year. Let me show you. Let me show you what it got to. $10.
Wow.
And your yield, by the way, they never cut the dividend or anything. The yield down here was like 15%.
Yeah. You had a bond at that point, dude, that was growing. What the heck?
Yeah, no. But that's why I'm kind of illustrating a point there about rare moments. Like I don't expect that ever again. I didn't even get it, by the way, at the low. I got it around here. So it had already rallied like 80%, and goes to show, just because something's rallied doesn't mean the opportunity is over. You have to really think about it. So I didn't get it at $10 a share. I got it at a yield. My yield on cost when I bought it was like around 10%, which is still really good. But I really don't see that or foresee that ever happening again. So my point is Meta, Netflix, it won't happen. Like lightning won't strike twice the same. I'm kind of trying to give the point that it doesn't happen every year, and I'm showing one every year.
And I'm just going to add a context. I know you know this, but I want to reemphasize the key to this is that Fabio knew what he was buying. This doesn't mean like go out and buy companies that just
Oh
fell
yeah,
50%.
yeah. Don't
Like
do that.
you have to know what you're buying, and
Yeah, you'll get your
in the
face
point,
clapped.
yeah. Exactly. You get your cheeks clapped because like in case of Meta, we were looking at this and saying like, I don't think the narrative's right. You know, if you're out there buying like, actually, I don't know, I think Nikola like somehow rebounded, but I was gonna say Nikola's $2, but like if you're buying Nikola, like, oh, it fell, and like I'm just gonna buy it because it fell. Well, you would have bought it like $30, and now it's at $2.50. So
Did you
just want
know?
to add that.
I think I've told the community this before. If people want me to do a video similar to the Palantir video, because the Palantir video was the point of it was to showcase how you can have fun trying to profit from like retail fever. Did you know that I bought Nikola prior to SPAC and then sold at SPAC?
Did you
I have
really?
the receipts. It's in my activity in
Oh
my
my
brokerage.
gosh, you made money.
No. I didn't put too much money into it. It's only for
No,
fun.
but
Like I would never
oh,
degenerately
I
do it.
know, but still, that thing popped to like $60 when they
Yes.
de-SPAC.
Yes. Yeah. And I have the receipts. Like it's in my activity list. If I go back and find Nikola where it was, I can take screenshots of the purchase and then when I sold and the profit. But it's not a fantastical amount of money. It's just, was for fun. Because even despite my confidence in that, I'm profiting off of retail craze, it's still basically akin to gambling. So same thing. I mean,
Right.
remember
I mean,
First Republic? That was gambling. That's an example when
no,
it
and
doesn't work.
I'll just no, and that also didn't work for me. And I remember there was a person since who got mad because like it went, you know how volatile it was. So I was like, oh, I bought some First Republic, and it was like fun money. And then he like made a comment because it went up like 25%. He's like, wow, now you tell us. And then it fell like 50% the next day. And I was like, well, you can buy it now, man. So like, people get so salty. It was funny.
My best investments I'm still holding today has to be in dollar figures and allocation and percentage wise is Alphabet. But technically, I've also some of the Amazon shares, not all of them. Some of the Amazon shares I've held since the beginning. That since I started investing, all the Alphabet shares have been with me since I've started investing. Well, some of them have come with me later on over the years, but I have not sold a single share I've ever acquired of Alphabet. Markel, I've never sold a share of Markel, but only accumulated, even though it's a small-ish position. Trying to think within my portfolio. You're saying longest, so yeah, because there's a couple that are over 5 years old now. There's trying to think of one that's been with me forever because yes, Shopify is gone. Yeah, I think that's all the ones that I can think. Oh, Cirrus Logic's been with me for quite some time. Very small position, but yeah, that not since the beginning, but for some time. I think 2015 was the first shares I purchased of Cirrus. So that's now, wow, that's been a long time now. My cost base is a little bit higher because I acquired more over time, but yeah, that's been with me for a bit. But the longest one is definitely Alphabet, to answer your question. Alphabet, Amazon, some of the shares of Amazon, because I talked about this in my older Amazon videos. I didn't divorce Amazon, but I reduced it significantly at one point. And then now it's like a phoenix. It's come back to its former glory or former size. I have no idea where this joke is coming from the PF Chang's. The community has made this joke that I'm a PF Chang's chain owner, and that's where my
Dude, I like their lettuce wraps. Pretty bomb. Thank
actually,
you.
no, I know where PF Chang's is. I was like, I don't even know where one is.
Like where's which one did I buy again?
What?
Which PF Chang's did you buy?
Oh, I have no idea. But that's a good question. These opportunities are so rare. Yeah, no, that's what I'm trying to get at. They're rare, even though I'm pointing out one that's happened like every year. They are very rare. So like, point is, most of the investments I make on a yearly basis are not these these opportunities. There's just, oh, you could say the office REITs. That's another one I feel like is going to look like that in the longer term. I feel like it's going to look like that. Not every single one, mind you, but I could be wrong on that one, right? It still hasn't played out, but it's KRC is now roared. Okay. We were able to buy and buy and buy and look, well, it's really too early to tell. And I would be very cautious about this one because I don't think it's like a slam dunk yet, but it's kind of funny how some people were very antagonistic towards this stock, and now it's coming back. It's like, hey,
hold on, I want to pull up a chart while you're talking about that. Let's see, KRC.
oh, I technically have never sold BFI as well. So do not buy this stock. This stock I've explained before. It's been a fun position. Wow, it's actually rallied. I bought this stock with the spare change, like my broker just put a dollar figure amount in and then some figures left over, a couple dollars or so, and I'll throw in the couple dollars into BurgerFi. There's no, look at this. It's a SPAC local burger chain from where I was, Florida burger chain. Would not, I mean, I have no idea if it's a good investment. I've done zero research. It could go bankrupt. But Fuhat, members of the community like Fuhat hate BurgerFi for some reason. I don't know why. Here's Fabio again pumping KRC. Yeah, well, I got to pump my bags. So,
are they still bags?
No, they're not bags anymore. I'm profitable in KRC. I'm profitable on all my REITs now. Every single REIT, all the REITs that I've been talking about, how 2023 was a accumulation year for REITs. I'm profitable on every single one now.
Nice.
Yes, sir. Yep. The trick, Gondar, is actually to buy stocks that are hitting all-time highs.
Oh, is that the key?
That's how you make money.
So you buy like is Paycom one of these stocks?
Oh my God, that's so on the nose. That is so on the nose. Yeah, so
we love you,
talk about Paycom.
This is me. Okay, we can talk about Paycom if you actually want to. First of all, I want to say I don't have a problem with buying Paycom. I think that I got to analyze Paycom and its competitors from a more like what the actual business is doing standpoint. And I thought them making incremental sales is going to be more difficult than their competitors like Paylocity. Also, one of the nice things is as Paylocity's revenue grows on their recurring revenues, their interest revenue grows more than Paycom's does. But yeah, Paycom is taking some. So they shot up. What was their? I mean, I love how I'm laughing about this. And IAS dumped to like 20% today.
IAS. So we'll take a look at that one, but yeah. I guess we'll announce that. Well, do you want to talk about the one you pitched?
Yeah, you want to talk about Paylocity?
All right, so I'll mention this to the audience here. So this is one of Andrew's pitches to the community. That again, like I said, we do the private streams on once a week, and we're going to go over this. So this is we're basically going to simulate a summary of the analysis that he does. So you're getting a pitch tonight, gentlemen, ladies and gentlemen.
So we're pitching Paylocity. All right.
Let's pitch Paylocity.
I got a lot of practice with this one. Okay, so Paylocity. So first of all, Paycom and Paylocity and ADP, they all play in the same space. They're payroll providers. So let's say I work for a company, and instead of wanting to have, Nancy in the back office process our checks and try to worry about payroll taxes and getting 1099s out to vendors or any of that, I can instead say, hey, or getting W-2s filed, all that stuff, getting I-9s. I can call Paylocity and Paycom and say, hey, I'm going to use you. I'm going to outsource to you all that work. And so that, and a lot of companies do that. One, because the tax code is becoming more and more complex. I mean, just in the last 2 years, we had a couple really big items that were related to payroll that if you didn't get them because your payroll was disorganized or you couldn't pull things, really hurt you. And that was PPP loans and the employee retention tax credits for small businesses. And these guys, they'll keep you more organized. So I am the finance officer for a group of small businesses. There's about 50 or so in the group that I run. And you have to use a third-party payroll provider. We didn't like the one that we had, so we decided to move off. So that's actually how I kind of started looking at these guys, because I started getting the pitches from them. And I was like, oh, wow, Paycom's really interesting. Oh, wow, Paylocity is really interesting. Let's see what they look like as a company to invest in. The directions both of these companies are going are very different. Paycom is trying to go upmarket. So upmarket is to like larger companies. Paylocity is kind of staying in the more down market, like middle-sized companies. They are somewhat going to larger companies, but that's not really where they're focusing. So I think Paycom has a really cool product. They have this item called Betty, which is kind of like and really quick, I'm going to take a small sidebar. Will P, are there any publicly traded PEOs? That'd be actually interesting. I think ADP has them, but I think it's only a small segment of what they do. PEO is basically you completely outsource everything. You're basically paying for another employee to do your payroll. And James says Nancy is jobless. Yes, she is. She now has no job. But anyway, so back to the point of what I was saying. So Paycom has Betty, and Betty is a super cool product. So how that is basically, in order for an employee to get paid, they approve their payroll every time period. So all your employees are reviewing their payroll, approving it, and they're going to be the ones that are going to see it first. They're going to like be the most scrupulous, looking at everything, checking to make sure their checks are right. And so it takes a lot of work off the third-party administrator, and it also takes a lot of liability off you as well. Really awesome product. The problem was when I got to the actual quotes, Paycom was 5 times as expensive as Paylocity. And I'm like, sorry, I can't swing that. And Paylocity, I thought, had an awesome product. That's why if you look, Paycom has insanely high gross margins, just in general, for any software company. And so, anyways, so we were looking at that, and just some things I liked about the things that Paylocity was doing in order to get customers. Like I got a custom video sent to me from their CEO saying, we want to have you. It was a short video, but it was a cool touch that they did. So just kind of looking at that and then noticing that the market was pricing Paycom at a richer valuation than Paylocity. I liked Paylocity in terms of a investment. I liked Paylocity more. The other thing that's really cool about these companies is they hold a lot of money for the companies they process payroll for. This is a really awesome, succinct presentation that Fabio's pulling up right now. If you scroll down a little bit, one of the things I like that TAM, whatever.
We got to talk about the TAM. What are you talking about?
Oh yeah,
this is the most important slide.
I like how the TAM's always like this thing. It's like the TAM is the entire. Actually, isn't that what Palantir said? Like our TAM is the entire world, or something.
Paylocity's TAM is every single employee.
It's 8 billion people. It's the unemployed too.
It's on the unemployed, the children, all of them. Everyone will be on payroll.
And Steve is just, because while we're going through this, I'm just looking at questions. Paylocity is almost 100 PE. Is that scary? That's in a last 12 months PE. On a forward PE, they're at 30, I think, which is nothing, I think, to be scared of for a company growing at this rate with their margins and their margin expansion.
Luis is asking, is this cash flow positive?
Yes, they're very cash flow positive. I think Paylocity has right now they're at about an 18% free cash flow margin. I think Paycom's in the same field. You can check me on that, but these companies, they have no debt. They're the type of company, they're kind of relatively low CapEx, So like a lot of times they start off like within the first couple of years becoming profitable, both free cash flow and earnings wise. Really solid businesses in that sense. But yeah, this is just showing the kind of like where Paylocity plays. Their main competitors are, and I think they even say here, Paycor and ADP, or is it Paycor and Paychex? But Paycom, they kind of have saying they're a little more upmarket, and then they don't even really compete with like Workday, Ceridian, those kind of guys. But what I was saying was one of the things that's cool about these companies is they have benefited from interest rates going up, which normally a tech company won't do.
This is my favorite part.
Yeah, they essentially are a bank, because what happens is you're processing my payroll. Well, I got to pay it to you a few days before you give it to my employees. Well, what are they doing? They're taking that money and they're putting it into money market funds. So as Paylocity, they basically, every time they sign someone on, not only do they get the revenue from the contract with me, they get the revenue from holding my money. Well, Moxie, was it a good experience? That's the question. If it was a good experience, it's a buy. If it was a bad one, we're selling it. We're never looking back.
We're shorting it. No, we're short. If it was a bad one,
we're short.
We're short.
So, and if I think, and I can pull up their last report, but I think they're at a run rate of like 1 billion or 1.3 billion in revenue. I can't remember exactly off the top of my head, but they're holding like 2.1 billion in client funds that they get 420 basis points, so 4.2% on. So not only are you getting, so every time they make a contract, it's like you get that contract plus interest on them. It's like you get two different streams of revenue. And so if you're someone that's in the higher for longer camp, or at least you just think we're going to sustain higher interest rates, not go back to zero interest rate policy, it's going to play out really well for these guys.
You're right. I pulled it up while you were talking. See, I'm such a good assistant on this.
There you go.
There you go. You mentioned, I'm like, I'll hunt for it. There it is, right here.
Oh no, I was off. Fund sell for clients. It's, what is that at? 2.6 billion. And I don't know why it was so much higher in 2022. I'm actually curious about that. But like, as they make sales, they hold your funds and then they distribute it. So like, it happens with us. We give them our funds on like a Tuesday. They distribute on a Friday. And the funds they hold for us are way more than in dollar terms, are way more than the revenues they get from us on a yearly basis. I could do the math in my head, but it's multiples higher.
Here you go. That's the figure you're looking for.
Interest income on fund sale for clients. There you go. Yeah. So like you can see how much they've benefited from this interest. And like we think at some point interest rates are going to come down. What?
No, just the jump.
Oh yeah. That's what I'm saying. Like, but let's say, and this is one of the things I'm talking about, we don't have to get too into the nitty gritty on this, but yeah, I think interest rates will come down at some point, but I think they're going to stabilize at a level that's higher than where they were in 2021 and 2022. So, I think that you're looking at a company that's their terminal, and I think that might be one of the reasons they raised their free cash flow margin guidance on the last earnings call, is they might be looking at that too, but I'm not sure. They didn't really go into that. What else did we go over? I guess the other thing is these guys, they do provide a better product than a lot of their competition too, like Paycom and Paylocity and ADP. Although like, I really think ADP, when it comes to like mid-market companies, their product's kind of average. They really excel when you're a larger company, but that's just my opinion. But like Paycor, Paylocity, probably Paychex, although I've heard like mixed things on Paychex. They're ahead of other people. I mean, they have the ability to pay, one of the things both Paycom and Paylocity are focusing on right now, and what they just expanded into, is the ability to pay your foreign workforce in their foreign bank accounts in their foreign currency. So basically, they're set up in all the countries in the world and are able to pay them directly, like direct deposit into your employee's account in whatever currency they want in whatever bank account. So if you think offshoring's happening, that's awesome. What else? And also, Paylocity said AI on their call several times. So then you have to be bullish because they're going to the moon just off of AI.
These nuts says my biz dropped the contract with ADP, and now you have ChatGPT do our payroll.
Wow, your company is like advanced, but you see, Paylocity is using AI too. So maybe Paylocity is just you're gonna also use ChatGPT, and then they'll be in that market share with you. So who knows? AP gives you free stuff every year to try my business. I'll never give it to them.
This is also really good.
Sell it.
Sell it immediately.
Oh,
we don't want to touch this. Oh, this is Moxie's response, by the way.
Paylocity must have given an incentive to the HR department to make. Well, what I'll say, depending on your role with the company, and Moxie, I don't know exactly what you did. As an employee, you probably won't feel a ton of difference. Like you'd feel a difference with Paycom because you're approving your paycheck. But the Paylocity, Paycor, Paychex, 80, for the most part, all those guys, as an employee, you should not feel that much of a change. The benefits a lot of times on the back end for the administrators, and like the reason we were moving, and I don't have any, we were moving off of Paycor, was they couldn't get, like, they made so many mistakes on taxes. When we tried to resolve issues with them, they took forever. So then that would just create additional problems. They couldn't get our addresses right to send W-2s to, and so we would have to fix it ourselves and like send them out manually. So like a lot of administrative problems. So I don't know what your role is, but
there it is.
Senior real estate manager. Yeah, so I'm assuming like not a whole ton of involvement in the back end, probably.
Yeah. So what? What?
The CEO of Paylocity knocked on my house window to get my business.
No, it's really funny that he sent you a video.
Yeah.
A personalized video saying, "Hey," blah, blah, blah.
And we like watched it because I was like, "Is this AI? Is this like?" And I was like, "No, I think this is a real video."
So be honest with the audience. Like, how much did that video play a role in your affinity towards Paylocity?
It made me at least think like they're somewhat serious. Like the CEO's taking the time to actually like make a sale. It shows that he cares enough to like get down in the weeds, and he actually knows. He's talking to his sales reps that are out there. Like, so when I complain to my rep, like she's got someone's ear, like, clearly. The other thing I was going to say that's nice about these companies is their CEOs both hold like 20% of the company.
For both Paycom and Paylocity.
Right. So like strong insider incentive to do well, which isn't an indicator by itself, but it's also good to have.
And I have a question for you, because this is more of a humoristic question. But hypothetically, if the CEO of Paycom made a video for you and he like ripped open his shirt and he had a tattoo of your face on his chest, would you have gone with them?
Not for the amount that they were going to charge.
He's like, not for all the money. No, I'm kidding.
Well, and I don't want to go too into like what my industry is, but it's not a growing industry. It's like stagnant. And then I realized, like, as I was talking to Paycom, they didn't realize, because they're like, well, you want someone that'll grow with you. It's like, buddy, look at the industry. We're not growing. Well, the CEO sent me a video. I'd open the checkbook. Yeah, I mean, I guess we did technically. So
that's technically what happened. All right, but what are the projections? Getting to these projections that the company has, what are their free cash flow projections
in terms of margins?
Yeah, margins.
So going into Q1, and I think we got to roll it back, because I think at some point I said to you, not in this, but like before, like they're going to have higher free cash. I think their margins are going to expand more than what they're guiding for. And so right now, before the Q1 or Q, this was their end of their fiscal year. So before the Q4 fiscal year earnings, they had a 15 to 20% free cash flow margin target and a 70 to 75% gross margin target. And I think they upped both of those by 5%. So now their free cash flow margin is 20 to 25%. And I think gross margin is also up to 75 to 80%. This is a company that says they're going to continue to grow at 20% top line. So this is why when you look at a company that's trading at, like, let's say 30 times earnings, 30 times free cash flow, roughly, I think right now. I'm pulling up the valuation to see what the sell side's saying. And I think estimates on sell side are way conservative. Okay, so they're saying 40 times free cash flow, 36 times earnings. And they're estimating a 20% revenue increase in this upcoming fiscal year, which that's what management guided. And management even said, like, this is kind of conservative. We have a history of beating our revenue targets, our revenue guide, or beginning revenue guidance. But if you take that and you take increasing free cash flow margins every year and climbing that up to just like the middle of 20 to 25%, you have a company that when you go out to like 2026, I think they're trading at something like, I'd have to go back and double check, but I think I had them trading at like 550 million free cash flow. So you're talking like 18 times, which is not, and they're going to keep growing at a much above market rate and growing their margins there too. Oh, is that the updated guidance right there?
I believe so, right? No. Hold on. Free cash flow. No, this is not the updated guidance.
No, because this was the Q3. Yeah. Mm-hmm. So you have to go to the Q4 earnings release, but it's fine.
I'm on their website. I don't think it's here just yet. Yeah, the May 5th is the latest one here.
Let me see.
I'm on embeds and presentations.
No worries. Let me pull it.
Quarterly results. I go to quarterly results here. Third quarter. Let's see.
Yeah, you gotta go press releases.
Yeah. Here we go.
If you go to press, yeah.
And that 20% figure.
It's like it's pretty close to the top.
It's close to the top?
Yeah.
Da.
Here, let me just send you the link because you're on Q3.
Oh, I'm still on Q3. Silly me.
Here, I'll just put in the private chat right here.
Oh, it's right here. Found it. Here it is.
Yeah.
I've done it. I found it finally. All right. So, here's their previous target, free cash flow. So yeah, there's the increase.
Yeah. And I think you combine that with the fact it's not for a company that's growing 20% plus into the future. And the CEO, like a sell-side analyst asked him on the call, he was saying, do you guys not see yourself growing at 20% in the future? Like, and the CEO basically said, we've been able to hit 20%. So I think we can still do that like consistently over the next few years. And so even if you say, let's say they go 20% this year, like 18 the next, or like kind of like very high teens in the following years, you'll get very, very attractive, I think, like long-term yields on this company. And like, I don't know, I feel like this is a company, if you compare it to the rest of tech, that's trading super cheap for what you're getting. Like, I understand the double whammy that a recession has in this company, where if a recession happens, there's less seats, which means you lose revenue because they get paid per employee basis, and rates probably go down. And so I think that there's some bearishness being priced into this company, and probably Paycom as well, in case that happens. In some ways, it reminds me of like the home builders in like the middle of last year, where everyone's like, oh, home builders are going to get smacked because people are, we're going to have a housing crisis. So I don't know.
So then my final question to finalize the summary of the pitch. What is your allocation strategy currently? So what are you looking for essentially?
To buy more.
Yeah. Like what are you looking for? Are you going heavy right now? Are you kind of doing an ease into strategy? Like you're buying a little bit here, expecting some pullback, recession fears, etc.
I went fairly heavy in the beginning because I bought it was like right at 200 or maybe like 203. So right around where this was at. And I thought that was very cheap for what you were getting. If it pulls back under 200, I'll buy more. Now, the caveat is there was a lot of interesting reports this week. And so I have like some cash that I haven't put to work yet because I'm trying to analyze like between Paylocity, between even companies like Monster or IAS, even stuff like Amazon. What's the best looking, from here on out? But if they continue to stay down on reports like this, they beat on everything in this quarter's report. I can pull, if you guys don't have the quarter app, I say get it. Not sponsored, but I wish.
Yeah.
But the nice thing is, so now you can compare what the company did to consensus estimates. And so let me just pull this up. So I can go to the company.
And by the way, while he's getting that, I just want to remind everyone, I have written down here, we are going to talk about Disney, Warner Bros. Discovery, PayPal, defense contractors. So I do remember, and I will also comment on Apple's declining hardware sales.
So the revenue estimates were 302 million. They came in at 308. EBITDA was an estimate of 95 million. They came in at 101 million. Yeah, 101 million. EBIT was an estimate of 80 million. They had 84 million. And then earnings per share estimates were $1.13 per share, and they got $1.32 per share. And then they raised their free cash flow margin guidance. And they also still said they're going to grow, which the estimate before this earnings report was like 19% revenue growth for FY24, and they said 20%. So I thought they beat on guidance as well. And so when you have one of those things and they sell off like that, like maybe people are saying there's a little bit too much, I think it's just people being nervous because one of the assumptions that management made was no change in interest rates over the fiscal year. But I don't think that's really going to impact them because their fiscal year ends on the 30th of June. So even if we get a rate cut or two next year, you're not really going to feel that. So I kind of get why they did that.
Yeah.
That was one of the things I thought maybe was a bear thing, but I think it's really just recession that people are worried about because on the call there was literally nothing.
That's a common theme. I guess I think I'll give like a macro take at some point in this live stream because I haven't been on the public side of YouTube for a minute now. So I feel like I guess I can do like a roundup, but including Paylocity in there. So what was Paylocity's commentary on terms of the healthy economy in the recent earnings report?
They said that the there's a bit of a headwind. Actually,
okay.
They said like no one's adding seats. They said kind of like it's not losing seats, but seat growth is flat. So they're getting all of their, which actually, if you think about it, means that if seat growth picks up in the future, they're going to like explode the top line growth.
But, so yeah, this growth is without seat growth increasing.
Right. So all their growth is coming from acquiring new people. And they said, with all that in mind, we're very confident we'll hit 20% this year, top line growth. So they're like facing headwinds. And basically what they're saying is that we're winning new customers over and over and over other competition. And we're growing 20% without people increasing seats. Now, they are working on getting, because one of the things these payroll companies do, and it's not a bad thing, their goal is once you're in there to expand the products you use with them. Land and expand. I think that's a common thing in software. So they offer you more products. The products give you value. You pay a little more for the products. So one of the things and I can't remember if they said they're aiming for, their long-term goal is $600 per employee per year, which isn't honestly that expensive compared to something like a Paycom, at least in my experience, for what we were paying, or what they wanted to have us pay. But right now they're at like 440 per employee per year. So you also could see, there is a good shot that if the economy holds up, they end up getting seat growth, growth per seat, like revenue dollars per seat growth, and they're getting new clients, which is why I think they feel confident that as long as they maintain 20% growth this year, that they can do it for the next few years to come.
Yeah.
So,
okay. So basically better than expected economic, let's say results could lead to accelerated growth
yes.
for Paylocity. All right. I
100%.
like it. So I like the setup. I mean, you already know how I stand on
Mhm.
it. I'm just basically digging it out of you.
Right. No, I know.
All right. So I think with that, I'm going to give my quick commentary macro wise, because I think that's a good segue. And then we'll connect it to the questions we have on Disney, Warren Bros. Discovery / military defense contractors and PayPal, because I think we got to talk about PayPal. So basic broader economic outlook, I'd say based off of what I've been seeing with the various companies I've reported in their commentary, I feel like it's almost like a tale of two economies. So if you're in the services sector, you're not seeing a real slowdown yet. But if you're in the goods sector, you've already seen the slowdown. So there's been some investments that we've partook in that are in the I guess troughs or local troughs. So you think of the chemical companies, Celanese, Dow Chemical, International Flavors and Fragrances, solid company, by the way, that one. Just never been at the perfect price, I'd say. But all these companies, right, you see their volumes are basically stagnant / declining. Outlook is uncertain, all this jazz. And then you have companies like in the services space, it was basically all tech, the additive economy. They're just blowing everything out of the water right now. Other companies that are struggling, like Leggett and Platt, 3M is more like lawsuit, but even then, even without the lawsuit, I feel like they'd still be underperforming at the moment. So you have that going on. And you have companies like Dollar General providing some interesting guidance. So again, for those of you within the community, this is again repetitive for me, or for you, but just bear with me because I'm giving this out to YouTube right now. So Dollar General talks about how, hey, we can't pass on our costs to the consumer. Okay, so let's put that to the side. And then let's go to another company that I own that's comedic. I know, very funny. Rick's Cabaret, right? Or RCI Hospitality Holdings, which owns strip clubs, etc. And their commentary was interesting. I know I'm bringing this random company out here that no one's heard of really, and then into the light right here to mention a commentary they had, which is their blue collar clubs have been struggling as of late because a lot of their establishments focus on that blue collar customer, and they're saying, well, those guys they're not really spending as much money as they were. That's why same store sales are down. That's really in line with what we're seeing in commentary from Dollar General, right? And then we go to let's go over to Walmart real quick. Walmart reports earnings. They talk about how the customer is moving away from discretionary to necessities, and we've talked about that in many live streams ago. I think beginning of 2022. Beginning of 2023, 2022, we were all about liquidity crunch. But I think there's a live stream in January that I had talking about the change. And well, actually, there was a live stream or videos back in 2022, like mid 2022, talking about the receipt changes happening in Walmart. So that's still kind of playing out. And these are long-term trends, or not long-term trends. These are short-term trends, but they're playing out over like a year, a month. And now it's over a year now. But Walmart has been talking about that, and it kind of all paints a picture here where if you're part of the service-based economy and the higher income brackets of the United States, it seems like you're not really seeing that struggle session that some other parts of the economy might be having, particularly the goods sector. And we're talking globally speaking. So if you're a company, a business involved in the goods sector right now, in the manufacturing sector, you're feeling the pain right now. You're struggling with input cost inflation, right? And you're struggling passing those costs on to the customer. I believe, and I don't own the stock Dollar Tree. I own Dollar General, but Dollar Tree, their CEO recently came out and had an interview. Interesting how they're trying their best or focusing on different strategies to pass on costs to the customer. Dollar General's commentary again was we are limited now in our capacity to give it to the customer because the customer is now at capacity. In 2022, when I made videos about inflation, I talked about the concept of rejection of inflation. That's kind of maybe foreign to some people because people sometimes think that inflation cannot be rejected. But that's a misunderstanding of the mechanics of how prices rise in our economy. So while we are like a fiat system, et cetera, we're not actually printing money. Prices go up as they are accepted. It's supply demand. At some point, the consumer rejects those higher prices, and then that's not a good thing. By the way, I don't want people to say, "Oh, that's the solution. We just all reject the." No, that's if that's happening, it's for bad reasons. But there isn't that true money just sloshing around as people think. Like there is. It all depends on like the lending market, but not to get too ahead of ourselves. Let's talk about investments made in companies like US Bank. So US Bank has done really well in the portfolio. Other bank positions have done okay, but US Bank was a real solid addition. We talked about US Bank. That was another pitch of mine. And that one was talking about, or the good parts about US Bank. Let's go ahead and pull up US Bank here. USB. So good parts about US Bank is they have a really low duration. So in the most recent banking crisis, duration risk came top of mind instead of a credit risk. So typically when you think of bank risk, you think credit risk. Credit risk is, people won't pay me back. Duration risk is the new risk that just came out of nowhere. No one was thinking about this. So US Bank, JP Morgan Chase are the two banks with the lowest duration risk. The average duration of both those banks is sub 10 years. I think US Bank off the top of my head is 9 years and JP Morgan Chase is like 7 years, something crazy like that. Why is Bank of America still in the doghouse for banks? And come on, Google. All right, bearish Google. It's not showing me the ticker. All right.
Short it.
Just go to Yahoo Finance.
You should be on Yahoo Finance anyways, right?
We should be on Yahoo Finance because I need that sponsorship. Wink, wink, nudge, nudge. Member out there, give me that sponsorship. Wink, wink. Nudge. Just so I have Moxie. No, don't do that. Don't do it over the phone. Do it over web, and there's a free trial. So you just use the free trial to see if you like it. That's what I recommend everyone to do. And don't use your phone. Do not use your phone. You'll pay more than what you're supposed to.
Don't give.
And I can't help it. That's Apple.
He doesn't need your money.
What are you saying? I
said don't give Daddy Tim Cook your money.
Oh, yeah, don't give Daddy Tim Cook your money. No, don't pay the Apple tax. Like there's no point. But anyways, so also by the way, because you're asking what is there. I know that Fuhad or other members are trying to convince you to get it. You can use a free trial to see if you like it, if it's for you. Also, there's a video in the embedded link that takes you, and there's an embedded video, sorry, and I go over everything you get before you even use the free trial. So if that helps out. But anyways, going back to Bank of America, I just saw that on the side. So Bank of America is still in the doghouse just simply because their duration risk is around 20 or so years. So that makes it right now where the investor is now top of mind. Hey, these are the problems with the banking system. We're not going to be touching a company like Bank of America, even though if you're talking about a credit risk, Bank of America doesn't really have much. Citigroup, I think, is still in the doghouse, but Citigroup is going to.
So, just for clarity, BAC has a lot of duration risk. Is that what you're saying?
Who has?
Bank of America.
Yes. I don't think it's that big of a deal, but it's right now what everyone's focusing on. So if you don't think it's that big of a deal, might be an opportunity. But you have to, in your thesis, you have to say the duration risk in Bank of America is not a big deal. So if that's a yes, then you can go to step 2 and say, do I buy Bank of America? But US Bank was, and why am I patting myself on the back for US Bank? So the analysis around US Bank, or the pitch around US Bank, was you have a historically very strong operator, high return on equity, and more often than not put in the same sentences as JP Morgan Chase in terms of how it's run internally. Duration risk, not a big deal. Credit risk was what kind of came into question because I believe 20% of their portfolio was, I think it's them, or I might be confusing another bank. They might be less than 20%. But they had a decent exposure to office buildings. That's what got them in trouble. Okay. That's what got them in the doghouse. So when the whole regional bank crisis occurred and everyone was freaking out, right? Everyone was, throwing out all the banks. JP Morgan Chase was thrown out and then subsequently basically printed money by buying First Republic, and they're at all-time highs. But everyone was kind of thrown out, and everyone was like looking around. Okay, who has their pants off, right? The shoreline receded, and we're gonna see who's naked. Well, that's what everyone was trying to do. U.S. Bank, the concern there was, okay, what about that office exposure? Not so much a concern anymore. Now, subsequent recovery. So I can show once again that that recovery. So we're up a decent amount now on U.S. Bank, but I think it still has more room to run as things kind of normalize. So if the concerns go away completely, I see U.S. Bank still performing okay now. The opportunity isn't what it once was because now a lot of the fear has gone away. But yeah. There's going to be some that are still in the doghouse. PACW, a couple others, right? So, yeah, that's pretty much. You want to be careful. Like I was just referring to in passing my degenerate gambling into First Republic. That went to zero. So we had fun with it, but it went to zero. I didn't get the zero, but I did lose in terms of percentage in that position. Probably like around, I don't know. Mick Buddha T. I don't know if he's in the live stream, but that lucky bastard, like I think he made like 50-60%.
And he got it right at the right time.
He kept trading it, and I'm like, how are you doing? And no, he'd be like, I'm selling it, and then I'd be like, oh no, I'm not going to sell it. Worst to say, but if you ask him, he'll swear that it was just kind of him having fun and luck, but he did it like 3 times. So
what
I was
about
like,
Dan? Didn't Dan also make a bunch
Dan as well. Dan, if you're in here, shout out to you as well, because you both of you just like, I don't know, you had luck with it, but you shouldn't do that. You should not degenerately gamble your money away.
Can I just take a quick caveat here or a sidebar?
Yeah,
because one of the things that you talk about all the time is how one of the things that Amazon's very good at is targeting, because they know what you want to do and they know what you want to buy when you go see them.
yeah.
So my question to you, Fabio, is as I look at your screen and see an advertisement for Dry Shield, do you have a problem with that Dry Shield fixes that you need to be
what
buying?
What does Dry Shield fix? Maybe I do.
It absorbs 25 times its weight and neutralizes odors.
Oh, that's a diaper. No, I don't. I can't say that I do, but it doesn't matter what I say. This looks bad. So
okay, all right.
Right,
I just know you say they are so good at targeting, and they know.
I don't know about this. Yeah. Amazon. What's going on, man? Oh, all right. Everyone, I use Dry Shield. It's time I come clean. It's time I come clean. Fabio wears diapers. You know who's gonna have a crack at this? Sam. Sam is now gonna what?
Oh, I said that's how you get so much research done. Like
that's how I get. No, let's say it that way. That's better. Yeah, guys. The way I get so. And Sam, if you're listening, you're loving this. You're probably gonna screen record this part. All right. So the way I get so much research done is I don't leave this chair. and that's where our sponsor Dry Shield comes in. Are you sick and tired of not having enough time to do research? Are you getting up off your desk? Dry Shield is there to help you. Able to absorb, what is it? 25 times. 25 times its weight.
And it neutralizes odors.
Don't forget that. It neutralizes odors. So people won't even know. There'll be a bunch of people around you. No one will know. You'll be at your office desk and you'll just be, and your boss is going to say, how are you able to, you just never go to the bathroom. And then you just look at them dead in the eyes and you're just like, yeah.
Dry Shield.
And then that's where you end the conversation. This is where, I love it. This is where bruh goes, bruh. We got to have fun in these live streams.
Exactly.
So the other companies that we need to talk about, because we promised, is Disney, Warner Bros. Discovery, PayPal. So first topic, I want Gondar, what are your thoughts on Disney? I don't know if I know your thoughts on Disney.
Disney?
Mm-hmm.
I just think they're struggling. I think that people underestimate how much CapEx the parks need, and I think that they have, until they can make a new IP and not just take old IPs, milk them, and kind of ruin them, I'm not going to be bullish on this company.
Slurpees. Have I ever mentioned that the capital mindset community across the board, this is reflected in YouTube and in Discord, is a conglomeration of simultaneously the most sophisticated investors, but also like with a sense of humor, would you call it? And
Yeah,
some people get it, some people don't get it.
Yeah, it's a unique sense for sure.
Yeah, it's definitely
it's an acquired taste.
It's an acquired taste. Yes, that is indeed how it is. It's an acquired taste. I like to say that it's full of, the community is full of people that are, you know, I would say all intelligent people, and then they just have a very fun way to go about life. Like,
and
you know, they will
and a
not
lot of
miss out on
inside
opportunity.
jokes, because like that's a solid reference. So from Slurpees. So
yeah. Yes, yeah. There's a huge amount of lore within. So like new people joining, they don't know the lore, and so sometimes the jokes kind of go past them. All right. So you said, yeah, CapEx is an issue. You think that they need to prove themselves, basically, in summary.
Yeah, and when I see Snow White and the 7 multicultural people, I don't feel really confident that they're really doing anything that's going to get them on the right path. And I don't know what else is in their. The only thing I think that might be something to unlock value for them is selling off parts of their business. That's the only thing. But, you know, I think you were saying you think their U.S. Parks need a lot of CapEx. From what I've heard, their international parks are in way worse state than the U.S. ones, and need a lot of CapEx done to fix them up. So I see a lot of issues there. Disney Plus, I think, is interesting because I think they have a lot of IP that won't be ruined or anything. That's solid there. Like if you have kids, they're going to watch Disney Plus. But I just think at this, I'm not interested.
You're not interested at these levels.
I don't think, well, that, or I'm not interested at this point where I don't see management doing things that I think will be good for the company's bottom line. I think the decisions they're making are catering to a bubble that they're in. That
is so like milk toast fence sitter response of saying that. But
everyone knows exactly what I'm saying.
That is the most milk toast fence sitter version of
they're catering to the California people.
That is so creative. Have you ever thought about going into politics? like I got what you were saying, but like at the same time, it's like, wow, that he is saying it simultaneously without saying it. So complete plausible deniability. It's like, no, that's not what I'm saying at all. That's not what I'm saying at all. But you're saying it.
I'll call Meet Kevin. We'll go running together.
No, Foo Hat, by the way, I saw your comment off the corner of my eye. He's not saying it that way. He's not going that far. My gosh, my man.
No, and that's not what I mean at all.
Yeah. Although they do indeed. And Disney, you know, just do what you need. But I want Disney to make money. It's just like right now that what they're doing is, okay, so I agree with what Gondar is saying, right, on Disney. Except I'm degenerately wanting to dive right into that fire. I will, with full disclosure, say that I had a position in Disney within the holding company. I have a position in my personal holdings, very small, but it was pretty sizable in the holding company, right? all things considered. Uncultured currency. I sent you the link, by the way, via Discord, so you can hop on to talk Disney. But the Disney has terrible management. Yes. I don't like Bob Iger, really. I think I like prior to 2015 Bob Iger. Even a little bit after that, I think he was doing good. I don't let his legacy get in the way of what he's doing now or how he's been running Disney post 2016, 2017, 2018, 2019. I don't let that really make a cloud my judgment on him. So what I think, my point with Disney, and I don't think Gondar is disagreeing here. I see where Gondar is coming from. You're saying is, I keep calling you Gondar because that's your Discord name, Andrew.
Yeah.
Andrew.
I answered to both. It's all good.
I answered it both, and that makes it worse. I'm just like Gondar, and people on here are like, who? He keeps saying Gondar. There's no Gondar. It's Andrew. They have a fantastic suite of assets. They just have to figure out how to take care of them and monetize them. So basically, I'm saying it in the same way you just said it, but very, milk toast fence there.
Exactly. I had the same qualms with Amazon.
Yeah.
That was my issue with Amazon was that management was making all the wrong decisions, in my opinion. We were seeing signs that they were changing that. Mm-hmm. Once you can start to see signs, in my opinion, because did I pluck Amazon at the bottom like you did? I didn't, because I think I
didn't either. No, I didn't either. Well, I identified it at the bottom, but I did not pluck it.
For all intents and purposes, you were pounding the table when they were in the 80s, and I was like, I don't know, I don't trust management. But once we saw management turning around and we saw they're going the right direction, and then we also saw Salesforce kind of saying, "Here's the game plan," then it made sense. But
well, hello there.
Hello, Mark. How you doing?
How's it going?
Hey, I'm the fake trader coming here to tell you to buy Disney now. So go do it. Now, what's up, everyone? How you doing? I agree everything that you guys are saying about Disney, but here's the thing. I actually got into a Disney call last week. I bought an $85 call for January 2024 as a trade, and I sold a call at $190 that collected $185 to offset any of the downside, because there's a good chance that it could potentially drop to $70, $60 if the earnings aren't good. But it's Disney, man. It sucks. It's crazy because there's like an emotional attachment to it, right? Come on, Fabio. I know you know what I'm talking about there. It's just in the end of the day. But everything you guys said is valid points. As an investor, I don't know. I would scale in small. It seems like it's kind of holding this whole 80s, like between 83 and 85. It's been holding it for a while. I think they're kind of waiting to see what happens with the earnings and the guidance personally.
Well, we're definitely testing support here. So what I'm saying for Disney, I sold Disney entirely, but I gave everyone in the club the intentions. By the way, I saw your question. Let me pull up your question so I keep it up here. We're going to answer this question in a second. Don't worry, because we'll explain what the process is going on for the next couple months. But Disney, I have full intentions of actually building it back out as a position. I still have it in my personal holdings, and I continue to look to add to it. If we get a bad earnings and we start to see a price point of like 60, I heard you say 60, that would be very interesting, or in the 60s or 70s. I think with Disney, and I saw another comment, I'm going to come right back to you because Marcel's comment here was very interesting. So I agree, management is bad. And I agree, management should be top of mind when you're doing an analysis. Here's my point, though. So we have a bad management team, and yet the thing is not truly imploding in on itself yet. Mm-hmm. So there's something to be said about that, okay? There's a saying from some wise, well, some call him wise, some call him a moron. I call him a guy who doesn't care what any of us think, because he's who's worth hundreds of billions of dollars. And his famous words were, he likes to buy businesses where if the management are complete morons, the business can still do okay, right? Because the reason why is because you don't want to rely on having a fantastic management team to do great. And I think Disney they're sitting on top of a gold mine. If they get not even fantastic management, competent, I'd say if they get okay management, good management, because I would call their management right now poor. Management currently is poor, sort of kind of a little bit out of touch with what consumers really want from their IP. I'm only going off of the numbers regarding their IP. That's all I'm going off of. I'm not going off of my opinion. Just going off of that. Even though they destroyed Star Wars for me, I'm biased on that. Okay,
and Marvel and everything else.
I haven't been paying attention to Marvel, but Star Wars I call myself a former fan of Star Wars. I no longer am a fan of Star Wars because I can't ignore. I know some people just say just only focus on 1 through 6 and add in Rogue One and a couple other stuff. I can't do it because I'm just like, it's technically the lore now. So it's like, Anakin Skywalker is no longer the chosen one because he didn't kill the Emperor. The Emperor lived and he didn't actually.
In fairness, that's not something that's unique to Disney. Every single company nowadays just milks stuff until it's garbage. Like Westworld, really awesome until it's.
Oh, that was a good show, and that took a massive jump.
Okay, but there's a way to milk things. For example, I guarantee Obi-Wan show. Horrendous. Like the writing, horrendous. Can I give specific examples? There's episode 3. This is how traumatized I was. You see the trauma? I have it memorized. Episode 3, there's a scene where he has to defeat a couple of stormtroopers and get past an invisible force field fence. The camera man or whoever is in charge of the direction didn't want to organize it so it doesn't pan out. Remember, he's on foot at this point. He's no longer by vehicle. He's on foot. He has to shoot the door in order to stop the force field from going around. The camera pans out, and you can clearly see that while the force field was on, he could have just walked right around. That's you're a writer. You're paid to pay attention to the details.
I think
I am not paid to pay attention to the details. I'm sitting there and I'm just going and I'm not when I'm watching a show or TV, I don't consider myself super crazy detail oriented. I like to enjoy it. When I'm noticing stuff like that, that's a problem. Okay. And there was a couple other things, and without getting into lore wise to bore everyone, the fact that what's her name? I don't even care what her name is because she wasn't a very memorable character. No. In the show Obi-Wan, I'm only focusing on
the black girl. The black girl who
yes.
Okay, I forgot her name.
The fact that she knew that Darth Vader was Anakin is breaking lore on its own, and people were pissed by that. Then the other point where they faked dead twice, they use the same trick twice in the show with her and the Inquisitor, the Grand Inquisitor, kind of lame. Episode 2, okay, I know it's getting crazy. I'm having these scenes memorized. Episode 2, there's a firefight between Obi-Wan and a couple people on the rooftop across, and then Leia falls off the roof. He uses the Force for the first time. Go rewatch this. Go rewatch it, and I probably ruined the show for you. So he's shooting, and I think he kills 1, maybe 2, but there's still others shooting at him, and he stops Leia from hitting the ground. He doesn't engage them anymore. They just ignore them. They're still shooting at him, but they just ignore him, and then in the next scene, he just walks downstairs. So the writing laziness.
Rush. Yeah, it's laziness and rush. They were rushing products to put out content, I think, personally. And I think you brought this up. A lot of people seem to forget that the reason why Disney is in a position that it is in now is not because of Chapek, it's because of Iger.
Yes.
Iger's the one who put all this stuff in place prior to leaving. Chapek just kind of made things worse in a way. I would say he probably made worse decisions when it came to the park more than anything. And then they brought back Bob Iger and got excited for a while. Then they realized, wait a second, you're the one who put all these things into play. Hence the reason why Disney is taking this massive hit. Plus, I don't know. Do you think the woke stuff is also hurting the company?
We were trying to be milquetoast fence sitter on that, but
so
I guess
here's my thing. I'll just say it like this. I think you are always going to implicitly put your own bias or your own thoughts into a movie, and that's fine. I think the problem is that a lot of times I feel like these movies are focusing so hard that they have to get a message in there, and it can work the other way too. It's not the conservatives, and I don't have an example because I don't think there's many conservatives that make movies. It would be the same thing if you're trying to make a movie where you're guns are good, okay, and that's the message of the movie, and the actual plot of the movie is second. I think that's the problem that we're having, is that the focus is on sending a message rather than making a movie. Sometimes is what it feels like.
Yeah, and try to cater to the 2% or 4%,
Right.
whatever it is these days. It's like to try to
Exactly.
be, I guess, relevant in today's society and I
Right.
guess trend of young kids. But I think the problem is like I think this generation, at least even for my kids, they don't have that same attachment to Disney like I did, like you did, like Fabio did. We grew up with that. You know, we didn't have a bunch of different channels that have a bunch of different cartoons and kid-friendly content. It was mostly Disney, right? Disney and Nickelodeon, from what I remember. And Cartoon Network was kind of for the older kids. And now we're in a space where there's a plethora of content from various different streaming services that Disney is pumping out this half-baked crap shit. And it's, I think, taking the company down. Because I mean, literally, like, all right, I didn't even realize Secret Invasion even came out until the season finale when I saw everyone, I guess, go get rage on Twitter talking about how terrible the show was and they essentially killed the MCU universe. I didn't even know that existed anymore because they're just putting out so much stuff and the impact is not there anymore. Back in the day, anytime a Pixar movie came out, you knew it was going to kill. It was going to be amazing. And now it's like, it's like they ran out of ideas. They should go back to just licensing, which I think is what they're planning on doing, right? The reason why I actually got into Disney, again, this is just a call. It's more of a trade. I haven't bought any shares yet. I'm debating because it's sitting at this price. I want to see what happens after the earnings. It can jump up or it could go down. It's a hit or miss. But I just got the call just as a trade. And the reason I did it now instead of waiting is because they are trying to cut the fat and pull back on some of the bad decision makers that they've made. But we probably won't see that until mid next year, potentially. Maybe end of next year is when we'll see the results of the stuff that they're going to do. Because I think they canceled like 26 projects they were already working on. I think they laid off like 7,000 employees. They're already talking about trying to take off some of the content off of Disney Plus and go back to the licensing model, which I think they should have always done anyways. Or maybe just take off all of the crap shows and just keep like the original Disney content, drop the price to $4.99 and just have that as like, streaming services, and then every once in a while, once a month or something, we put some original content out. Something. They got to do something.
Oh, I agree. And look, I mean, I'm sure Bob Iger is in the place he's in because he's incredibly smart and he's familiar with Disney more than we are. But to me, it seems, and you're kind of hitting on this, is that Disney forgot that the reason Disney is such a story brand is because all their IP was so. I mean, I pulled up here Disney Pixar films from Toy Story. Like this was their list of films, the first 10 they made. Toy Story, A Bug's Life, Toy Story 2, Monsters Inc., Finding Nemo, The Incredibles, Cars, Ratatouille, WALL-E, Up. Like
all great,
right? Like there's not one in there where you're like, for a kids movie, obviously, like that movie sucked. All solid. And I mean, I don't know what the recent ones were, but it was like, you know what? I don't have kids right now, so I don't know. Like Toy Story 4, Onward, Soul, Luca, Turning Red, Lightyear, Elemental.
All those bombed, I think.
Did they?
Toy Story 4 that's not even out yet, is it?
Which one?
Toy Story 4? You said Toy Story 4?
No, that was 2019.
There's a 4? Jesus, okay. I apparently missed it, or I got it. I just forgot. But all the ones that you named before that or after that, those all kind of bombed. They went straight to streaming services anyway, so we don't really have the numbers.
Oh, okay.
But no one's really talking about them, right? And again, all those have messages in there again. Whether it's the one with the red panda girl that grows, that's like basically, I'm on my period. It's a movie about a girl on her period, essentially, and it just hide it with the monster.
Movie?
Yeah, she's going through
Turning Red.
puberty.
Turning red. Oh my god!
It's basically about, like, if you watch it, like the kids don't notice it, but if you watch it, it's basically a girl who's on her period. She's angry. She's upset with her mom. She doesn't get the freedom that she wants, and she's going through this transition period in her life. Going through a period. She's hitting puberty or whatever, and the message with Disney movies used to be like, respect your parents and stuff like that. She's very defiant against her parents, like doing everything her parents tell her not to do. It just doesn't make sense. Onward was Encanto was good. That's the only one I could think of, honestly, that I think on all these remakes of the original classic cartoons that they make, these live action movies, they all suck too. So Disney has a long way to go to fix their issues. I just don't know how far it's going to drop.
Yeah, I think that the only way this comes about in terms of change is pain. And the more the share price declines, hey, that actually makes it more of a target for
Attractive.
activist investors.
Yeah, but here's
Which
the one
we already
thing,
had
Fabio.
one guy try, but
Yeah, but here's the one thing, Fabio, which you got to ask yourself too. Like, you know, because I still do the trading and stuff, but I watched the market and everything ran up except Disney. Disney's like one of those few that just didn't do anything this entire
That bad.
time.
yes, exactly. And that should be something to tell you about the crap that they have to worry about. Warner Brothers Discovery, though, I gotta also point them out because
they jumped up today at 8%.
No. Look, they didn't run up either. They are still down.
Oh yeah, because they got a lot of stuff. They're actually cutting back. I like Warner Brothers. I don't know about you guys, just not right now.
Yeah.
The thing is their debt load, right?
Yes. I'll just say it as is, and this is something. God, I'm sorry, it's gonna sound like I'm being kind of a cocky motherfucker right now, but like 2022. Yeah, no, you know what? Because we were talking about this. I gotta say it, but I'm gonna call myself out for sounding that way. But because there's other YouTubers that are doing that, but I don't feel like they have the right to. I don't feel like I have the right to, but I'm doing it only because, you know, I guess we're in these times, and I gotta call these other people out too. But in 2022, Netflix, I think I was saying that they are gonna win, and I think they won. Okay.
You killed it. You pretty much almost caught the bottom, right? Or you did catch the bottom.
I didn't catch the bottom on any of these. I bought in, but I kind of had my strategy in place, and when it got to certain ranges, I went heavy. And at the time, it was, I didn't know if it was going to look good or bad, but it just stuck with what I believed in my thesis and my strategy. And that's turned out okay. But Netflix, all the analysis I did pointed to that. I didn't understand why people were dogging on the content, and like it didn't. I feel like I've proven, at least to myself, I don't know if I've proven it to other people, that the crowd can say one thing and I can look at it and I can go, no, and then go do my own thing. Because with Netflix at the time when they were trading at what they were trading, I think Disney was trading pretty high, and Netflix was the dog in the cage right at that point. And the narrative was Netflix content sucks. They can't make any money, but a lot of it was Netflix content sucks. And then I made a point in my analysis video. I just keep patting myself on the back there to also say, everyone who's watching, if you're new to the channel, go check it out. The thesis is still in play. Nothing has changed from that video. It's about an hour, close to an hour long. Highly recommend it. And then you can see the basic idea behind the thesis, but focus on like the content numbers. Like every single time, they're just like top 10. They're like 8 of the top 10, 7 of the top 10 shows. And then there were people saying their content sucks. And I'm like, that is not what the world or the United States is saying. Disney like never made it. Disney was just producing crap.
Yeah. And
I was wrong on Netflix. Oh, go ahead.
No, I was gonna say the same thing. I was wrong on Netflix as well. Like when you bought at the 1.6, when it dropped down into ones, I still was like, I'm not touching it. I don't see. I still to this day, I know you did like a whole analysis, Fabio, but I still don't understand why Netflix is trading at $400. I don't understand why they give that valuation to Netflix, because my whole thesis on it at the time was I like Netflix. The content was good. You're right, because if you looked at what was, I guess, in the what's it called, Nielsen, when you look at a Nielsen, it was nothing but Netflix shows pretty much on almost every single page. It's like Netflix was beating them, Stranger Things, etc. My only issue was that at that time, HBO came out, Paramount, all these different competitions were coming out, so I had a feeling that they were going to start taking the shares away from Netflix, the market share from Netflix, and we saw that happening somewhat. So when it tanked, I didn't think the valuation still justified being at that $100 range. And clearly I was wrong. It took off. It's like a $400 some. It's like the Tesla argument. Tesla's going to eventually drop when the competition starts ramping up EVs. And
here's the caveat though on that. But I want to let Andrew say his point, and then I'll have my.
Oh, I was just gonna say my thing, what the narrative was, and it made sense to me at the time. And like, I was never big in any of the streaming companies. It's not like I was like, oh, I like this one or I like that one. I didn't like any of them because what it seemed like to me was and I don't know if Netflix was necessarily had a lot of debt, but it seemed like the other ones had a lot of debt, and that was indicative of this is a high cap, like a high amount of capex goes into making these movies, and how much can you actually monetize them? Which seemed to be kind of like the question everyone was having. So I never bought into like Netflix doesn't have good shows. I was just like, how hard like are they on a hamster wheel of having to make new shows and put more capex in and make more IP? Clearly, I was wrong, right? So, but that was kind of like my thought or my question that I had that I wasn't sure on. But that was just what I was thinking at that time.
Yeah, I could see that because they invest a lot of money in movies
Mhm.
that also didn't perform very well. Like that Martin Scorsese movie with De Niro and Pacino and all that. That didn't do very well from my understanding. And then that Leonardo DiCaprio movie, because it seems like every Christmas they have some big blockbuster movie that they release, and they haven't been doing very well according to some of the data that they released or whatever.
I'll say, let me shout out some movies that they made that were excellent. All Quiet on the Western Front. If you want to watch a really good war movie, highly recommend. Highly recommend. Very good movie. I'd put it up there with 1917 in terms of war movies, of recent modern war movies.
Yeah, that
cinematography is not the same.
1917 was good. I haven't watched the one you just mentioned.
Go watch All Quiet on the Western Front. It's I think a little bit more brutal, and it's based off of the original story, so it's from the Germans' perspective of World War I. Very, very good movie. And then the Pale Blue Eyes, I think, is an acquired taste movie, but Christian Bale was also pretty good in that movie as a detective. So they have some good movies. There's like Red Notice, which I think was a waste of money. I think that cost like $200 million. Well, what I'm getting at though is I want to address this comment, then I'll go to my counterpoint to what you said about there's all this competition. Netflix still lost overall. If they have more generous contract with Disney, Para, they wouldn't have gone to war. No, I think that Netflix at the end of the day made what?
Netflix won.
That's what I'm saying.
There's easy proof that Netflix won. I don't know if you're going to say this, and I mean, other people are giving Netflix shows to put on their platform now.
Yeah.
Like HBO is saying, hey, we're losing here. Put Suits on Netflix. Or like things like that.
That belongs to HBO? Suits belongs to HBO?
Yep.
Warner Brothers?
Yep.
Oh, I did not know that.
But
are you watching it on Netflix right now?
No, I watched it while I was on USA, and I loved the first couple of seasons, but that is also a show that took a dump.
Yeah. Well, the show, so I wasn't going to say that in particular, although thank you, Andrew, for pointing that out. I was going to actually point out that I didn't think they lost. I don't think they lost overall, because now that the story's played out, right, what we've seen is without Netflix, when these guys all went out and did it on their own, they don't know how to do it. And they all just destroyed themselves. Because arguably right now, what is killing all of these other companies is their streaming platform. They don't know how to manage it well. Disney is just pumping out trash, and spending a lot of money just pumping out trash. HBO is the only one, but HBO has its own issues. What the hell are they doing? They just renamed the app to Max. Like, what is wrong with them?
Yeah.
Like, so even then, I have like these doubts about the company, about people at the company for various things. But they have a good IP for sure. They're making great shows. Succession, which just ended. I haven't watched it. Heard great things.
Great.
Clarify, I was wrong. It looks like Universal is one that owns Suits.
Okay.
Just to be clear. Sorry. Go ahead. Continue on.
Oh, but either way. So that's
right.
Comcast, right?
Right.
Either way, Netflix went to war with all of them, and the one that came out on top, Netflix. And the thing is that the sleeping dragon, to name my position yet again, Amazon, Warhammer 40K. Very excited for that show, but well, let me dog on Amazon real quick. Amazon, if you're listening, if anyone at Amazon's listening, what the F was Rings of Power? Like, grab everyone who was involved in that project, fire
Back
them.
to the Disney problem. I
Okay,
think
sorry,
that was
just had
Rings
to
of
do that.
Power. Yeah.
But
Just
didn't
saying.
hold on? But didn't it make money?
No.
No.
That oh my God, no. The viewership that it lost by the last episodes was horrendous. It was another extremely lazy, poorly written piece of trash. They butchered a character like Galadriel, which Galadriel was one of the most beloved characters in all Lord of the Rings by the fandom, and they made her into the most unlikable character. Like, to be frank, I didn't even waste my time watching the show because I felt like my time was better suited doing other things. I didn't even give the show a chance. I just saw the synopsis, and my good friend watched some of the show, and I just took his word for it because he's also a big fan of Tolkien's work. So there's a lot of potential in that. And the funny thing is, everyone from the very first episode, this is how you know you have poor writing. Everyone knew who Sauron was. Everyone knew it, and the writers are like, "No, that's not him. That's not it. It's not whatever his name was, the guy." But nope, everyone knew it was him. Everyone knew. Like, that's how you know you have very poor writing. That's because the writer is supposed to be able to put out a story and actually be ambiguous when they want to be. They have to be playful with the narrative. When you're not capable of being playful with the narrative, and your audience is easily able to see past you, one, you're probably not very intelligent. And two, you're probably not a very good writer, but both at the same time. I'm just kind of angry. So I said the intelligent part. Didn't have to offend them, but
you
whatever.
guys remember too at that, and it's funny because I think, and I'm not going to go too far into like, I don't know if you can consider this politics, but I think this was once again, Amazon wanted to focus on making like it wasn't about making a Lord of the Rings show. It was about making a show about a strong woman.
Yes.
At the same time, HBO says we're going to make a really, really good show that has strong women in it. It makes House of the Dragon.
Yes, that was
awesome
great.
show. Like, it's not the actual political takes necessarily they have. It's that you're pushing an agenda before a show. And also, I don't know when House of the Dragon season 2 comes out, but I'm super excited for that whenever it does.
Probably next year. But can I touch on the Amazon real quick?
Yeah.
Go for it.
I don't feel like Amazon Prime is a major focus. I mean, Amazon Prime Video is a major focus for Amazon.
It's not. I agree.
And because the sad thing is, Amazon has some great original content and movies. They're terrible at promoting it. There was this show that I was watching called Hunters right before the pandemic where Al Pacino would hunt down Nazis.
My folks saw that. Yeah.
Great season.
Mm-hmm.
4 years later, season 2 comes out. They don't advertise. I just happen to see it. I'm like, oh, crap. Let me go watch that. Or another one, Carnival Row. Great fantasy show. Again, another one where it just kind of, the next year came by, nothing came out. Year after that, nothing came out. So you forget about it. And all of a sudden, it's like, oh, season 2 is here. Like, they do such a piss poor job advertising their movies and their shows that it just seems like it's an afterthought. They're like, well, we just include it so we can be competition for the other streaming services, but we don't really care because we make a lot of money elsewhere. That's what it seems like.
I want to touch on Bruh's comment. Streaming businesses are poor, in my opinion. I think content costs cannot be controlled because everyone just cares about the newest show. I think growth is so limited for Netflix and it's impossible to scale. Completely disagree. Let me explain
My
why.
friend, have you heard of advertising? But go ahead.
No, completely disagree. All right. So the reason why is there is, I believe, a point where the scale kicks in. Now, let me explain what I mean by that. So we have, like, similar to other companies, and I talk about that in the older content on Netflix. Like, there's growth CapEx, maintenance CapEx. Netflix, it's funny because they've already discussed how their growth CapEx or maintenance CapEx is going to decline in terms of growth. Their CapEx spending. They don't have CapEx spending like how we normally look at it for a company because it's digital spend. It's not really, it's the cost of the product. It's not really like CapEx as we look at for Amazon. But the concept's the same thing. So once you achieve that scale, every new incremental subscriber is just pure profit. Now, where you say it doesn't scale because they have to spend every year. It's like, well, my friend, that is what maintenance CapEx is for every business, right? Disney, if Disney had no streaming, it has maintenance CapEx. And if we make the argument from they have to spend money every year in order for the business to keep running, it's like, well, yeah, I mean, like every business does that. So kind of bringing it back towards that, there is a point where, for example, if Netflix hypothetically spent 50 billion a year and they just spend 50 billion every single year, right? Is that necessarily the problem? Well, no, if they're bringing in over 50 billion a year, but 50 billions, I mean, you know how much content you can make with 50 billion? They don't spend that, by the way, they don't. But I'm just giving as an extreme example. I think if you combine them all, it's rather insane. People do want the newest thing, but that's basically what like the maintenance CapEx is. It's what I'm referring to as maintenance CapEx. Again, it's not technically maintenance CapEx, but the spend next year, if it's like, if you spend 30, or let's use their numbers, I think they're spending, let's call it 20 billion. You spend 20 billion this year, you spend 20 billion next year, and you spend 20 billion the year after that. Some people are looking at this and saying, oh, that's terrible. They have to spend every year making new content. And it's like, no, think of it as like they're maintaining. It's like a maintenance CapEx. It's like a spend that they have to do. And that's normal for most businesses, if not all businesses. And what you're scared of is the amount they have to increase it by versus the amount that, you know, the sales are going. So if you take it from that, you can start to kind of pencil out, well, what is the point where it starts to slow down and then the top line starts to accelerate faster, or the profitability starts to accelerate faster. And that's what they've really shown the market, is that they're reaching that point. They're getting to that size where they have a budget sufficient enough to satisfy the vast majority of their audience and continue to produce absolute crazy amounts of content. But those subscribers are, content, right? But they'll still keep getting new ones, because it's not like you're right. If, for example, you said, well, they spent 20 billion this year and next year they're going to spend 0. They're not going to make any new content. Well, that's the problem. They can't do that. But that's the same thing like how we can't say that. Let's not use Disney as an example. Let's use Ford Motor Company. Ford Motor Company can't just say, we spent all this money on equipment this year. Next year, we're going to spend nothing. No, they have to make more investment in more equipment, and they have that scheduled out. I disagree, because you are assuming every user has the same needs and wants, same type of content. New markets require new types of content, but there's still like a point where it scales for every single market. So there's a finite amount.
I just want to say I'm glad that there's people in the community that are pushing back on you. That's a really cool. I love it. Dynamic. There's so many like dynamics where it's like, we have the cult leader at the top who's like, he does whatever he wants.
Parasocial relationship.
Oh yeah, no, that's a great part about this, about capital mindset, is like you're being challenged. People aren't like, Fabio, you're the GOAT. Fabio, you're the best ever. Fabio, you're a master investor. Like, no, like, we don't always agree with everything that Fabio says, although a lot of times you are relatively right, like with the Netflix. My question here, this is,
I want to say, by the way, you're talking about Disney. I forgot to say this. The shirt I'm wearing,
Pizza Planet.
That's for Toy Story. Yeah,
Toy Story. Yeah, I just forgot. But go ahead. Sorry.
My question though, and I think probably the audience wants to know this: we're like at this point where Netflix is now, how much more growth do you see at this point? I don't see much more upside anymore. I think if anything, the numbers are already showing that that I guess ad tier where they stopped with the password sharing stuff, it didn't make the impact that they expected when I was watching the earnings. So where do you see it going from here? Because unfortunately, it's a little sad. Netflix really at the point, it's the big dog right here, right? They figured it out. They've been in the game long enough. And it's kind of like they're getting punished for being the best at what they're at. Because it's like, well, what's next now? This quarter, what's next? It's like, I mean, how many more people do you need to acquire? They pretty much, I mean, I think everybody I know has a Netflix account.
From here on out, it's about international expansion. The global economy, the global wealth in general over a long period of time should increase, and that should increase the amount that they're able to generate from the globe, as well as future price increases alongside somewhat with inflation, etc. So
and eventually people are going to stop paying. This is like cable. Once Netflix goes to $60 a month, are you going to keep paying?
well, as long as they're kind of maintaining within, like, let's say adjusted for inflation at that level, it's like, we're not going to, it's crazy to say, but like in the far long future, $60 a month, wild to think. When my kids are like probably in their 20s, $60 a month, I'd be like, oh yeah, just like I spent a Chipotle bowl.
For $20,
Chipotle bowl for
no big deal.
$60. Double chicken, it was 80.
Yeah.
Things will scale. We I don't know what it would be in the future, but as long as like right now what they're going to be priced for is how stable and predictable their cash flows are. So there's going to be a premium to those multiples. There's typically a premium to multiples of subscription based revenues, and then if it's proven to be very sticky, which so far Netflix has shown that they're extremely sticky. Remember that when they had that decline in subscribers, what happened? They nuked an entire country. I was making that point. I was blasting, pounding the table. Like they nuked Russia. They literally obliterated a whole country, figuratively.
Yeah.
Figuratively.
What do you know, Fabio?
Figuratively. And they still, if you netted that out, didn't count that, they grew subscribers. And this was like after the price, and then they said, oh, we're going to crack down on password sharing. People were like, and then suddenly, it turns out that, yeah, when you cut people's access to Netflix that were using it for free, you know what they did? They went out and they subscribed to Netflix, because where else are you going to get your Netflix and chill resources, So
I never understood the hate. They're like, oh my gosh, I have to pay for Netflix.
Well, you get used to it. It's just like I don't know how old you are, but I remember when Netflix was just DVDs, and the streaming was like just an attach. It was like they introduced it and was still included $7.99. And the time when they were like, "Hey, we're gonna separate the two," people were pissed off. The stock declined like 50%, and it was just it got ugly temporarily.
I thought back. And then Redbox came, and we're like, "Oh no, Redbox." That's where it's at.
Yeah. Poor Redbox.
Gordon, you have to watch. You have to watch my Netflix video. I know I keep like bringing it up. You got to watch my Netflix video, because I talk about how much people are paying for traditional TV. I walk through like the logic tree behind the narrative of so going to, I forgot to talk about Uncultured Currency's point. Turns out that people were scared of that. And all these, you have Paramount, you have Disney, you have HBO. Oh, I'm going to cancel my Netflix because I'm going to go over here. Turns out that people had the appetite to have multiple. And this is one of the points I made in the video, was exactly that. So like the standard prior to that for what we would pay for entertainment a month was around $100 something. I think in my video, I estimated it to be like 135, 125, something like that. Point is, when you add up, Apple TV, Prime, you add up everyone, it still came out to less. So you could cancel your cable, get everyone all together, and it will still come out to less. And I even broke it down by like the tiers that they had and ran different scenarios. Like you went for the highest tier in all of them, lowest tier in all of them. Some of them were ad-based back then. Now some of them are not. But even if you take them non-ad-based, they were still cheaper. So the point being, there was still appetite, but people aren't going to choose all of them. They're really going to pick and choose. And this really is the winner takes most, Netflix, and then everyone else is kind of now competing for the number two spot. So everyone has like a standard. Everyone in their household, standard Netflix, standard across the country. Then the question is, who do you pick as your second one? So that's like the question comes in my household. My household, all right, I have Netflix, standard, not even a question. And then, I feel like I want to explore today. Oh, I have HBO. I'll go on HBO. I'll never go on Disney. I have Disney. I'll never go on it at all.
Yet, until you have kids.
To have kids.
I don't have kids.
I say until you have kids.
Oh, okay. Until you have kids.
Oh, I thought Andrew said you do have kids. I was like,
no.
I do not have kids.
No, until.
Until I have kids.
But-
No, because I'll be a Netflix loyalist by then. I say we are not watching this Mickey Mouse rat propaganda.
We're not watching gay Mickey.
Yeah, you're watching Netflix.
It's a game.
You're watching this.
Mickey Mouse comes out. I am he, they, them. Ooh,
Yeah.
Oh,
No. My kids are gonna grow up on. You know what? Their cartoons are not even gonna be cartoons. It's gonna be anime. They're gonna be watching like Castlevania.
Watching like Attack on Titan. Oh, this
Yeah.
is good
I
for
feel like we
kids.
definitely talked a lot about Netflix. And I see Fu had it's like, can we please get off of Netflix?
Maybe we can move on to what else do we want to talk about?
Well, we had PayPal and the defense contractors that I promised to talk about.
Okay.
PayPal.
We can also,
Aren't you a fan of PayPal, Fabio?
We'll talk about it. What were you gonna say, Andrew?
we can also talk about Monster.
Okay, well let's
Monster
do it
to
in this
drink?
order. Monster to get a different flavor. PayPal,
Hey,
defense contractors.
get a different flavor because it's a drink.
You got it though, right? Yeah. No, that was completely non-intentional. I'm not
Was it?
clever enough. No, it was completely unintentional, but I'm gonna act like it was. So it was intentional. I'm actually that funny. All right. And just to satisfy Fuhat, yes, they have a stand-up TV stuff on Netflix, and it's great. And they because of that joke, I got a call and they invited me to have my own stand-up special. Anyways, so Monster. What's up with Monster?
Yeah. So they reported earnings. Was it Thursday?
Yeah, August 3rd.
And yeah, August.
Yesterday.
August 3rd. Yesterday. Yeah.
What's Monster?
And
There it is.
and I think people don't understand how big Monster is. And so one of the things I think we talked about before, they have Coke's distribution network. And I always say it's secured because Coke owns 20% of Monster. And so Coke wants Monster to do well because they do well, then it's good for Coke. But it was an interesting earnings call. There's a couple things. So
There you go.
let's see. The sell side analysts, all they asked about was gross margin. Because I have to check, but like I guess the sequential gross margin didn't increase. It was like it was like flat, or maybe it slightly decreased. So that's why it like sold off slightly. I don't think it's a big issue. I think the big thing is that their product mix is why the margins weren't what they were. But it was an interesting call because so if you like follow these companies, Monster sued Bang and won the lawsuit. So if you guys remember, Bang was like the first energy drink that came out that was like 300 milligrams caffeine, super creatine, 0 calories and all that stuff. Well, basically Monster sued them and said super creatine is not a thing worth you because you took market share from us, and they won. Because the thing about Monsters, they're very litigious. Like they will sue you if they can. Well, now they're buying Bang, which is for $350 million, which is like dirt cheap if you think about it.
Damn, because they went bankrupt.
Can I pause super quick? Everything.
Yeah.
Because this was a comment way back and we left over it.
Go for it.
So so Mo, and for context, anyone who's Sam, there you are. Well, I was wondering where you were. We left a lot of juicy stuff in here for you, so have fun. For anyone who doesn't know context of the lore of Capital Mindset, Sam is a member of our Discord community, very beloved, and he is a professional screenshotter. He will take extremely comedic screenshots of myself, all in good fun, by the way. Some people don't like it. People who maybe have, but it's not for everyone. But I'm all for the sport. Anyways, so Mo, your question. So sorry that we forgot about you. So for context, anyone, there's the Sense Invest Club that we have been in the process of dissolving / moving. And anyone who's a Sense member, if you're watching this public, I'll be reiterating this information in the private content as well. You can go ahead and submit a request of cancellation to your membership. I don't control that, but submit a request for cancellation. And then after that request is processed, then go ahead and go onto the link down below. You can just go ahead and save the link. It's in the description right now. Click on that link, takes you to the page. subscribe to Capital Mindset Gold. And then that way you'll continue to receive everything you were receiving on Sense, but you'll continue to receive it on into the future. We're going to continue to provide all of the private content, the analysis, everything on all platforms for about a month or two to allow all of you to transition. And then after that point, we're going to cut things off on the Sense platform, and everything will just be on the Capital Mindset platform. So that answers your question. You can message me or contact me on any of the ways you want to, whether it be the website, Discord, on Sense Discord, on CM Discord, however you want to do that. You can also basically consider the free trial session, but realistically, the way I walk you through is how you want to do it. First, process cancellation, get that out of the way, then switch over CM Gold, and then you're good to go. And you don't have to worry about anything else. And by the way, it's cheaper, so you're good on that too. But no, don't worry. Don't apologize for hijacking. You're warranted an answer to that question. Anyone can ask during the private content streams. I'm going to be repeating this information every single, private content, maybe even some public content, just so it gets out to as many of the members as possible, so that no one's caught off guard when we go dark on the Sense platform. I might even extend it to 3 months if need be, but for the most part, we want to, get that going. All right. Anyways, back to what you were saying about Monster.
Basically, how they destroyed Bang, right, is what you said, and
Yeah.
that makes sense because it's funny. I saw Bang at a dollar store like 3 weeks ago, and I was like, "What's Bang doing here?" The cashier was like, "I don't know. I heard that they went bankrupt."
Yep.
So I was like, "All right, cool, dollar store, it is."
So let me look this up, because how much did Bang lawsuit settlement?
But that's cheap,
Monster.
$320 some million. They bought the rights. Wow.
Yeah, they filed. So listen to this. Monster sues. This is the just Monster is a they're a company that just amazes me sometimes. It's funny how everything comes full circle. A jury ordered the company pay Monster a $293 million settlement back in it was 2022. So basically they say, hey, you have to pay that settlement. And Bang's like, actually, we're just broke now, so we can't pay it. So Monster's like, awesome, we'll just buy all your assets then for next to nothing. Because $350 million, I'm assuming, because Bang was everywhere.
Yeah. Aggressive marketing tactic they had.
Yeah. So there's that. But people don't realize the other brands that Monster owns is like NOS, Full Throttle, Rain, and then they own some more international ones: Predator, Mother, Relentless, Burns, a big one in Europe. And then what they released recently actually is an alcoholic drink that's doing really, really well. It grew 88%, I think. I mean, obviously from a small base, but it's growing super fast. And it's basically growing at the rate that they can get it out to different states. So the thing about Monster is you think about it, you think Monster energy drink, but it's so much more than that. They also, Rain released a drink to compete with Celsius, which I think is, I don't know. I think people that drink Celsius don't have taste buds. I tried it once and I was like, this is the most disgusting thing I've ever had.
Yes. I tried today for the first time, and my God, it was disgusting. I literally came home and told my wife, I was like, this Celsius shit's gross. She's like, what is it? I was like, I guess it's like an energy drink or something. I see it's everywhere. It's gross.
It's that aftertaste. You drink it, and then it's
a fake sugar taste.
Yeah.
Yeah, that's interesting. I didn't know that about Monster, so that's good to know on a technical level, because I like to look for levels when it comes to a technical level when to enter, because I've been eyeing Monster for a while, especially before the split, when it was at $100. It kind of just lingered there. It never really sold off harsh. But I'm looking at it on a technical level right now, and with the sell-off, it's at a hard support. But if that support fails, I see $52 is where I would probably I'll start adding. And don't they have a dividend as well?
They don't, but they have an aggressive. They buy back a lot of shares. They did, but no, 52 would be like a what's the number? So 52 would be like a 5% drop.
Potentially,
That
yeah.
wouldn't surprise me. I bet they could get down to like 50. If it hit 50, I think it's because Monster doesn't go much below like 30 PE normally.
Correct.
Just because like the stability and the ability to get those cash flows as an investor. And so I think if it falls there, it can be definitely a buy.
Yeah, because it's on a daily chart. They even have at 53 is a 200-day EMA. On a daily chart, the RSI is getting close to being oversold. So there's still some room to drop for sure.
Yeah. So I think it can drop a little bit, but I think that, like you said, 52 is probably a solid place to pick it up. With me though, with Monster, it's kind of just like it's a consumer staple. I buy it and I hold it and just like whatever. But I'm not going to buy it. I wasn't buying it here when it was at like almost $60. I wanted it to come down a little bit.
Is this going to be like when you're an old man where we're on our rocking chairs, you're just going to be like, telling your grandkids, like, I bought Monster beverage. Like, how your grandparents would probably tell you, I bought Coca-Cola back in the day.
Well, I was going to say, I'm going to be like Warren Buffett sitting there talking about like his yield on cost is probably like 110%. I'll be doing the same thing with Monster. I'll just be sitting there like, oh yeah. Except I think Bruh made a comment earlier, and he might be right, is that Monster might just kill off all their client base in like 10 years from heart attacks. So he's like, I think everyone that drinks Monster every day is going to die of a heart attack.
We are jokes on all of us. We all thought another company was going to hit 10 trillion first. It was Monster the whole time.
What?
Oh,
like Apple. We all thought Apple would hit 10 trillion first. We're all wrong. It's Monster Beverage. They're going to hit 10 trillion first.
You think so?
No, it's a complete joke.
Oh, okay. I was about to say, I was like, whoa, that's a very
on energy drinks
theory there.
They're going to hit 10 trillion on selling energy drinks. No, and eventually they just take over everything. They get into robots, Monster robots.
Yeah, if they could somehow acquire Red Bull, which I don't think that's going to. I don't know who owns Red Bull. Is it Coca-Cola?
No, it's privately owned.
Private.
It's privately owned still? Okay, because that
family.
Yeah, that's the first energy drink I'm aware of. I'm from Europe. So in Europe, Red Bull was like the energy drink. It was brand new. It's still like their number one selling energy drink, at least from my understanding. I still see it everywhere. If they could acquire that would be awesome. They would definitely have a monopoly on this.
Bro hates Monster.
What?
Bruh's comment about if you gave me a cup.
You give me a cup of gas.
It's not that bad. Come on.
I want to get your guys' take because these are completely different companies, by the way. Late notice, like completely different. But you guys all have guns to your head. You got to choose Monster, Constellation or Hershey's.
I don't know what Constellation brand is.
Alcohol, spirits, beers,
Corona,
wines.
Right?
They own they don't own. They have the rights to United States. Sorry, almost misquoted. They have the rights to distribute and sell Modelo and Corona in the United States. They have a couple of spirits brands, not ones that you really know. That's all owned by Diageo, but they have some that are decently known. They have some wine brands, but think spirits, wine, beer, alcohol.
Okay, if I had to choose. I go first since I'm a black man, the only black man on the panel. So there you go.
Okay, fair enough.
Black Lives Matter. I'm kidding. I will go with Hershey.
Hershey's. Oh, okay. Solid company. Andrew?
It's between. See, I was going to say it's between Monster and Hershey, but I read the Bear Cave report that Mr. Beast is going to take out Hershey, so I'm going to go with Monster.
I'd hands down probably here that I would say that I could hold for my entire life, and I know that it would probably be higher than it is today. Hershey's.
Yeah.
But the one that I think is more exciting is Monster. Constellation brands, I mean, you got three good. We didn't go and pick out Smile Direct Club, Tattooed Chef, and Very Good Food Company. Right. We picked out three good quality companies, so it's kind of tough to. But yeah, I don't want to say like Constellation's like not good, but anyways, let's continue the conversation. So Monster, you buy more here, basically.
I'll buy more if it goes to 50. that's where I'm buying, or like
Yep.
heavily considering buying right there at 50, because that brings, like I said, the PE down to like closer to 30. And I really think their alcohol sales are doing phenomenal, and like all the, I guess like every single forum and all the reviews are very positive on that. So basically, it's essentially like a seltzer almost, but the feedback apparently is like the green one tastes. It's like drinking a Monster with 6% alcohol content, and no caffeine. But I remember I was reading comments on it, and someone's like, "This is what a Four Loko should have tasted like."
Nice.
Good days for
Oh,
time.
good days we can't remember, right?
Yeah.
Good days you can't remember.
So I can tell you guys a really funny. So when I was in college, I had no money, so I would always drink Four Locos because like it was like $2 for a Four Loko, and I was like, "This will work."
Yep. It was good times until people started dying. And then they were like, all right, let's cut back on some of these ingredients. I actually saw Four Locos in Dominican Republic. I was out there over the summer. They had it at the store, and I was like, oh, my wife, she's like, you're not in your 20s anymore, babes. Don't even try. I was like, okay, I let it go, because I'm not sure if they had the same ingredients or not, because in the States they had to take out certain ingredients. I'm gonna buy Monster. I'm with you there, Andrew. When Monster drops, like I said, $52, I'm gonna place my orders. I'm gonna start adding that to my Roth. And I don't usually add individual stocks to my Roth. It's all index. So I will add that. The only other individual stock that I added, just 2 shares to start with, and Fabio may like this, Shopify.
I like Shopify.
Didn't they have a really good report? Or
No, they did not, and it dumped.
I thought it was
really. Let me take a look now, because Shopify
is in the 50s now.
Oh, love. No, it's still.
Yeah, it dropped like, Jesus. I mean, but that earnings came out, it dropped almost like 12%, I think, or something like that, right? If you go to like 5-day or one, if you go to 5-day, I think, yeah, see, 13% down. So I bought at 64, just 2 shares, but I'm planning on adding in the 50s, and if it goes to the 40s, definitely buying in 40s. I missed when it was at 30s, because I have like a love and hate relationship with Shopify.
Bacon, just to clarify, are you referring to 10K gold members? Because like, I mean, realistically, I don't know if we'll get to that size, but like, live stream special for Locos fueled live stream, please. I mean, like, sure, I'll say yes to it, because I doubt it would get there, but 10K is a bit of an ass. But like, hell no, Andrew, if that happens, you're forced. That's a binding agreement.
All right, we'll do it.
That's a binding agreement now.
We get 10K. We'll do it. It'll be.
Yeah,
it has to be on a Friday though.
And you got to be in a toga.
I'll be in a toga.
You mean like 10K subscribers or 10K?
No, 10K membership subscribers.
Oh, okay. Where you at now?
Not near 10K.
Okay.
If you click on the YouTube link, doesn't it say how many? It's like,
yeah, but it updates
50?
daily, so it's not updated today. I think right now it's like 230 something.
Yeah.
So
a little bit
quite a ways away.
Yeah.
And then YouTube subscribers, I remember the capybaras. Don't worry, capybaras for 100K subscribers.
It's a capybara.
It's an animal from Brazil. It's a cute animal. Look it up.
Right. What was next? Was it Boeing?
Boeing. What's up with Boeing?
No, wait. Didn't you guys want to go over something? Was it aerospace?
All the defense contractors and PayPal.
Yeah.
So PayPal was also included.
Oh, PayPal and then the defense, right? Yeah, PayPal.
So PayPal. Let's talk about PayPal.
Let's do it.
PayPal is cheap. Okay. PayPal is cheap. I'll try to echo our other analyst who's not here right now, what he took a look at, his takeaway with PayPal and his concerns with PayPal. So for full disclosure, because I have not done a YouTube update. I owned PayPal and then I sold PayPal. So I currently do not have any PayPal. I do not have current plans to add PayPal back to the portfolio. Why did I sell PayPal? It wasn't actually because of earnings or anticipation of anything bad to come. I sold it because I wanted capital for other things. Oh, late notice. Oh, I know you're from the Sense community, I think. You have no idea, my friend. I did a 9-hour stream before. Okay. I did a 9-hour stream. I can go on for hours. Okay. The only reason why I keep the private content to a limit is because I have to be aware of Andrew's time and Leo's time. Just kidding. It's also like, because we do it during the weekdays, and I do have
You
to.
don't have the time
work
for
the
it.
next day.
It may have been that stream. Literally, a Capital Mindset member. He was in Europe. He went to bed listening to the stream
Yes.
and woke up and the stream was still going.
Yes, it was McBuddha. McBuddha did that. So he went to bed.
I was good. Yeah.
He woke up. He's like, "You're still going," and I'm like, "Yeah, I am still going. Let's go." By the way, I had to take down that stream because there was an interesting fight that happened in that stream. Yo, you don't remember? It's
No,
part of the
you wanna
Capital
just
Mindset
remind me?
lore. It wasn't me. I was not involved in the fight. It was a guest and a member of the audience.
Was it Echoes?
I will neither confirm nor deny the name, but
If you want to type in private chat, so I can. Trying to think.
Let's see. Okay. Yep. No. All right. Yep. I exactly remember which one you're talking
I remember
about.
people.
Yeah.
See, I wasn't there for that. I remember people talking about it, but I don't know what.
yeah,
happened.
no, because it was epic, but because of that, I had to take down that live stream. But it was
I'm going to like
9
have
hours.
Bacon or someone give me a summary at some point.
He kind of disappeared though, didn't he?
Yes, he did.
Really strange. I wonder what happened.
See, Kethan was there actually for it. I remember it was like 8 a.m. and me and Fabio were talking, and then at like 2 a.m. me and Fabio were just chilling, talking about Venezuela. No, I'll do one day like a really long live stream once again, but yeah, not in the near future for sure. What was I gonna say?
PayPal, why you sold?
PayPal. Yeah, so I sold PayPal just because I wanted capital for other things. But I'm going to echo some of the concerns that our other analyst, Leo, had with PayPal. Okay. So take this as like another thing. If you guys are part of the community, you already know this. All right. But I'll repeat it out for you guys here on YouTube. So the concern when analyzing the report was, I'll talk about the good and the bad. So I'll talk about the bad first. I'll talk about the good. The bad was not so much the decline in user base, but the decline in branded checkouts. That's a bit of a concern for our analyst Leo. In particular, his point was focusing on, well, that's a concern because that shows a deterioration of the brand from a B2B standpoint. Okay, and so that brings into question a lot of their future growth drivers. Okay, and it's a big deal, right? It is a big deal. Let's talk about the good. Okay. So, oh yeah, we're still live. What's that fun stream, fellas? Nice to have you back, Fabio. I'm logging off. Leave a like if you're watching and haven't. Oh yeah, thank you. Yes, leave a like, everyone. If you like the stream so far, leave a like. If you're not subscribed, you're new to the community, join the community. Hit the subscribe button. And if you want to check out and do a free trial, check out the Discord description. You can click on that link. It takes you to an embedded video, and I introduce basically everything that you get. But the free trial also you can see for yourself. If you like it, you stay. If you don't like it, don't stay. All right. But anyways, going back to PayPal. So the analysis there, or the good part of the report that I took a look at, and again, repeating this information for those of you who saw the stream about this, but the point on declining users was not so bad because when you think about it, those are the low usage users, and really the high usage users, they're still on there. What I mean by that, you look at total payment volumes, it's still up, it's still increasing. So the important stuff is still going in the right direction. The unbranded or the white label business still growing nicely, maybe not as much as what people want, but still growing. And that's another interesting business segment for PayPal. Not so much the branded one, but like the white label one is interesting. Now, the other part that I really liked, and this update came before the earnings report, and something I noted that was a positive was their sale of a lot of their loans to KKR. So I think what you can take away from that is PayPal is not a bank. I don't want them to be a bank. I'm not invested in them right now, but as an investor, prospective investor, I don't want them to be a bank. I want them to be a fintech. You can see that accounting change where they switched that over to their operations when they were trying to sell them, because now it becomes part of like the business, like a broker, right? It's a product, they're trying to sell it. And it's all, short duration stuff anyway. It's not really interest rate sensitive. They're selling it to KKR, the buy now, pay later products, the loans that they have. And they're keeping what they think is like the best ones. And that's fine. But I thought that was a positive because it showed to me, hey, we can monetize our portfolio, we can get liquidity fast, and we can move away from this banking-esque situation we were about to enter. Venmo is still not moving in the direction I would want it to. What I want it to do is they have the potential to become some sort of super app similar to what Cash App is becoming. But I just don't see the same vigor from PayPal, unfortunately. And I think they're losing the game there to Cash App, in my opinion. I use Venmo, actually. If I used one of them, I'd use Venmo. But I know a lot of the youngins use Cash App. Cash App has really taken some share among the youngins. But these nuts, I didn't address Apple. I'll address it real quick. It's not too much of a concern for me. I'm not an investor in Apple. I would say that it's pretty much what we would expect from a very mature business. Everyone I know, anecdotally, has an iPhone. I think Android users are the minority. And Andrew, do you have an Android?
Of course I do.
Yeah, you have an Android. You're a Google lover.
I am a Google lover. I have to support my Google.
Yeah. So
exactly.
Oh gosh, Fuhat, I'm bricked up now, Andrew.
KKR.
KKR.
Because you mentioned KKR.
Fuhat, we love you. You're definitely a character of the community.
Oh,
asset managers just get you going.
Slurpy's asked about FedNow. I don't know much about that, but he's asking that's a risk to PayPal.
FedNow? FedNow? Is that a company?
It's a new thing that was released. It's a payment service, I'm assuming, to the federal government.
Stripe is the only thing I could see potentially being a challenge to PayPal, but they're not even public yet.
No, I think people are misconstruing what FedNow is. FedNow will allow all these operators to use better tools, make it faster, but it's not the Federal Reserve is not going to get in the business of getting involved in all this transaction. That'll be a logistical nightmare. They don't want to get involved in that. It's a platform / tool in which others can build upon and then use. The banks can build upon it and use. There are threats to PayPal. That doesn't mean that FedNow isn't indirectly a threat. It's not directly a threat. So PayPal could adapt to it. It just depends on what other products or businesses come out of this that can do what PayPal does, but better, which is already in the question. That's part of the bear thesis with PayPal. Let's take a look. Yeah, okay, fine. I'll mention Zelle. Fuhat, Zelle. Yeah. So Zelle is a business that is made up, and the owners are all of the banks, right? Very similar to MasterCard. So people don't know the history. I know I'm going to nerd out on everyone. Why do I know this useless information? I don't know, because it's a cool case study. But MasterCard and Visa have two different stories. Visa came from Bank of America. MasterCard came from a bunch of banks coming together and owning a share of MasterCard. Both companies were spun off around the same time. Visa and MasterCard now are now two separate businesses. Zelle is similar story to MasterCard, where Zelle is owned by a bunch of the banks and they own it together as like basically, okay, we all own this, we'll all use it and we'll keep this network going. That's what MasterCard was, the same sales pitch for MasterCard. And then Visa had to they had to basically become independent or continue. In order to continue to grow faster, they had to become independent as an independent party from Bank of America. And subsequently, MasterCard also, you want to unlock shareholder value, spin it off. Zelle could one day become publicly traded and spun off too, follow the same trajectory as MasterCard. Now, the question is, does that pose a threat to PayPal? I'd say so. I'd say that's more of a threat than anything. But PayPal also is getting involved again in the checkout white label checkout. So it's like when you have a business and you want to set up a checkout, you can use PayPal. PayPal also has branding behind it, so people trust PayPal. That's a lot of the bull thesis. So I just addressed some of the bears. Bull. I'm trying real hard to get CM lore. There is something over the third person's face.
It's talking about me. They think I'm Kingdom.
Oh.
Because can't see my face. So I was like, is it third person Kingdom? I'm
No.
like, no.
No, this is Mark.
You've been covering my face this entire time.
Yeah. So real estate, you will find that there is a ton of lore. You'll hopefully get familiar with it over time, because I know you're newer to the community. You'll get introduced to it, and that will just bring you closer with the members, because it's all part of being a part of the community. It's also getting the lore. Michael says, my biggest problem I got with PayPal, I don't even think it's cheap here. Oh, you don't even think it's cheap here. That's your biggest problem. I would disagree. Okay, wait, depends. Because like if you think there's deterioration, it's not cheap.
Right.
So,
I mean, it's objectively cheap if you think they can hit what they're saying they will. But yeah, there's deterioration.
Yes. Yeah. So I disagree with you. If they hit their targets, it's cheap. If they stay here, like kind of just stagnate and grow barely, it's cheap. If they deteriorate, it's expensive. But that's kind of every company.
Yeah.
So
I'm honestly thinking of trading this, because where it's sitting at right now, it is relatively cheap. But as an investment, fundamentally, I like everything that you said with PayPal. My biggest issue with PayPal, and this is just personal bias, their customer service sucks. Everything about when. Well, go ahead.
Are you going to bring up their woke thing?
No. I wasn't going to bring that up at all. I mean, I guess that's a small issue, but I'm just saying, just in general, like when I have an issue, when someone like hacked my card, my PayPal account, I couldn't get a hold of anybody. Like, to me, this is the customer service is just atrocious across the board. And then like if I need to do like a chargeback or something happened, they give me a hard time. I just never had a good experience with PayPal overall when it came to anything that I didn't like. If there was any issues, I always had issues trying to resolve it with PayPal.
That is such an interesting take. I've never used PayPal for that, but everyone was telling me that that's their reason why they like PayPal. But it's not that they're telling me that they have experienced that. They're they're coming up from the investor and they're repeating what they hear. Mm-hmm. I think. So I think everyone's just repeating it. So it's funny, you're having the
opposite,
exact opposite.
I just always, for years, anytime I have issues with PayPal, it's just almost impossible to get anything resolved in a timely manner. And just for that alone, if your customer service sucks at that level, I am just not even interested. And they outsource everything anyways. So I'm just not a fan of PayPal in general. That's why I was asking what you think about Stripe, because I keep hearing that, Stripe could be a potential PayPal killer. I know they don't have the integration like PayPal. I don't see Stripe, and I see them in small businesses. I don't see them online often.
Oh no, they're in the back end. So I'll tell you what. I'll be upfront. If you're on Capital Mindset Gold, you're interacting with Stripe.
Okay, interesting.
You're interacting with Stripe, straight up. It's all set up through Stripe.
Good. So they do a lot of white labeling.
Yeah, you don't even see it, but Stripe is right there. So Stripe takes a cut, and it's I think it's cheaper versus other options, but they're there and they're really good. I'm really happy with everything they've done so far, and in any activity that I've dealt with when it's international transactions of different enterprises or businesses, Stripe has been really good. Stripe has always been really good. Stripe is the threat. Yep.
No, I was going to say, because and we're talking about Stripe, which I like how like every year people are like, when is Stripe going to IPO? But that's another thing. But I think when we just, and I'm just kind of trying to circle back in, and I know maybe you have a point, and I didn't mean to cut you off, but when I look at all this and I hear people talk about Stripe and all these other payment solutions and the PayPal deteriorating brand, I feel like this is a value trap.
You feel like it is?
Yeah, especially when I see people like Jeremy saying it's easy money.
Oh yeah, that's the one thing that should terrify every shareholder.
You said that for PayPal?
Yes.
Yeah.
Definitely staying away now.
Yeah.
Yeah.
Well,
I may
first of
not
all,
even trade it now.
I
because of
hate
that.
I hate that comment, like easy money, as in like making it's a stock. I don't know like how what's hard money versus easy money, but like
But didn't
that's
he
a
say that
whole.
for Tattoo Chef as well? It's easy money.
He
You're
did.
right. It is easy money to lose.
It's
It's easy to lose. So yeah, I'm not a fan. Out of honestly, you know what I am a fan of? American Express. I'm just
I
waiting
was
for it to get
gonna
to my
say,
price level. I love American Express. Customer service, I love the card, I love the business, I love the fundamentals, and I want to buy the stock. It's literally getting where I'm comfortable buying because it's almost at the all-time low, right? Nope, 130. So I
no.
missed that opportunity. So
Wait.
you're
What do you mean all-time low? No. Their all-time low is like way back in the past.
No, I don't mean that. I don't mean, you know what I mean. I meant 52-week low. Sorry, let me be specific. I forgot I'm talking to professionals over here. All right, 52-week low.
Oh,
was it's 130. It says for the
yeah.
52-week low. When did it hit 130? I must have completely missed it.
2022, September 30,
Oh,
2022.
I must have
recent.
completely spaced that. But I like
16
American
PE
Express.
for these guys doesn't sound bad.
I'll say this about American Express. So all the concerns everyone's having about, security online, American Express essentially addresses. But at the same time, you have a reward system behind it. So that's always been like the tout. Okay, so I tell people that with at least Bank of America, I've never had problems with the chargeback. I tell the example when I bought a gift one time. I had to call them the very I think 2 days after to explain that I found it was my mistake. But I'll tell the story. So I had ordered a present, and I was working on my car, and my buddy was with me. He's really, let me be specific. He's working on my car, and I'm helping him.
You were paying him.
No, I wasn't paying him. That's the best part. Yeah.
Okay.
We're like best friends forever, and he's a car guy, and he helps me out here and there. So with we were working on the car, and I did not know, like you're gonna ask, like, how the hell does that happen? It happened. Okay. The guy came, he delivered the product. I grabbed it, was like a drone, didn't even realize I'm signing for it because you had to sign for this product and everything. And then I just put it away in the garage, just put it away, and I go back to the car. Completely forget it's there. Weeks goes by, and then I'm like, that package should have arrived by now. The package, you guys already know the end of the story, so it's like I already spoiled it. But I'm freaking out about this. I call the bank, and I'm like, hey, like the package was stolen, etc. Blah blah blah. They immediately refunded me, and then I'm like, okay, I'm secure. That's fine. But that was my experience with the bank, right? And I heard people talk bad about the Bank of America, and I was like, oh, they refunded me. Okay, a couple days go by. I'm in the garage. I see a box, and I get that gut feeling. I'm like, F, not to curse, F.
Yeah.
I think that's the package right there. I open it, it's the present, it's the package, and then it comes back to me. I'm like, oh my gosh, I know how. So then I had to call the bank and say, like, no, put it back on the card. It was not stolen, and I felt really bad because the bad thing is the consequence might have been, I don't know what happened. Sometimes they punish the driver for that. So I might, rippling effect of consequences. I hope nothing happened to that person. But
person probably got fired. Way to go. It's probably on unemployment.
No, I would feel absolutely terrible if that happened. But the long story short, Bank of America came in clutch and was clearly there to protect me as the customer, and was it wasn't stolen, but if it was stolen, they showed me that, hey, we're here to protect you. American Express, I know, has that reputation from everyone I talk to that their chargebacks are pretty fair to the user. They protect you. So that's pretty much what you're using PayPal for, right? You're using PayPal to protect you from fraudulent charges.
Correct.
A lot of credit cards offer that protection now too,
and do it way better. And can I touch on American Express too real quick?
Go for it.
One thing I love, what I have noticed, and this is a concern that I have with American Express, because I am going to buy into it. It may have already hit on my dividend portfolio. I probably bought a couple of shares. I got to double check. But anyways, about American Express, because that is my primary card, the platinum and the gold. Use it everywhere. I'm starting to notice that a lot of places they stopped taking American Express. And I asked why, and they're like, well, their fees are kind of high. And then they also said that the chargebacks, they're like, they won't even contact the business. They're not very business friendly. They're customer service friendly. So you can call, because I went to the veterinarian recently. I had like an emergency with my dog. And I was like, you guys, he's like, I'm spending over $1,000 on this. I can't use my American Express. Like, yeah, sorry, we just stopped because, people would just go back home and call and charge back. They won't even call us to ask to verify. They'll just give them the money right back and pull it out. So I've noticed that more and more people are getting away from American Express because of the fees and because of that chargeback that you can do to protect yourself.
Yeah, that's at the end of the day, like that's American Express addresses all those protections we were just discussing with PayPal, with online commerce. So I don't see it. It was funny. So you're basically an avid Amex user.
Yes,
you find value in it, right?
Yes, there's 90% of all my purchases are done on American Express. I have a MasterCard just in case, they don't take American Express. But other than that, Amex 100%. Love everything about it.
Oh, wow.
Yeah, but I also travel. I also use all the perks. If you don't use the perks, there's no reason to have the platinum card. I'm just gonna be serious because I think the fee is like $650 annual fee.
$695.
$695. You can. Here's a hack for everybody. You can call and say, "Hey, I'm going to leave," and they'll discount it or give you points or give you something to try to offset that $695 a little bit to bring it down to maybe like $300 or something like that. But yeah, Amex is I had the Amex Blue. I have my business credit card is also Amex. I love Amex. I'm telling you, I'm 100% satisfied with Amex.
I know you guys are talking about all these, banks like Bank of America and Amex and everything, but I just got a letter today in the mail, and I think this bank right here, SoFi, who just emailed me about my student loans. They want me to refinance with them. That's the card I'm going to go with because I believe in them, and I want the SoFi community to benefit from it. So,
are you being serious, Andrew? Or I'm not too familiar.
No.
I'm not too familiar with you. I'm not sure if you're not, because I'm just saying because you never know. Because SoFi, I mean, the earnings they're heading in the right direction.
SoFi, here's the thing, and people, because the SoFi like cult is kind of like obnoxious.
Yes.
So like I think people go over too far to one side. If the economy continues to do well, SoFi will do very well. Because what SoFi is doing is it's going out on the risk curve, right? To like make loans. So as long as the people that they're going out on the risk curve to make loans keep their jobs and everything, they'll do fine. But dude, they're literally like, I saw they sent me an advertisement, like an email saying I can get a house for only, was it 3% or 5% down? Like they're advertising 3 to 5% down on a house.
Really?
That's
SoFi?
Yeah, let me see if I can pull up the email.
Wait, why is that? Am I silly? Why is that weird?
Because the interest rates are like at 7%.
Wouldn't you want it to be at least 20%? Isn't that like
for an investment property?
No, you said mortgage, right? You said the mortgage loans are 3 to 4%. Is that what you said, Andrew?
Yeah, 3 to 4% down. I'm
down.
pretty sure you want like.
Okay.
Yeah.
I thought you said interest rate. You were offering 3 to 4%.
No. That's pretty. Wait. Whoa. No. That's standard. That's 3% is what I can get at JP Morgan Chase. Yeah. First time home.
I wasn't told my whole life. Well, then you're paying PMI.
Yeah. You're paying. Yes, you are paying PMI, but the 20% rule. Rule, like not rule of thumb for the person, et cetera. That's choice. But yeah, you see, Ethan said it correctly. FHA is 3.5, but a lot of banks have 3. JP Morgan Chase has 3. Bank of America has 3. A lot of banks have 3. 3 is a standard for first-time home buyer programs within banks. You typically need better credit. If you can't qualify for the 3% down on the bank, you can go FHA, which will take you with less credit. That's pretty standard.
Is it really?
I didn't know that. Yeah.
I didn't know that.
I didn't know.
No, because
either.
Maybe it's just rule of practice.
Once upon a time, I was an MLO, so I had a lot of jobs.
You were an MLO?
I was an MLO for a little bit. Yeah,
that's crazy. Just so people know,
I have family that's pretty big into real estate. So
just so people know, I'm not lying because people. There's a lot of cap on the internet I literally do have.
I only have, if we're doing card checks. No.
Card checks. Let's see all the cards. Oh, this is like
Let me.
my standard. Then I have my phone one with the Visa in
I
it.
have that one. I
There
don't
you
have the
go.
gold.
Be careful. Be careful.
I covered the.
Oh, you've covered. Okay, yeah, because the numbers are in the
yeah.
back anyways. So
Yeah, you guys think you're cool. I got my Fidelity card. There you go.
fancy Fidelity.
Oh, no.
That's why I have. That's my dividend portfolios with
But
Fidelity.
you know what the best card is,
401k.
and it's okay. I can show the front because there's no numbers. This card, the sleeper card.
No, you know what the sleeper card is? Hold on, I'm gonna show off. Ready? Hold on.
We're a credit card review channel now.
No. Here's the sleeper card. It's this one because I just bought it. I put one Taco Bell order on it, paid the annual fee, and now I got 70,000 miles.
This right here.
Banned from Barclays for life.
Oh, the Apple card.
Dude, that's the worst card. I don't even.
It's the worst. Yeah.
It's so trash, man. I got it when it first came out. I have my recurring Apple Plus membership on there, but that card, so trash.
I use this card as well. The Bill MasterCard.
Well, I'm not familiar with that one at all.
So this is it's actually by Wells Fargo. So it has Wells Fargo on the back. So let me cover the.
Designed for renters.
Yeah, I like credit card hacks, man. I do that all the time. I know, like Dave Ramsey's like, credit's bad. If you know how to.
It says Wells Fargo in the corner.
Oh yeah, I see it. Yeah.
So Wells Fargo. So basically, when I pay this card off, I go to Wells Fargo portal and it's there. I would not use this service if you are renting from a mom and pop landlord because they have to send a check and it's complicated. But if you're using like I can now say at this point, if you're using like a large property manager, etc., they're like it's a big company. Using this super easy because it's basically like they treat it like a checking account. So it debits to your rent but it's on a credit card. So if you're responsible, yeah, you get points. You get 1 point for each dollar in rent. And you can get more if you use it towards like you get like a bonus towards the end if you use it towards like a mortgage or something or a down payment on a house. So the idea is, and it makes sense, right? If you think about it, and I really think they should expand this relation with Wells Fargo. Like Wells Fargo should go hard with this because Wells Fargo is a huge bank involved in mortgages. Or just don't be a rentoid. No, there's a reason to rent. There's a reason to rent. So like I'm renting because I didn't know the area that I moved to. So for the time being, I rented. And good thing I did, right? Because you guys know the context, right?
Oh yeah, because in closing costs, everything you'd be losing.
Yeah, I would have been effed. So I can go back when I end up going back. I still have my property and it's still good to go. And I gotta now figure out like the stuff moving back. But point is, I didn't know the area. If I just came in and just bought a place, it's like, oh, before I know it, I bought in maybe like in a bad area in Dallas. So it would have been bad. So you never know.
You would have been stuck with it.
How much do I tip my landlord? I don't tip my landlord.
That's a cool perk though that you can actually pay because that's like the downside of like Amex. I can't use it to pay my mortgage.
Oh, they will have one. So Built is working on, and again through Wells Fargo. I think this is where it changes the game. Wells Fargo says you get points.
That's going.
I know. You get points if you have a Wells Fargo mortgage. All right, it has to be a Wells Fargo mortgage, and then you can pay with the Built MasterCard. Then I'm gonna think to myself, if it's marginally beneficial, and the points bonus comes better on the Built, I'm gonna min max. I'm a min maxer. I have fun doing that, so I'll go with Wells Fargo. As long as the numbers make sense, as long as the competing product is not that much crazier. So right. I know Rocket Mortgage is also trying to get into a similar thing, but they're not really a bank, so it's gonna be tough.
Man, bruh's calling us out over here. Sleepy face.
No, he says you live in a van right now, and then
you didn't answer.
No, I didn't answer. I do live in a van. Yeah. I use my debit card and pay cash for anything I buy.
Is that a debit card? That sounds.
I wouldn't even. Like I love credit card hacks and stuff, but I wouldn't recommend it for everyone. It's like, Dave Ramsey's against credit. I think it takes a disciplined person to really do the whole credit card hack stuff, gathering points and stuff. Because if you're not disciplined, man, you can run up those, especially the Amex. Because I don't even think there's a limit, because they treat it like a cash card. So I don't even think there's like a limit on Amex. I could be wrong. There may be a limit. I don't know what it is. I've put a lot of money on it, and it's never got declined. But you got to pay at the end of the month.
Yeah.
So that's the thing. And if you're not disciplined enough, you can get in a lot of trouble with some of these credit cards.
Yeah. Michael Anthony is saying, you guys stop talking about assets to invest in. And does anyone know why the market started selling off today? I didn't know the market sold off today.
It did. It's because of I think
I was in the green today.
Yeah, I was in the green today.
Yeah, it's no, was it? It sold off hard in the morning.
No. We're because we have a lot of Amazon.
Oh, because that's all you guys have.
Yeah, no, legitimately. My portfolio was pretty green today.
I mean, my portfolio was green too, but just overall, I think the market was. Yeah, it shows right there. It was down 0.5%.
Where you see it? Oh,
on top.
Yeah, up there. I see it now.
Yeah, everything was down, and they've been selling off.
We're just such good investors that we don't have red days.
Yeah, we don't have red days, only green days.
only traders do. Yeah, it was at 4,700 earlier this week, and then it started selling off as expected. I think ever since that whole Finch thing, I know a lot of people act like they knew what this whole Finch downgrade was. Most people didn't know what it was. I didn't even know what the whole Finch downgrade, even though it's considered like a nothing burger. I think the market's reacted to it, especially Apple's earnings and everything else is just kind of starting to sell off. Everything's been running for like 7 months, man. It was time for it to cool off, especially tech.
I think that we're like so used to everything going up. Like the market was down 0.5% today.
Oh, okay. Yeah, it wasn't a big deal, but it's just like it was like back to back to back. Like we went from 4,700 to 4,478, so we dropped over. Oh shit! Almost 200 points. We dropped over 200 points. Is that accurate? I don't think that's accurate. Hold on, that doesn't look right. Hold on.
The Dow Jones, you said? Dow Jones down 150.
Right?
Yeah.
Oh yeah, it is right.
By the way, what I do to hedge my tech positions is I go 3 times leverage short Dow.
What's the ticker symbol for that one?
SDOW, right, Andrew? That's the way you hedge a tech portfolio.
That is how you do it. You have to, but yet only with call options.
Only, Mark. If you can't tell, we're joking because that's what
Jeremy, you don't know. Yeah, Jeremy he said to hedge his Tesla position, and like he was buying SDOW or buying calls on SDOW, which Tesla's not in the Dow.
Yeah,
and so they're completely unrelated.
I wonder if he knows if like people are calling him out, because I would be embarrassed if I did that. I would just pull the video down immediately if I see someone that responded.
Wait, Ethan's about to tell us something. The gas station manager said in his video today that
no. Bro, I'm sorry. You can't have like what was like 3 or 4 of his top positions go bankrupt, and like honestly think that.
No, you know what? I don't even doubt that anymore, because I'm realizing that you can get away with the dumbest crap now.
Year to date,
bros.
There you go.
Year to date, bros.
I am up so bigly.
I'm just gonna pull up any of his videos. His like absolutely childish writing that he does.
Yeah, I don't ever watch Jeremy. I just know him from you guys, and every blue moon when I kind of tap in, I just notice he doesn't put a lot of effort into his content, so I just don't watch.
No, it's really boring.
People, I don't know why they like it, man.
I don't know. I mean, you've been live for 3 hours and 13 minutes at this point, and you still have an audience. So
no,
I don't know. What it is people have a hunger for it, man. I guess, and he caters to beginner investors. So when the market's going up and we're in this bullish market, people get excited and they go on YouTube, and unfortunately he has millions of subscribers, so I'm sure if you just type in something, hey, how's this stock doing, he pops up. And then you kind of go down a rabbit hole. You start going through stuff. You're like, oh, he really knows the stuff. And if you don't know better, when he's like, year to date, I am up 125%. You're like, oh man, this guy must be awesome. Not realizing that if you pan out, he's actually down a lot.
Well, and he lives off showing his Tesla and Elf Beauty gains.
Yeah. A lot of people do. A lot of those looks. Listen, man, I'm in the trading space, and when I started my channel 3 years ago, it was supposed to be lighthearted and fun as people follow me on my journey and try to become a better investor and a trader. And all I've discovered on the way, especially when I start getting smarter in this, is how many scammers and grifters are in this space. And it takes away the whole fun about finance because there just is so many liars and the fake flashy stuff and just all the crap that comes with it. And it's a trap for a lot of newbies at this point. And it's unfortunate. There should be no reason that Capital Mindset is at 5,000 subscribers and Jeremy is at like 1 million or something. You know, I give Graham a pass because I legitimately like Graham. I know his stuff is boring now, but I don't find him to be dangerous compared to,
I agree,
like, you know, everyone else. You know, I used to like Andre Jick when he used to be the dividend guy. Now he's, shilling crypto, and I think it's dangerous.
Graham's lumped in with, I get why, because he's friends with them, with like Jeremy, Meet Kevin, Andre Jick, but all he does is talk about S&P 500 index funds.
Yeah.
So he literally,
he's just the news. He just takes the news and he just makes it like entertaining in his way.
Yeah.
And that's really it. And for the most part, the same thing with Andre Jig. That's why I don't really have anything against them. And I really like Iced Coffee Hour. That may be an unpopular opinion, but I really like the direction that Iced Coffee Hour is going. And I think that's where he's trying to pivot because I think he knows that what he's doing is repetitive. The Graham Stephan show is getting kind of old. And you know, people aren't tuned in as much anymore because it really is the same thing over and over and over. Where Jeremy just doesn't get the hint. How many views did he get on this video?
I just love the face.
Yeah, like he doesn't even do a thumbnail. Like, fuck, man, put some effort into it.
That's how Sam does it.
Yeah, but you never know. I mean, I don't know. I don't know, Jeremy. I don't watch his stuff long enough. I know you guys hate him. Do you think maybe he actually really believes this stuff himself?
Look, what does that even say?
3 weekish.
This is what we're talking about.
Ish.
What does that even say?
3 weeks ish.
What does it even say? I can't
look. I have
week.
No, he does this all the time.
I don't have new all. Am I the asshole?
I understand that one. New. Oh, is this the year to date? Was that his portfolio year to date?
You just go through any of his videos, and once you see it, you can't unsee it. Like,
look at that. I mean, even there, comment. Take down Ethan's comment.
Oh, Ethan's comment. Sorry. Does he? Oh my god.
Wait. Please show me this video. Like, I need to.
God, honest was like
cosmetics and beauty give me hope for margins. What? It's
marginal
just chicken scratch.
No, you know what this is?
What?
He's saying honest company does cosmetics and beauty, and then he sees it down 52%, and he's asking the audience, someone please give me hope that I'll get out of my bags on this one.
He's an honest too.
Yeah.
Poor guy.
No, he's quite rich apparently.
Yeah, so. I mean, when you listen, when you make as much money as these guys are making off of YouTube, throwing a couple hundreds of thousands of dollars at speculative companies and one of them hits, you'll be fine. You don't care. You have money coming in from courses and Discords and YouTube and merch. It's, it just sucks because I know a lot of people probably follow him and probably have lost a lot of money.
Next 60 days, minus 10% Dow, plus 30%-ish S Dow. My call option contracts 90 to 250% up next 60 days. Okay.
So, on S Dow?
Yeah.
Shorting Dow?
To crack the stock market, all you got to do is buy call options 60 days out.
No,
What was
like
his strike? Hold
legitimately.
on. What
This
was his
got
strike?
42,000 views.
I think what he's saying,
42,000 people
what he's
saw this.
saying is he thinks the Dow's going to go down 10% in the next 60 days. So he's buying call options and he will make 90 to 250%.
He's buying call, but the S Dow is a short, right?
Right.
Shorting the okay. So
He's
60 days
shorting a
out.
product,
I
an
mean,
investment product.
it probably will go down though.
But like, you don't know. I mean, with slippage and everything, who knows if like buying a call option 60 days out is going to even.
Where's his portfolio, Michael? I don't know where his portfolio is.
But is he saying he's saying he's going to hold it till 90 to 250%.
Yeah.
We're going to see his portfolio. Michael posted it in Discord. Apparently he has access to it. Where'd you post it?
We're turning to a strongman personal finance stream.
Hey, we're super serial investors, and we have the right at this point to
We're trying to explore
crack.
all the best minds on YouTube, even as the soon to be hedge fund managers.
Oh, here it is. I have it here. Yeah, we're trying to explore what the future greatest hedge fund manager. Oh,
zoom in. I can't.
No, don't worry. I'm just pulling up all the pictures. What is this? All right. So remember, by the way, just to mention, so you can subscribe to his Patreon for $20 a month. $20 a month.
This on stream?
What?
So should we be showing this on stream?
What is this?
His portfolio?
Where is it? I had it up here. It's this.
Yeah, I'm just saying, should we be showing it? Oh, okay, we are. All right.
That is so blurry. I see
so blurry,
is that PayPal, really Palantir? What's the third one?
Tesla.
Is it Shopify? Hey, he's a Shopify boy with you.
I just got added. Hold on. Someone just sent me something.
Yeah, it's super blurry, so I cannot see it.
Yeah, it's blurry here too. It's gonna be blurry no matter what. It's the pictures I received. My boy Michael. But we get the gist. So basically, like you pay this man $20 a month now is the price, and let's just see what it is, because I'm not even gonna put words in his mouth or make up things. Where is it? July to the private group. God, what is this? The Patreon? Oh no, this is the bullshit. That's the app.
Dude, you want to hear something that pissed me off?
Yeah.
Just for fun, I was like, I'll apply for the private group, and you have to put your cell phone in there, and I didn't think anything of it. So I send you like a text. I'm like, okay, whatever. And I'm in Mountain Time. And I think his guy's like in Eastern Time, and I get a call this morning at like 6:30 from the dude who's like, his name is like Omj or something, like trying to get me to do an interview with him for 30 minutes. I'm like, why are you calling me at this time?
He's outsourcing folks from India.
Yeah.
To do his stuff.
Yeah, well, let me see if I can.
I suggest Fabio. I mean, you guys follow this guy a lot. To sign up to his Discord for $10 a month and just see what it's all about. That way, you have a great understanding of his style of investing.
Oh, I know. Yeah, I know you're joking, but like,
oh no, I'm not joking. I'm being serious. Like, I would do if I was still doing like the trading group reviews. I totally would. It's $10. I'll go, because I always feel like if you're going to talk about somebody and if you're going to critique their plays, always go in so that way you have evidence for yourself and you experience yourself instead of like a third party.
Well, review. The thing is, they just give it to me. People literally just send it to me.
Oh, that's even better. So then you don't.
Yeah, no. So like I receive his portfolio, whether I want it or not, and.
I don't
just because people are making fun of him.
Not, they force it down my DMs.
No, it's true. It's not just you, Michael, by the way. But no, it's and trust me, Strongman gets it too. So
I think by the way, the guy, his name is Andre, Ondrej. I think he's like European. I don't know.
You know what's crazy about all of these grifters?
Here it is.
They remind me of the time I was like in Iraq. When you clear out one section of Iraq from terrorists, you eliminate them, then you go to another section, you start fighting them there, and then just pop up again on that side. I feel like this is like, it's like a whack-a-mole game.
Whack-a-mole. That's exactly.
And I feel like all of you guys do, and myself sometimes, calling out grifters. It's like it doesn't matter. Like every one person we save, 10 more people will sign up. on their Discord anyways. And sometimes it becomes somewhat exhausting to be in that space.
I'm at the point where I don't even care about calling them out. I just like make fun of them and people, because like you can't stop people from going down that. There's like a difference too. So I know a lot of people don't like for example, I don't think these guys are grifters, so to speak. Like I don't know, Amit and his.
I like
group.
Amit. Yeah, I'm cool with Amit. I know you guys don't like him either.
I know. Well, no. My thing is, I don't think that he does great analysis. And I tell people this, and I'm like, I watch their nightly like finance junkies, just because like it's consistent. I can watch it every night while I'm listen to it while I'm at the gym. And I think Chris has some pretty good takes. He's actually a Disney Bull. It'd be interesting to listen to his.
Oh, he's a Disney Bull. Interesting.
Oh yeah, I know, right? And he's also a big fan of Truist. And,
Amit, he hit a niche and blew up from it. The Palantir and SoFi and Tesla, Simpson stands, like that is like his thing, and people go to him for that. They want to hear the positive stuff. They don't really want to hear the bearish case on these plays.
Like didn't he just do a Twitter Spaces with Dan Ives?
Yeah, probably.
Like about Palantir.
Probably, because I mean, if you think of Palantir on YouTube, I think he's a number one Palantir guy, right? Because I interviewed Amit and I asked him that exact same question. I was like, why do you invest in all these shit stocks? And he had a pretty good answer, I felt, at least. So I gave him a pass, and it was just like, he's like, I'm young, I'm in my 20s. It's like I can invest into these speculative plays that I truly believe in. I truly do. I think they can, 5x, 10x. And if I'm wrong 10 years down the line or 15 years down the line, I'll be in my 30s, and I could just start over. No big deal.
Ooh, I disagree with that though.
So, but I mean, if you're going to take risks, take them while you're young versus when you're older. Like me, I have a family. I can't sit here and put my life savings in SoFi or Palantir.
But think about the compounding interest you lose from your 20s versus
you do. I agree. And it's not my trading style, but I understand his mindset is my point.
Right. Now, and to be honest, in when I ever watch like finance junkies, Amit's more or less like the moderator, it feels like. He's not really the guy that drives it. I enjoy listening to Chris a bit. It's kind of like I mean, he's got some similarities to Fabio in some way. He likes Disney, he likes Truist. It's like listening to a little Fabio over there. That's all.
I tune in every once in a while when I catch him. The finance junkies. I have no issues with. I have no issues with Amit. I don't agree with his investing style.
Yeah,
I don't agree with his thesis on certain things. Me and him will never see eye to eye on Palantir, but that's for specific reasons. Because I actually know what Palantir does, so I will never invest into Palantir. I don't care how great the company gets, unless they stop taking money from the government and stop doing the government contract stuff. I'll never touch Palantir. But I get what he's doing, and he's like, he created a niche. He found his group of people who are interested in SoFi, and Palantir and Tesla, and that's just the audience he goes after over and over and over. Hence the reason why he probably got Dan Ives to sit down and have a conversation with him.
Yeah, my only issue with that is that and like I said, I listen to them, don't have a problem. But I think
listen, say whatever you want. Don't feel like you can't say what you want, because I'm cool with those guys. It doesn't matter. Listen, Fabio hates Tom Nash. I get along with Tom Nash. I would never take any advice from Tom Nash. but I think he's a cool guy. I get along with him.
Tom Nash started the year-to-date bros. He is the OG year-to-date bro.
Oh, is he? Really?
Yeah.
Oh my gosh. Let's pull up his Twitter. Send me his Twitter.
Oh.
But and he's also, so he talks about long-term investing, and he'll be like, oh, look at my club, and it shows a 1 month return. He's like, oh yeah, if you're a long-term investor, you can get returns like these. I'm like, dude, why are you showing the 1 month and talking about long-term investing?
You gotta show, like, you have to have a track record 2, 3, 4 years. Yeah. The thing is, I think a lot of these people are afraid to show what really happened in 2022 and 2021. Because a lot of people lost money. Like when people ask me, like, it's like, oh, so you trade? I was like, yeah, dude, as a hobby. I have a 9 to 5, but I don't do it for a living anymore. And when they're like, well, are you successful? Are you a successful trader? Well, not really. Trading's hard. 95% of people lose. I've had good months. I've had bad months. I'm very honest about it. But people don't want to hear that. They want to hear, yeah, man, I made 8K today, but I ignore the fact that I lost 20K the day prior. It's like they don't want to hear that. It's a marketing tactic, and it's so frustrating because when the folks who are honest, they don't get the traction that I believe that they deserve.
Right. No, and I think too, like, and it sounds like for you, like the trading, if you make money, it's nice, but it's also a hobby for you.
Yeah.
And that's very different than saying,
to be
like, buy
clear,
my course
I did
pro.
it. I learned it, and I did it for 6 months. I didn't have a job, but I also have income from the government that comes in every month. I'm retired essentially, so I was always okay. My bills and stuff were taken care of. I did trade for 6 months, and I was good at it, but it was like it's highly stressful, and I have a family to take care of, so I couldn't afford to lose a lot of money. I need to make X, Y, and Z every single day. If I didn't make it, I would force myself to go trade. Sometimes I would backfire. I had maybe out of 6 months, one red month, but there was a lot of months I just maybe ended a month like $200 up or $300 up. That's not good if you really think about it. It's not good.
It's
yeah. But it was once but I also switched my strategies for like the past almost a year now. I just been doing cash secure puts, cover calls, and the vertical spreads, and I have been doing perfectly fine with that. I am happy with my $300 to $500 a week. I buy shares with it, and that's it. I don't do all the crazy trading stuff, 0 days. I don't do any of that stuff anymore.
This is apparently in his newest video.
Jeremy said in his recent video he's going to become a hedge fund manager. It is his video he released today. He said he's just waiting for his 10-year record.
Yeah, that's a good point. Hasn't he been investing since 2008? Doesn't he have his good points?
Well, we already know he can't count, by the way. That's kind of like the point of the criticism. Like his math is very frequently off. His spelling is very frequently off.
So he's been on YouTube for 10 years.
The thing is, he won't attract institutional money because he's too unsophisticated. He's just only going to attract low-hanging fruit, scamming people money.
I mean, me Kevin did it, right? Isn't his my PP or whatever it's called? Isn't that like up year to date? Pretty. I mean, his stuff's been performing pretty well because of Tesla, right?
I assume so. He kind of said like,
yeah, 51%. Like, I mean, go to 1 year, 20%. The guy's winning right now.
Let me see. What is my year performance? I don't even know my year performance.
It's because he's heavy in Tesla, and Tesla had a massive run after it went down to like close to $100.
I'm still 68.
Go to his go to the portfolio. Like, what's inside of his what's he holding? What's his holdings?
Let's go.
You gotta go to Yahoo, probably Yahoo Finance or something, right?
No, just go to PP stock. And then here.
Holdings there. There you go. And the market cap's pretty small too, isn't it?
Top 10 holdings: Tesla, Enphase, Apple, Nvidia, Trade Desk, Intel, Advanced Micro.
Oh, so yeah, he got all the shit that ran except Enphase. Enphase completely sold off. Apple's selling off now. Tesla 22, yeah. So Tesla's been running like crazy. Trade Desk, I think that's been running as well. Intel finally had a good quarter, so that's been up as well. AMD's been running. What's that one? Ubiquity?
I've never.
Ubiquity?
No, I don't even know what that is. ASML, that one's did pretty well too, and TSM. Yeah, so he's very heavy in semiconductors and chips pretty much for the most part, and a kind of an advertising company in Tesla. So he's actually doing pretty good right now.
Mm-hmm.
Not very diversified.
Yeah.
Here,
yeah,
we'll actually.
I feel like at one point he even said like, go ahead. Sorry, I was dropping.
I'm gonna ask this guy.
He said at one point.
Oh, his market cap is. How much is market cap? Is that 650? Is that 653 million or billion? I can't tell. Go up. right there, is that weighted? I need
Weighted
to
market cap 653 billion. So he's skewed towards large cap.
No, he is. Okay, because I don't have my glasses. All right. Okay. Yeah, I mean, he's performing very well right now. Were you trying to compare it, Fabio?
No. I wasn't trying to compare. I was just bringing it up. So, I mean, on the 1 year, it's up 28%, which I think is performing better than the indices. But the thing is, that's only comparing it from November, which is when it started. So it's not really 1 year. But they want, so blah, blah, blah. Michael wants us to show this part of the video just to have a quick laugh. It's at 17 minutes. We'll get there. Apparently where he says he's going to be a hedge fund manager. Oh, I got to make sure. Hold on, that my StreamYard is sharing. Share screen, Chrome tab. I just sold 2 stocks. There we go.
And you believe in for the long term. So whenever I show my things like that and what I'm up to, it's mainly just like educating everybody. Like, this is how I run a portfolio. Somebody that's been doing this for a long time, 15 years now at this point in time, right? This is how I build up a portfolio. It's how I diversify my portfolio, my funds around, right? And so that's my stance on that. Someday I will be a hedge fund manager and I'll go that route. I'm probably still about 5 years away from that, to be honest.
Oh, wait, hold on.
I'm waiting on.
Pause it. There, your 5-year return. There you go.
So there's a problem, though. Strongman identified this properly.
What is it?
So if you transfer positions out of an account, it changes that figure.
Yo, Jeremy must be here because he just killed Mark. Oh, man.
We lost signal from him.
Yeah,
but we can kind of pencil out what the returns are, because if his portfolio was, unless it's in the tens of millions, losing $1 million is quite significant. Tesla was too small to have that sort of effect. I don't know what put in his head.
Well, the other thing though is it's time weighted rate of return. So it doesn't matter if Tesla was 100% of his portfolio in 2019. It doesn't. If he gets a $10 million portfolio, I don't think it's not going to like adjust that percentage as much as you think. Right? Isn't that how time weighted works?
True.
It's about.
There you go. Sorry, my computer died there.
No worries. I just want to say, and I'll probably hop off here pretty soon, but
Yeah,
I hope he becomes a hedge fund manager, because I would love to see those investor decks and letters, the investor letters and like the presentations on why you should use him. Like you have like all these like IB guys who like have these like professional looking, like PowerPoints or whatever, and his is like a drawing on a Yahoo Finance chart.
Just drawing, like just little drawings. But what did you guys say? I'm sorry, my computer cut off when you were saying there's only one problem. What's the problem?
The big problem is exactly what Slurpees is saying. So the way you can change this, you can manipulate returns in an account. Strongman's pointed this out multiple times. If you transfer out positions, you don't sell the position, you transfer the position from one account to another account, the gain and loss is transferred out with it.
Oh, good catch. I did not know that, because I know some brokerages, if you deposit money, it shows as performance.
Yeah,
as well.
no, there's more. It's a little bit more nefarious way. It's a lot more work though, because it's kind of annoying to transfer positions between accounts. At least if I were to try to do that with my broker, that'd be annoying, because you gotta. I think there's paperwork on. At least there was when I transferred shares over from my personal holdings to one of my companies. I make it sound like I have a bunch. It's to Capital Mindset. Then it was like a bunch of paperwork, but that could just be because it was a personal to a business account. So that might have been why there was a lot of paperwork. But I've never really had the need, so I don't know if there's a lot of effort that goes into transferring between personal accounts within the same broker. I know that it's a bit of a process if you're going from example, because I did do this when I had to move stuff over from Interactive Brokers over to Merrill. But he's using it all on Fidelity. So I don't know if I never tried it on Merrill at least, but I don't know about Fidelity. So, but if you do that, it moves, it transfers over the gains and the losses. So you can just transfer out the losses little by little and don't sell it. You transfer it out and it moves that number up.
Yeah. Because people should ask him when they interview him. And that's the thing. I wish people would ask like the hard questions like, hey, do you make more money trading or selling courses?
Oh, 100% he's made more money selling courses.
Of course. But I just want to see if these people will be honest about it. You know, that's the thing. And I also want like 24% as a active portfolio manager, like what he's doing. Is that considered good?
That's considered very good.
Is it? Okay. At 24%? Okay.
Mm-hmm. That's not considered good. That's considered very good.
Okay.
But yeah, because if you're saying 5-year compound rate of return for the S&P 500 or time weighted return for the S&P 500 is 12.2, you're coming in at double the market. That's considered very good. If that's actually a return over that period of time, you're doing fairly well. If you're doing a couple 100 basis points above market, it's considered good. 100 basis point, couple percentage points above market.
Oh, he wants to be a hedge fund manager. That's why he's going short Dow. He wants to run a long short fund.
Yeah, I don't think he knows that hedge funds go.
Andrew, he's like, I just saw his brain. Oh,
it's like it's all coming together.
Yeah, this is interesting. This space. Listen, these guys will never go anywhere. That's the thing. They will continue to grow. Meet Kevin. I think Echoes has dropped a video on Meet Kevin, and he's been really good for breaking down people's YouTube channels and letting people know they're dying. So I know Meet Kevin's numbers are going down significantly compared to where he was before. But when the bull market takes off, the numbers start going up. Like, how many views did he get on here? This video alone.
Well, this is a new video.
So it's still 24K in 8 hours. He'll probably have close to 100 by 2 days or so. So he's still doing relatively good, I guess.
Yeah. No, it still fascinates me how people can watch this.
You see, he comes across like, again, I don't watch his stuff, but he comes across very personable and a likable guy. So maybe that's the thing too.
Yeah.
You know, people buy into when you go on YouTube, you buy into people. You don't really buy into the knowledge, I guess, sometimes, or your real performance. You know, like when I met Meet Kevin, what attracted me to Meet Kevin was his personality initially. He used to harass Grant Cardone. That excited me. And then he became Grant Cardone.
Do you guys hear those city sounds?
Yeah.
Yeah, that's Dallas for you, man.
The city sounds. Yeah, that's what we get for living in the city. So wait, Kingdom's coming in here. He wants to make a bet. All right, let's make a bet. From here to the end of 2024.
Yes, please bring in Kingdom so people know we're not the same person.
If he wants to come on. But by the way, Andrew, I know it's a crazy time for you right now. At any point you need to leave, I won't hold it against you.
Okay.
Yeah, I'm about to flip. Jesus, 1:30. I'm about to leave soon too. Andrew, where do you live? Like, are you?
No. I'm right outside of El Paso.
Oh, okay.
So I'm actually mountain, but it's still like past my bedtime. So
what is a Lizzo shirt? I'm not.
It's a shirt that's like 18 sizes too big for you.
Damn.
Lizzo.
Did they even make shirts that way? Because I'm an XL.
You know who Lizzo is?
No.
Oh no! You don't know who Lizzo is? Are you serious?
No. I'm on.
Do me a favor. Go to my political channel after this and just watch my fat activism video.
So you know the Lakers game, like the famous Lakers game where she like did the dance where you could see like her bottom.
No.
Do you, Mark?
I don't know about the dance, but her read popped out. Or you mean her gut popped out?
No, I thought something popped out. I thought it was the back. My wife was at a Lakers game. She said she got like thrown out of the game because like there was they were dancing and then went to Lizzo, and she like turned around and it was just like her whole butt was hanging out there.
Oh yeah. She likes to like twerk and stuff. I find it baffling how this country is just like accepting these bad habits as acceptance. It's really weird. Like we lack accountability these days. She is so disgustingly overweight. She's great. She's very talented, but it's just to sit there and say that it's okay for her to be like 300 some pounds and she's just fine. Like, stop lying. Stop lying. She's clearly going to die
Is she the one that
from
was
diabetes or a heart attack or something.
Was it her or was it someone else that says it's just as hard to get this heavy like by fat as it is by working out?
Yeah, I think that was her.
I
think that was her. Yeah, because she swears that it's her genes that make her fat. Her genes, not the fact that she eats like 10 burgers a day.
Well, and like I'm sure there's something to that it can contribute to it, but I mean, at the end of the day, you have to take responsibility for your life.
She's big, and I don't care what anybody says. If you ask any fat and overweight person if they had ability to be skinny or fat with a snap of a finger, every single one of them is going to choose skinny. No one's gonna be like, "No, I love the way I am." You say that right now because you're overweight. I'm not trying to be mean. It's just a fucking fact.
Everyone's trying to explain.
No, I think you're right.
Chat.
I'm gonna head up with the one thing I wanted to say. Speaking of like the fat, I don't know what you call it, like the fat community or the fat activist community. I like how they got mad at Adele for getting in shape.
Yeah, that's what I'm saying.
Like Adele gets in shape, and they're like, "How dare you?"
Same thing. Remember Sam Smith? Like he lost a bunch of weight, got shit on, gained it back, and now it's takes off his clothes. It's gross.
I've never seen this person in my entire life.
Oh, her music's actually, I like her music, but you've never seen her? You should put up a YouTube video. She likes
I'm actually so happy that I'm sheltered from pop culture.
Yeah, no, she's the thing is, she's got a nice face, but she's way overweight. And then she's on her Instagram. She likes to be half naked, and it's just so gross.
Oh, whoa, wait! Why are you choosing these two companies? Whoa, what do you think this is? A REIT that's already rallied or started its rally? Very interesting choice.
Would you look at total return?
I guess it'd have to be total return, but like it's not really like a good setup because they're completely different. And KRC didn't get like that cheap. I mean, at the very lows, it got to 25. Estimate fair values probably closer to like 40 something, 50, given all concerns, etc. So it's kind of already getting on its way there. So I don't even think it'd last till like 2024, if you ask me, because till end of 2024. So no, I'd have to, if you want Paycom as your champion, I have to pick something with the long runway. So I think we can keep it to the same bet, similar to CrowdStrike versus Fortinet, Amazon versus Etsy.
It's a Paylocity.
That's what I'm saying. Paylocity would make sense. Like KRC and Paycom, you're just throwing in like REIT risk, like because completely different things can happen. That's not a test of who's chosen the higher quality business. And by the way, I can't take credit for Paylocity. Don't think for a second. It has to be Andrew's credit.
Well, what's it in Game of Thrones where they duel to see who's right and then they choose a champion?
Yeah, so I have to choose a I have to choose a champion. I choose Andrew, and Andrew's going to choose Paylocity, so Paylocity can go in against your Paycom, because then that's fair, and then Andrew gets the credit because he deserves the credit for finding it. And then you get to use Paycom, which I guess what you want to be your champion. But indirectly, that's a bet with me.
But Paycom, it just dumped almost 22% this week.
Yeah.
And KRC, I'm not familiar with neither one of these. And
No, KRC is an office REIT. Like it's completely different kind of business. So it's like a bunch of things can occur if you pick two different companies from completely different business lines. Like, what if you're going through a cyclical downturn in one of the business lines? It's like it's not really a test if you've picked or chosen a good or bad business. Could be the timing is off. But if you pick two competitors, right, you have supposedly the same market forces behind them both. You're just seeing, okay, which horse wins this race? They're both competing against each other.
Mm-hmm. So it's like, Tesla against NVIDIA. It makes sense.
Not Tesla against NVIDIA. I know.
I'm kidding.
That's funny. I know.
Okay. No, but I'm kidding. I'm kidding.
But it would be doing KRC versus Paycom is like Tesla versus NVIDIA.
Got you.
Like, the car market takes a dump. That's not really Tesla's specific fault. That's just the markets.
I feel like any better. It'd be like a Berkshire Hathaway versus NVIDIA. It's just like these two things that are so different from each other. It's like,
yeah, you could do like, a good example is like you want to do like asset managers. You go like KKR versus Blackstone, KKR versus Brookfield. Another good competition stock setup would be BlackRock versus State Street. Shout out to you, Fuhat. Throw in Apollo versus KKR. I don't know, but yeah, you get the point. So it's two companies within the same space that they both should be affected by any macro or sector related issues, and then you're just fighting over who picked the best. Fuhat, BX versus BLK, not a good comparison, really.
He loves BlackRock.
Not the worst, but I wouldn't put them too close. So yeah, that would work. That would work if we did Paylocity versus Paycom.
Fuhat, my man.
Did
you just say you can't do Apollo versus KKR because Apollo has insurance?
KKR has insurance.
I know. That's what. Fuhat, come on.
Oh, he's saying, Fabio Kingdom is saying, let him in. Is he in the background?
I'm gonna tap out and I'm gonna tap in Kingdom.
It's nice to meet you, Andrew. I'm also gonna be leaving here, so it's nice to meet you, man. So hopefully do this again. It was a joy.
Oh, for sure. Same. Let's have a good one.
All right. Now people will not say that you're Kingdom.
I know. Finally, can we? Where's he at?
He'll be on in a second. I just sent him the link.
Oh.
I had no idea who this Lizzo person is. But anyways, we didn't even get to the defense contractors. But the defense contractors, I guess, we'll focus that on another video. Gives me more reason to do more content or more live streams.
Yeah. No, seriously. When you're done, I'm gonna text you over my political channel, and I covered fact activism, and I went down the history of it and Lizzo. It's pretty entertaining.
I can't believe I've never heard of that.
Yeah, you probably heard her song before. She's got a few popular songs, and she's like, dude, for a big girl, she's amazing. See,
what is this?
I am not Kingdom. Just because of light skin and bald.
Kingdom, where are you?
Testing. Where is this?
Wait, are you doing this for the memes? Like, what is going on?
I'm on my bed. What?
Why are you in your bed in your blanket?
Yeah, why not? Oh man, bro, it's like 1 a.m. I'm gonna sleep in like, I don't know, 30 minutes, something. So yeah.
Sam is gonna have a field day. You know that, right?
Yeah, that's fair play.
He's gonna Photoshop like harems around you.
It's probably gonna be a bunch of men, isn't it?
Oh, male harems maybe.
It'll probably be
probably male harems.
It'll probably be a bunch of Fuhats or something.
Well, you don't know this, but I took a gym picture and he photoshopped me in front of that. You know that picture with the bunch of black guys behind you.
Bro, I'm so annoyed by that thing, man. Holy.
Well, yeah,
that meme is on everything now. Oh my god.
That meme.
Yeah. Hey yo, but like I did the double speed on the stream, right? Just to kind of see if you called me out, because I had a feeling it was gonna happen, and you did. Freaking guy, man. KRC. But
hey, whoa, hey! You went bullish on KRC. You went bullish.
Oh yeah, see, I'm bullish. See, I'm bullish. I'm actually the one with the video.
Yeah, I don't have a video. You're right. Yeah,
no.
that is true. I've been capping.
Yeah. No. But truth be told, when I was making the video, I was coughing up blood. I was like, oh, gotta be like neutral on this one. Ugh. But it's whatever.
I know, yeah, because of after all the stuff he said.
Hey,
But-
YouTube Kingdom is different from Discord Kingdom, all right?
Yeah.
What's the difference?
Yeah, YouTube Kingdom, I have to be a bit more not politically correct, just more neutral. I can't pick a side. I have to like make sure I kind of
YouTube Kingdom would say that Disney is a company that is doing interesting things. That's how he put it.
exactly.
And then Discord Kingdom would say something very
anti-liberal.
cancelable.
Yeah, exactly.
Got you.
Hey, Mark, I heard you got a political channel now, or?
Yeah, man. Honestly, that's why I don't post as much on Uncultured. I started to try to like introduce the political stuff. I don't know if you follow my channel or not, but earlier this year I kind of introduced a little bit of political stuff because my plan was always to start another channel. And well, not to start another channel, I was planning to do more political stuff. Instead, I just started a whole separate channel because my audience does not like my thoughts on politics. So I started a whole separate channel, and it's completely scripted, satirical, comedic related, under 8 minutes most of the time. And I only got a few videos out, but I take about a week to do them, and I drop them, and I'm having a lot more fun doing that than the finance stuff.
Yeah, man. Like, bro, I wanted to make a politics channel so badly, but I can't. I know I can't. I know if I do, I'm gonna get fired from my workplace. It's gonna happen.
That was my concern as well. But most
like Fabio, because Fabio has heard some things I've said that's wild. Wild.
No. I think the only wild stuff you've said is to your arch nemesis, Fuhat. Those are the only like super wild things I've heard from you. You said.
Like the thing with him, it's like it's forgive and forget, right? Like I don't care.
Fuhat, say in the chat, have you forgiven?
No. He's blocked, so like I can't see it.
You blocked Fuhat? Why?
Of course. No, because I'm literally taking those words, forgive and forget.
I think
forgive and forget. All right, like that's the motto I live by. If I can't stand someone, forgive and forget. It's all good. Boom, done. And then literally forget. Like God.
I love Fuhat. I remember everyone thought he was a troll initially, and everyone thought he was very strange until he started coming on the stream, and I became kind of like a part of Capital Mindset and your guys' little group.
JC, I can't bring Fuhat on. If I bring Fuhat on, I'd have to private the stream.
Probably, yeah.
You're gonna get that. Is that get that? You're making
Fuhat will start cursing every
man?
Other sentence, and it won't be good.
Yeah. Why are you making enemies, Kingdom? What's going on, man? Like,
no, it's not. I think it's just more so. I'm pretty opinionated. Something that I'm working on, trying to make sure I'm a bit more filtered now. But I guess with those opinions, that definitely comes. Whole bag of worms, but I think for the most part, I'm pretty chill for the most part. Some people are going to disagree. You're not going to make everyone like you. And that's perfectly fine.
Yeah. Honestly, man, I don't know how old you are, but like,
oh, dude, I look like I'm 80, but I'm freaking 25, man. Holy hell.
Oh, wow. Yeah. You're really young.
Yeah, man.
Mark, what a reaction.
Yeah, Mark's like, what the hell?
Like, oh, wow.
This is like, I definitely thought you were older.
No, bro. I've even with hair, like in high school, everyone's like, aren't you like 20? And it's just always been the case, man. I just look older. So
water, man. You gotta drink that water, man. Gotta find that.
I drink water, man.
You cocoa butter, man. I don't know what it is.
No. I'll look crusty forever. It's all good, bro. It's all good. But now, what's wrong with KRC and Paycom? Come on, man.
Okay, because you can't put two companies that are in completely different sectors. So, like,
why not? Why not, bro?
Hypothetically, what happens if there's like a real estate crash? Is that KRC's fault, or is that just like the market in the cycle that we're in real estate? Or we pick two companies that compete against one another, and then that's like a competition of who has chosen the right horse in that race. Because I almost feel like those are two different races.
Wait, but hold on.
KRC,
they're REITs, right? They're REITs.
Yeah, you could say KRC and Alexandria, right? I would say that's a pretty nice one. I don't know why you didn't go with that.
Because
Alexandria could have a good chance, by the way.
No. Alexandria might get a mispricing to have a similar valuation as KRC. That one I'm a bit more intimidated by. So, yeah.
But that would have been a fun one. That would have been 2 REITs. You can do 2 different races. You can do a REIT race, so you can choose a champion among the REITs. And then I don't know why I'd be picking KRC. Actually, it sucks that you're doing that right now after KRC's rallied.
Whoa, you're the one that called me out, all right? And then you just flexing your KRC, and I'm like, okay,
hey,
connect.
I have to. There was another one. You want? Okay, you want to know this one? I gotta find I have the clip here.
Oh no, is it Etsy and Amazon?
No.
Oh,
So
thank
God.
God.
It was about Etsy and Amazon, but it was also about Fortinet and CrowdStrike. Because
no.
I thought you were bullish on Sentinel One, and then I was reminded. So it was during the weekly call, Sunday call.
I like the logo, but yeah.
So, but someone corrected me. They're like, "Oh no, he wasn't bullish Sentinel One. He's bullish Fortinet." And I was like, "Oh, okay." So I brought up Fortinet, and then in the middle of the call, I was like, "Oh no, Fortinet's outperformed CrowdStrike. I take back what I said. He's winning here, and it was up by 5%." But then, no. The best part is I laughed maniacally, and then I said, "We'll check in a week." I say it in the clip. This was this Monday, this call. Okay.
I swear to God.
And
then, you got some Venezuelan working in freaking Fortinet, man. Like
this is always the joke is always I have my insiders at the SEC. Let me find the clip. I'll play the clip for everyone here, so you see everyone can laugh along.
Yeah,
because it's just funny. It's just a coincidence.
Yeah, pull up the clip. I'm guessing the conversation between Fortinet. Do you guys like it still, even after the crash? Are you guys still?
Well, no, Fortinet.
I love Fortinet. Yeah, I love Fortinet, man.
Okay.
Fortinet's a good company. CrowdStrike's better, but
CrowdStrike has more potential to grow, I think.
Well, CrowdStrike is just the best at endpoint. Well, Fortinet's not really the best at much. Hold on. Trying to find the.
Listen, Fabio, I'm gonna head out. Kingdom, I'm gonna head out.
Yeah,
guys, thank you for bringing me on. But hey,
no worries, man. It's fun.
Watch our political channel, Half Breed Observer. There you go.
Half Breed Observer.
I'm a half breed, bro. It just is what it is.
Wait, what's your? If you don't mind me asking, what's your
ethnicity?
Yeah.
So I'm German, Algerian, and African American.
Damn. Okay. All right.
Yeah, I grew up. My mom is Algerian and German. She basically looks German. She was born and raised in Germany. My dad is just African American from Virginia, but I was not born in Germany. I was born in the States, but I grew up in Germany. So
okay.
Yeah, German is my first language. So there you go.
Okay.
All right, man. See y'all later. Good night, everybody. Thank you for having me, Fabio. I really appreciate it. I'll talk to y'all later. Peace out.
All right, Sam. See ya. All right, I found the clip. This is too funny. You literally cannot make this up.
Oh no, did I say this?
No. This is me, and I just laugh maniacally.
Oh, okay. Jeez. Oh, man.
So this is the clip from the private call live stream, and so context right before this, you see I have Sentinel One pulled up, CrowdStrike, Fortinet. I already pulled up Fortinet. I proceeded to say, I ate my own words because Fortinet outperformed, and you see it's outperforming CrowdStrike right there. And here I'll play the clip now. But wait, you'll see that. Look at that. All right, we'll revisit this in a week.
Bruh.
I thought for a moment though there. Yeah. So yeah, there you go. I called it. I caused the crash in Fortinet.
You freaking, no, this is good though, because I never had a position. I had a starter position, and it frustrated me. It just kept going up. I'm like, Jesus, I can't justify this, man. I can't do this. But now I am gonna start buying it. I'll probably buy it next week because Paycom also got obliterated, and I'm like, all right, so I guess I'll be buying Paycom this week. So
yeah, what is Paycom at your cost basis, or are you up on Paycom?
Bro, I was up like 20% on Paycom. Earnings came out, boom, all the gains gone. But Yeah, cost basis was 302.83, something like that. So now it's below cost basis now. Or yeah, I'm at a loss now. 3-4%, something like that. So yeah, bro, I'm a fraud, exposed, all that. But yeah, I'm getting really excited with this. I think there may be another leg lower for these payroll companies, but these businesses tend to be pretty resilient. ADP obviously, especially, but Paycom's pretty solid. Paylocity, Paycor's pretty trash. I don't know if Gondar said that as well.
Yeah. One of the part of the pitch is we were discussing all of the competitors, but Paycor, Paychecks,
Yeah,
Paycor is specifically the trashiest though.
trashiest. Paychecks is good. It's just they don't know how to allocate capital correctly. So like they're trying to compete with ADP with like dividends, like same yield, all that, and they just aggressively grew the dividends a bit too crazy. So I don't like the way they allocate their capital, but Paychecks is fine too. It's just I don't know. It's pretty mature, just like ADP. But yeah, moving forward, I think Paycom will do great. Paylocity. What was
So
the other one?
that's you see that's a good competition. Paylocity versus Paycom.
Yeah, but
Because
like I don't
it's gonna be a tight
want.
race.
Yeah, that's a tight race. At least
Well,
with
they're also heavily correlated to each other.
Paycom KRC, that's like easy money for me. Then you got to wear the Lizzo shirt. But like,
No, because the thing is, KRC's thesis might realize itself next year. I might wish that I took that bet actually, because it could be that Paycom, Paylocity, you have a weak 2023, very weak 2024, but real estate revalues, and we get to that. Okay, the premium players, they do well. The terrible players, they fall out. So you might get that advantage. So I might regret that, but it's just not, it's too much unknown, right? To take two different horses in two different races.
No, I get it. It's just it would be more chaotic that way, right? That's why. That's why. But all right, we could do Paylocity and Paycom. That's
because
fine.
that's akin to Fortinet versus Crowd, which I think actually that was also more of a Andrew bet, but I agreed with Andrew. Our bet was the Etsy and Amazon.
Yeah.
I had to fight you to get bullish on Amazon. I remember that.
And I did get bullish.
You.
And
you
I
did get bullish. You did get bullish.
I did get bullish, and then I sold a bit early because my conviction simply wasn't there. I'm also invested in SCHG and S&P 500, so I'm like, I'm fighting with that and saying, do I really need this big tech exposure, or am I kind of cool with SCHG and VOO? Like, it was definitely a struggle for me, right? That 70% index. Am I overlapping myself a bit by having this separately? And the answer I came with was yes. I think I'm better off just kind of focusing on more smaller, faster growing companies than literally buying the largest companies on the planet, right? So, but for you, it makes sense, right? 100% individual stocks, all that. But like for me, it's like completely different situation, right? So,
but I mean, there might come a time in the future, far future, where I decide to just index depending on the amount of wealth it gets to. But I don't foresee that. I mean, I also have past bias that's kind of driving me, so it might be misguided. But for now, for the time being, it seems like I'm still going to go in that direction. Yeah. I mean, what's your percentage allocation individual stocks right now?
It's at 17.5%. I want to always keep it at 15, but Paycom dropped so hard. I was like, all right, let me break my rule just a tiny bit. But usually I want to keep it at 15%, but it is at 17.5 right now.
See,
yeah.
I don't, well, I mean, to each their own, whatever you're comfortable with percentages wise and everything, but I usually don't set percentages for anything. Realistically, like, well, scratch that. I do that, for example, when I consider like what cash savings I want for like total net worth, etc. And so I guess also I'll kind of throw this into the audience here. For updates on members who are asking about the cash account, so the second account that's going to show up on the membership, I had a call with the bank today, and there was one change I had to make to one of the documents. Again, they make it so difficult for business accounts. I did that. So we'll see by Monday or Tuesday, it should be open. I'll transfer the cash in, and then we'll start showing the cash management account as well. But anyways, so besides that, I don't really do that. I just basically go off of what is the best deal at the time, and I'll just go for that. I'll just be buying that. And there's no real, I mean, I have like set limits of my exposure. For example, I say, oh, I don't want more than, I'm not really comfortable more than that, but that's based off of like my confidence level. It's not necessarily like, oh, I have a plan. This is how much I want to this stock for just that percentage. It's just, again, predicated on, confidence levels, but it's not a fixed number. So for example, I don't think I want to make KRC put, I don't care if KRC gets to that, but I don't want to put 10% of my portfolio value in KRC. No. I think right now it's still sitting at like 3. Now I think now it's risen close to 3.5%, maybe 4, something like that. And then Dropbox, for example, is another one I just thought of. I would never. I don't have the conviction to make that 20 or 10 or 6%. It's fine where it is, but yeah. 70%.
Yeah, it just depends on the person. For me, right? For a guy that wants to eventually, because I manage not only my own money, but my parents, my siblings. So like for me, it just, there's no way I could do individual stocks for all of them. So I'm just like, all right, no. Index for all of you. And then for me, I'll keep that 70% as well. So to each to their own, right? If you're managing only your money, then yeah, of course, then maybe you want to have a higher individual stock. But like my circumstance is like really different in that regard. I'd rather keep it less stressful and then just kind of primarily just be indexes. But still, individual stocks, 15. It's a little bit higher now. I do want to drop it back down to 15. I've been keeping that rule for like 4 years now, and I'm pretty happy with that. I like the consistency I've been having with that. But it also, like I can have a more concentrated portfolio. Like I can then, because it's harder to keep track of like 20, 30 companies for me. So I rather keep track of like maybe like 10 companies, something like that at any given period. 20, 30 just gets a bit much for me. Like, I don't know, Fabi, if you've seen some of these smaller dividend channels where like they have like $2,000 and they have like 50 stocks. And I'm like, bro, what are you doing? Like, what's going on here? Like, you got $2,000. Like, what's like have like maybe 1 or 2. I don't know. But
I do see YouTube recommending me. I don't click on them though, but I have noticed that there's an uptick in small channel recommendations for. Usually, it's like the thumbnail is not even a thumbnail; it's just like a Robinhood account. It's like $2,000 account, which I'm not trying to belittle anyone. By the way,
No,
it
no.
makes it sound like I am,
No.
but if you have only $2,000 in your portfolio and the fact that you're investing, good for you. But there's something to be said. I don't know about just the quantity of it makes me, I think you're alluding to, it's making you nervous. A lot of retail. Is that what you're alluding to with it, or?
No, it's just more so like people need to kind of look at themselves in the mirror and be like have some self-reflection, be like, okay, where am I at with life? Am I doing the best of my abilities to put myself in a good position, right? So flexing 2K. Oh, flexing on.
I just saw that.
We all know you're like, vice president of Venezuela. We all know, bro. So
Vice
president. I don't know how the political structures there, but I don't know. But I think like for most people, focusing on the income, focusing on making sure like, you got a good budget, buying a house, stuff like that. The investing thing comes after, in my opinion, not first. Like a lot of people, they put investing first, everything else second. I'm the complete opposite of that. I focus on my job first, and then I focus on actually budgeting, job, all that. And then investing is the last thing I focus on. And with that, I'd rather just index. I just don't have the time, but I still enjoy researching companies and I still want to be engaged in some way. So I keep it at 15% allocation because I do genuinely enjoy researching companies. And I think I do an okay job of it. When I see some people comparing like me to you, it's like, dude, that's not fair. That's not fair at all. I'm just a blue collar worker. I'm not really, in that same regard as you, right? But it is what it is.
Well, with I was going to ask you my follow-up question. So your career, when you see yourself like 10 years down the line, is it going to get a lot busier for you, or is it going to be about the same?
Oh yeah, it's gonna get a lot busier. Yeah.
You got to imagine, right? Because you're going to move up the chain at the
Yeah.
plant, and then what would that entail? What's the top position?
President, which I will not get there, but I think I'm gonna get to unit leader, and that's gonna be a lot. You're working 60 hours, and it's a
I'm guessing the
week,
pay is pretty good though.
bro. It's good. Yeah, it's good. I want to get there. So, just focusing on the skills at the moment. There's certain things I got to take, and you
Are
gotta
we
do
allowed to
certain.
know the range? It's not like you're telling us your current pay. It's like that's like a future pay.
No, I'd rather not. Yeah.
So it's significant, and you don't live. Do you live in an expensive area?
It's Canada, so yeah, it's expensive. Yeah,
Oh yeah,
in
that's
my
right,
area, it is
everywhere.
expensive. Yeah, it's
Everywhere.
like, yeah, I won't even say the house price, but yeah, it's expensive. Yeah, it's only been expensive the last couple of years, so I'll say that because our real estate has been just insane the last 5 years. But yeah, it's been insane. Like, have you seen that chart? Income to real estate for Canada? Yeah.
You guys are definitely gonna. I don't understand it. I mean, but the thing is, you guys keep having more and more migrants as a percentage of your population. In fact,
Yes.
funny enough, it's Indians that is like
Oh,
a
I thought
huge
it was
portion.
Chinese.
No, I think Indians overtook them recently. I was listening to
damn.
some Canadian break down the real estate market in Canada, and when I was on a run, I wasn't watching the charts. I was running, but he was talking a lot about the Indian migration. So maybe I missed the part where he said Chinese migration was the highest, but
Yeah.
it seemed like
Well,
he was focused on the Indian migration.
no, that makes sense. Yeah, if he's talking about like Ontario, stuff like that, because I'm thinking of Vancouver, like British Columbia, China's just dominant over there. And again, this is why I would love a political channel, but like I know people won't like it. I know I'll get fired, but I won't say anything too controversial right now. It basically what Canada needs
Oh
to
no,
do.
you can. I'm not cancelable.
Hey, bro. I've seen some really
He just
down.
drops the word on stream.
No. I've seen
And
some
Luke.
down to earth people get banned for the goofiest thing. So I'm gonna be really careful what I say now. So in general, it's all about supply and demand. We don't have the infrastructure to help the current Canadians, and we're bringing in new immigrants. Not a lot of them are skilled workers, and they're also just buying whatever, right? They don't care. They got already some money, disposable money that they saved back home. They're coming over. They don't care about the real estate price, what it is. They're just going to buy whatever. So they'll buy at the top or whatever. Like even if the house is expensive, 20% doesn't matter to them. They want a place to live. So we don't have the infrastructure. We're bringing in more people. They're also then driving up the price. And the government, you know what they did? They're like, yeah, let's just have a new tax sheltered account. First home savings account, whatever that they created. That's their solution, even though most Canadians are living paycheck to paycheck. So that's a great idea. No one's going to have the money to save into that new tax sheltered account. So it makes no sense whatsoever.
But for you, that's probably going to be pretty good, right?
Yeah, but like it's cringe. It's like I'm just like, bro, this is not how you fix the solution. And I don't want to overpay for real estate myself. That's why I've been looking at Alberta. Like if you're a Canadian watching this, look at Alberta. Alberta's a good a province to go into.
See, okay, because that's an interesting part that I talk about to people. It's like it's going to be interesting how the culture in Canada shifts. Because, for example, I mean, it's no secret we've had that conversation between us before. How within the Indian culture, it's very common for you to live at home.
Yes,
it's very common, and the same thing in the Latino culture. It's very common. In fact, one of my siblings, who's not too much younger than me, still lives at home, and he's making money, but he saves everything. And so when he decides to move out, he's gonna have a very nice nest egg, and then some of his peers, they moved out when they were 18, 19, 20. They won't have nearly as much capital as he will. In fact, they'll probably be in debt to some degree as well. But so the advantage is just not, it's night and day. So it's going to be interesting to see if the culture in Canada begins to shift. Because one other thing though, because there's some context to why that happens in Latin America. People don't know this. So if you want to buy a house in most countries in Latin America, you know what the down payment is?
For the States?
No. So Latin America, so like Brazil, take Brazil,
Oh.
for example. The down payment on a residential property will be upwards of 50%. United States, you need 3%, 3.5 FHA, and then 20% if you are an investment property. But if you want to live in that property, 3%, 3.5% if you want to go FHA, first time home buyer. Brazil, upwards of 50%. So take that into consideration, how that shapes culture. Oh, now that makes sense. You got to live at home. You got to save. That's the only way you're going to be able to move out, unless you want to rent. But if you want to buy, that's what you're going to have to do. Because I mean, if you think about it, if you eliminate rent or minimize it, let's say you still pay your parents some rent, you're stacking a fat amount of cash. Because I think, what is the percentage expense in Canada for housing? You said the statistics were really high.
Yeah, like the gap between the income and the real estate. Yeah, it's ridiculous. I don't have the metric on me right now, but bro, the divide is absolutely insane. People say, like, when I see Americans, they're like, oh yeah, but even we can't afford houses. I don't know, bro. It's not Canadian level. It's insane, man. To be fair, it is skewed because most people live between Ontario, British Columbia, Quebec, right? So Montreal primarily. So the big cities are driving up that stat. Because I'm planning on buying some rental properties in Alberta. Bro, they got some great pricing over there. You can buy some nice houses below 300K. So Canadian. So
but
that's
is
a lot
Alberta a
lower.
desirable area?
It's desirable, yeah. Calgary is a very growing city. It's becoming an economic powerhouse over there, and they're not being as reliant on oil as they have been in the past. So,
This is a right-wing area in Canada.
yeah, the coincidence why I like Alberta. But yeah,
As soon as
Alberta.
you said it's the oil area, I know it's the
Yeah.
right-wing side.
I call it the Texas of Canada. So
the Texas of Canada. That's a good way to put it. Yeah, because I mean, you look around here. I'll tell you, Florida got very expensive all of a sudden, extremely expensive. Texas is still very affordable. I'm looking around, and the prices here are just like, condos reasonable to me coming from Florida. Like, I think Miami now is more unaffordable than San Francisco.
Oh,
Yeah.
wow.
Yeah, it's ridiculous. Orlando is not that expensive, but it's expensive now. And Tampa is, I think, a little bit cheaper than Orlando last time I checked, but still expensive. And then you come here to Texas. Texas is a lot more expensive than it used to be, but it's cheaper than Florida. But Florida, on average, besides Miami, is cheaper than California and Texas, especially when you take into consideration taxes.
Yeah, but California's trash. That thing should be like $1,
Oh, yeah. I remember your criticisms as well of KRC about California. Also,
bro, I mean, are they not valid? Are they not valid?
No,
Yeah.
you're right about it, but it's California is still right of Canada. Okay.
That's so true. It's so true.
California is right. Well, they are, except they are on economic issues. They're not on social issues. I think California, well, it's weird to even call it. It's so weird to use just a left and right.
That's true.
Spectrum.
No, that's true.
They are, let's call it, more radical in social issues than Canada is. So take Canada and
actually, no, a
little bit more.
I disagree. I think Canada's more radical on this because you saw those C11 bills. I don't know if you pay attention.
Well, California is limited by basically the government is limited by the current limitations on government. Canada, you guys are a parliamentary system. There's no limits. Parliament dictates everything.
Yeah, man, Trudeau, bro. Anyways, I'm not trying to get politics, but like, bro, this guy's censoring everything. Bro, he's censoring everything. I'm like, bro, what's going on?
You guys don't have freedom of speech. Canada is based off of the British system, and the British system has no Bill of Rights. It was the Magna Carta, but the Magna Carta is a suggestion of rights. It's not a guarantee of rights. You guys technically have no rights. Your rights are United States, in theory, the rights are endowed. So you have them. You're born with them. That's like the philosophy behind the United States system. The parliamentarian system from the UK, rights are bestowed by the state. So technically, yeah, that does work in line with the philosophy of Canada's government setup. So you don't have freedom of speech.
Yeah, it's because I've always said to myself like a couple of times where I'm like, oh yeah, I'll move to the States one day. But then I'm like, no, I'm too much of a pansy. I can't. Guns scare me, bro. I'm scared of guns.
That
so
is
like, yeah.
I feel like that's a misconception because I don't know. I've never. I mean, granted, like if you went to Venezuela, I'd be like, you should be actually afraid. By the way, guns are illegal in Venezuela.
But like they're okay, all right. Well, all right.
Yeah, that's the thing.
Give it to the criminals. Yeah, criminals will be like, oh yeah, we don't need to follow the rules.
Yeah, right. Precisely. So, like in Canada, in going around in Texas, I don't generally walk around having fear, and in Florida too, I don't generally walk around in fear of getting shot.
But you guys got Florida, man. You guys got Florida, man.
No. Okay, if we're being honest, like if I'm walking in a busy area and I know that there's probably like a bunch of people with firearms and they're all openly carrying firearms, I'm probably safer there. I'll feel safer there. If I'm driving through a rough neighborhood at the wrong time, but that's natural. I mean, I'd feel unsafe in any country in their rough neighborhoods at the wrong time. That's the only time I'm like really I would be afraid of, oh, am I going to get shot or something going to happen to me, etc. But the guns in the US are not that bad compared to other countries, and especially if you're in the right neighborhood. Kingdom, you should move to Sugar Land in Houston. Lots of Indians there, very safe. There you go.
Yeah. So if I were to move to the States, it would be Texas. It would be with the Indian communities. Specifically Punjabi, but they're all fine. I'm cool with all the Indians, right? But just North Indian I prefer. But
bruh.
But like, hey, I can't talk to the South Indians, man. I know the way I said it sounded pretty bad, but bro, there's a million languages in India, bro. Like they all speak completely different dialect and everything. I can't talk to the Souths, man. South Indians. So.
Yeah, I'm not too familiar with the breakdown, but South Indian supremacy. So Keitham is from South India.
Oh, is he? Well,
yeah.
North is better, so I don't know what to tell him that. I don't know, bro.
I mean, yeah, probably Texas would be more definitely your vibe, because Florida, you don't like the tropical, right?
I'm fine with the tropical, but Disney's there, isn't it?
Yeah, but Disney's just Orlando. Orlando's the most left city in Florida for sure.
Oh yeah.
Yeah, because Miami has a Republican mayor, and then Tampa skews typically Republican/Democrat, but leans like it's a purple.
Can I say one political term? It's 4 hours in, so can I say it?
Yeah, I don't really care.
Trump 2024. So.
Oh, I'm apolitical in that sense, but
that's all I gotta say. Trump 2024, right? Either him or DeSantis, one of those two. I know some people don't like DeSantis, but like, he clapped Disney. It's great to see. So
yeah, I mean, with that, I'm just an observer. I just watch it unfold. I have fun with it. Okay. I pisses people off when I say this. I think especially kind of Dan, if you're watching, I know it pisses you off when I say this, but I don't vote.
What?
No.
You can you can at least vote independent, or you can vote. No. You can put your own name. Nothing.
No, don't vote. No.
Damn. You gotta vote, man. You gotta vote. You gotta at least vote. Like because even with each party, Democrats or Republican, there's some good apples in there, so you can vote for them at least specifically. You know,
I mean, if I do vote, I'll just do like a vote for like that one guy that doesn't get any votes. I'll vote for me, Kevin. Like, not even gonna lie. The reason why I don't tend to vote is like maybe I have voted before in like local elections, but
yeah,
not
that's what
really
I
like
meant by.
yeah, I don't really care too much about the national ones. So because I try to like just observe it, and especially now, I'm not telling you guys this. You guys should all go vote and have your voice be heard and all that. But I try to, as best as I can, keep like no horse in the game, so to speak, because each one will present an opportunity, and hopefully I'm not like, oh, I love that guy, he can do no wrong, and then I don't profit from it.
Not gonna lie, if I was a Texan, oh boy, you best believe I'm wearing that Trump shirt. I'll be like that one brown guy.
No,
I'm
there's a
just kidding.
lot of them.
No, I'm
There's a
just
lot of
joking. Yeah, no, I'm just joking. But like, yeah, most Indians, most of my relatives that live in the States, they're all Republican.
Yeah, no,
Yeah.
you know the Hispanic community. It's like, I'll tell you the breakdown. It's like, if you're Cuban, odds are you're right leaning. If you're Venezuelan now, odds are you're right leaning. If you're Central American, odds are you're left leaning. Well, depends on which country, but you
Wow,
can usually
that's
predict
interesting.
by the country. Yeah.
So what's the deal with Central? Is it just because the border?
No, it's basically broken down on the lines of countries that went through socialism. The people are sort of scarred. So like Venezuela, socialist nation. Yeah, Venezuelans who flee the country are like, we don't want that. So like, if you actually look at what happened in the recent Spanish election, well, not recent anymore, but back in like 2021 Spanish elections, it was 2022. I think 2021 Spanish elections, or 2020, around there, basically around that time frame. There was originally a strong push from the left, and then the Venezuelan migrants came back and pushed against that, and they ended up losing because the Venezuelan migrant population was hugely against it. The candidates that were running were pro the previous regime and the Chavez regime. So it was a pretty big push. There's a huge city versus rural divide. Austin has a lot. Yeah. So like, I'm not really like a Texan, but the way I see it, the way I understand it is like, Austin, very left-leaning city, a lot of homeless, kind of terribly designed, but not because it's Democrat or whatever. It's just because it wasn't meant to be a big city, and it became a big city. It was meant to be a small town. And so like the highway system's kind of terrible, or like the traffic is terrible. Dallas, dang, I don't know what Dallas, I think, is like middle. It has a mix of everything. I don't know what I actually have to. I'm ignorant of what the local politics really are. Actually, there was a protest the other day out on the street. Funny enough, some vegan protest, but
yeah. So in terms of, you would say you're right leaning, right?
Depends on what country. Depends on what country we're in. Because
you're a proud American, so I'd say you're right leaning, right?
If that's what it takes to define it, yeah. If that's what currently defines,
bro, because here's left. No. Because listen, man.
Yeah.
Anytime any country goes left, it always failed, always. Now Europe is like a slow bleed. like we're seeing what we're like. Europe is absolutely just on this super slow bleed. The euro is gonna collapse. It's gonna be beautiful to see, but I support a lot of European countries. It's just I'm kind of just cringe at them. I'm like, why are you guys helping out these poor European countries that are going bankrupt? Like, I don't know. So I don't get that. Like the whole Greece debacle with the debts with Germany and all that. I'm just like, what's going on here? Why are you guys trying to carry these liabilities, man? It just makes no sense. But
it's geopolitics. It's not so much about the economic stuff.
Yeah, it's a unification, military, all that. Yeah. All the other stuff. But I don't know, economically speaking, like, it just doesn't make sense, right? But not everything is about money. Unification, diversity and love, and all that
Just
nonsense.
tripping people up, seeing you say it.
Yeah, it's frustrating, man. Like, I mean, 4 hours 30 minutes. So I'll say this. Like, for example, Trudeau, he always talked about diversity, but he wore blackface. So yeah, I don't know, bro.
I think like several times too, right?
Yeah, man. Actually, my own people told him to wear it. Like, in one party, like, like a couple of brown people told him, "Hey, yo, you should wear the brown face," so that's what he did. Like, one of the banquet halls.
I'm not one for conspiracy theories, but he looks a lot like young Castro. Not gonna lie.
Bro, have you seen that? You saw that picture then, right?
He-
I believe in it.
the memes.
Bro, I
No,
believe in it.
he looks a lot like I don't
No,
know if he is or isn't, but he
no,
looks a
no,
lot like it.
no. I believe it. I 1000% believe it because you look at Pierre, that guy looks like he enjoys watching other people, He's definitely in the closet watching his wife, Costa. Anyways. Like, I'm just saying, he has the face for it, right? So there's that.
Is Trudeau in trouble in the next election? I don't follow Canadian politics. Is
Here's the unfortunate part. I don't know, because again, conservatives, so people like me, we're a bit more opinionated, more loud, right? So it looks like he's not going to be in, but I don't know. The left wing in Canada, they're very quiet. Very quiet. So this last election, Trudeau was supposed to lose, but he didn't. So I don't know. I think he will win again. I hope he doesn't, but I don't know, man. I'm defeated because I think he's gonna win again. It's gonna suck, but I'm gonna push everyone to vote conservative. But there's only so much I can do, right? Nobody wants to vote up here or in the States, I guess. 50%, I think, votes, right? So
no, we had a huge turnout. Last
what was the
election
turnout?
was I think it was like not historic records, but it was relative to modern history, a record turnout.
Oh wow. Okay.
Biden versus Trump had a lot of people turn out. It
Yeah.
was so I was so motivated. I voted for Biden 7 times. See what I
You're
did there?
joking.
Joke.
You're
That was a
okay.
joke.
Okay.
See,
All right.
see what
I
I
was
did there,
about
though?
to.
That was
I was
pretty funny,
about.
right?
I was about to get triggered. I was like, well, what?
No,
No.
but you get the joke, right? No.
Yeah. There's no way.
Because people, my audience and Strongman's audience used to always think I was like super left leaning, which is always funny. Like unironically, like I think it was like a couple of his followers. I think I remember like the Tyson guys. They were like, just basically like, oh, this liberal is Tesla and probably shops I do shop at Whole Foods now more, but but that doesn't mean anything.
No.
Yeah. Because I don't know. I definitely wouldn't consider myself left of the spectrum in the traditional sense.
It's like, but again, I don't understand. I think the people that are left wing, and this is just that I think they're usually come from a poor family, and they probably just like they feel like they need dependence from the government. Maybe they grew up in a welfare state, something like that. Because literally everyone that's conservative that I met, they're hardworking, right? They want less government intervention. They want to work. They want to pay less taxes. They want to, actually buy land and, be independent, all of that. But while you see people on the left, they love these handouts, man. Maybe I'm generalizing, but I don't know. I really, like, for example, the pension plan, that thing's going bankrupt. I don't know if it's going to be for the States as well, but the pension plan in Canada, that thing's going bankrupt. There's no way that thing survives 2040. No way. So that's why when I talk to a lot of older Canadians too, I'm just telling them, I'm like, you guys got to have a savings. You can't just depend on a pension, man, from the government. That thing is going to go bankrupt. And again, I don't know how the States is structured in that, but Canada.
There's no pension.
Oh, there is no pension.
No, the Social Security is reliant on whatever savings surpluses have compounded plus a current taxpayers.
Oh, so so that system.
It's like a Ponzi scheme.
Okay.
We pay out current recipients with current payers.
Yeah, that's what we have. Yes, that's what we have.
Oh,
as
I
well.
thought you guys have a pension.
Well, our pension is like once you're 65, you got a certain payout.
But
of like
it's paid for with current taxpayers.
yes.
Oh yeah, so it's the same thing. Yeah.
Yeah. Current taxpayers, but it's bro, it's so bad. It's like 13% tax. Well, depending on the province, but 13% tax HST, and then GST is like another 0.5%, and then CPV or whatever it's called. That one's another X amount that they take from your check as well. It's garbage, man. And EI, they take another one as well. Oh man, they take so much.
Can you tell the audience what is the percent that you pay? You don't have to tell dollar figures, but what's the percent you pay in tax?
No, I can't say. No.
You can't say. Oh, it gives away, I guess.
Yeah.
All right. Let me ask it a different way.
Bro, I'm not. I make $1 a day, bro. That's all. That's
No. I was gonna ask then, like, what is the average Canadian paying as a percent of their income in tax?
Ooh,
You have to guess.
it can rougher. I think it's between.
I'm including everything, like all the way down.
Oh, bro, that's
How
like
much
more
do you
than-
keep?
How much you keep? You keep roughly around 65 to 75%. Yeah,
Oh, it's not bad.
that's pretty trash. Because like,
Yeah.
keep in mind everything that you
Oh,
buy is
that's-
also 13. Like, keep in mind everything you buy is also 13% tax. You buy a new car, 13% tax. Everything.
Yeah,
Like,
you guys are getting taxed like the rich get taxed here.
yeah, it's tax on tax. Like, it's like more taxes and more taxes, and it's like that money is going nowhere. All that money is just going to help Ukraine, which makes perfect sense.
Yeah,
Who
because
cares? But yeah,
if you are in, for example, California, I believe it gets up to like 55 on the highest brackets.
but that, yeah, highest brackets, yeah.
So, but that's the thing. Imagine that, just like every incremental dollar, you only keep 45 cents.
That's so trash. But I get it if you're making billions, right? But like if you actually look at that tax bracket, it's like what, 5 million, and you got to pay like what, 55% or something.
For what, sir?
So if you make like 5 million,
In the US?
isn't it? Yeah, in California.
No. It's I think it's the highest income tax bracket. I think it's like 400,000.
Oh, bro, that's trash. Then I read that wrong. Okay.
Yeah, let me pull up the new tax brackets because they're updating, and I got to see single and married filing jointly.
400,000. That's not even like.
Let me find them.
And that's like household income too, I'm assuming.
Yeah, this is the federal. So federal income. Okay, no, I was wrong. It's been adjusted. So it's now 578,000 on the highest tax bracket. I thought it was 400,000. So I thought it triggered earlier.
I hate the government.
No, so it actually raised, and then yeah, you'd be paying $174,000 in taxes if you're making over 578,000. So sorry, if you're making 578,126, that's $174,238 in taxes you pay. The married filing jointly, that goes up to 693,751, where you're going to be paying that figure. And then married filing separately, it's that. Oh, I gave you the figure, by the way. The first one I think is single filers, by the way. And then head of household is 578,101 on the highest bracket.
Yeah.
So
I just added an extra zero. It's all good. Whatever.
Yeah. No. Well,
yeah.
It's and then you add in like the state tax, like California. Yeah.
Oh, geez.
So yeah, Slurpees. No, that's why I stated the dollar figure. So the dollar figure of 170,000 is not 37% of it. It's marginal.
Yeah. My only question is why. My only question is like, well, why would you live in California? I'm just saying.
Weather.
Like Weather.
Yeah. Have you been in California?
No.
Imagine the perfect weather, California.
But like they have no water. At least they're not going to. A couple of years, I'd say, maybe a decade. They're gonna
Yeah,
have like no water.
barring that, but the weather is just
True.
absolutely insane. What is the inheritance tax in the U.S.? I think that's the one where it's in the several millions before you pay inheritance tax.
Oh, is that the one? Okay. Oh,
Yes.
and also you guys have a gift tax. That's kind of goofy.
Yes.
That's really goofy. Oh yeah, here's
Yes.
some money. Government's like, we want that cut. Like, what did you do? What did you do to get that cut, man? I don't know.
Yes.
Oh my god.
I forget. There should be a bracket on like when it triggers. But I'm pretty sure that one's in the millions. I think it used to be 5 million.
Oh, is that? There's no way I mixed up freaking inheritance with. Oh well.
Yeah,
Oh,
5 million.
Oh, so that's. Oh, that's funny.
So you only pay tax on 3 million. So you get sorry, that's an example. It's 2 million. The first 2 million is tax free. And then so for and as an example they give here, if you inherit 5 million, you're going to pay taxes on 3 million. And then that's there it can vary by state, by the way, in terms of how much they're charging on the inheritance tax.
Yeah.
But there's ways around it. You can set up trusts and stuff. But most people aren't going to deal with that because most people aren't going to inherit that much. Well, actually, no. Now with where prices are at with homes, etc., it's possible. The boomers have, decent amount.
Yeah, I don't like it when people say rich get richer, poor get poor. It's like, okay, let's frame it a different way. Morons get poor, and then like people that are like, level-headed, they'll still do fine.
Mhm.
Like if like that's the thing. Like when you put yourself in that type of mindset, of course you're going to be poor, man. You keep blaming the establishment when you're not doing anything yourself to change your situation. Change your freaking situation and you'll prosper. It's not that complicated, man. Like I even my own coworkers, man, like we all make the same amount and they're all paycheck to paycheck. And it's because they had variable mortgage rates, because they kept like changing every year. Interest rates go up. I see one of my buddies, his mortgage, bro, he was paying like 2,200. That thing jumped like $4,000. Yeah, 4,005, something like that. It because he was variable. He was variable interest rates, and interest rates keep going up, and he had to like renew it, and they go by like 1 year and whatever, right? So because there's fixed and then there's variable. You guys got variable as well,
Yeah,
right?
but we got scarred from that in 2008. You guys didn't.
No,
so
we
you
did
guys
not.
are continuing the mistake.
Yeah.
So
yeah. There's a lot of
yeah.
Canadians that have variable. Yeah, it's unfortunate.
That
But
is wild.
I freaking kept pushing them. I'm like, yo, guys, get rid of your variable. Get rid of the variable. And they won't. They're like, no, bro, it's cheaper. Look at the interest. It's cheaper. I'm like, all right, man. All right. Now you got to pay $2,000 more, and now you're paycheck to paycheck. Congratulations. You played yourself. But
yeah, because they had the chance at really low rates.
Yeah.
To get it fixed.
But because variable was slightly lower, they went with that. They're like, oh yeah, rates will always be low, bro. It'll always be low. And granted, rates will probably get cut, but I don't think we're going to see 0% anytime soon.
No,
I think we're going to stay elevated for a while at least. I think it's a good thing too. I think rates should be at a decent level, anyways. 0 was just insane, and I think in Europe they did like what, negative interest rates. That's wild.
No, negative. It's not technically, no. But
technically, no. Okay.
No, negative real rates.
Real rates. Okay. Still,
Japan had a borrowing program that was like that, but it was more of the institutional entities, not people.
Okay. And I think it's China only that has the 100-year mortgage. I wonder if Canada's going to go into that.
No. Sweden has one.
Oh, Sweden has that too.
Yeah, Scandinavia.
I wonder if that's going to be the golden standard now. If we're going to start going through 100-year.
I wanted to react to a video done by he's become a real POS. Jake Tran.
Oh, I don't like him.
I don't like him either. I saw one of his videos recently. All of his videos have all become sponsorship videos. Towards the end, he sponsors whatever the video is about. So he did a video about masculinity. Very end of the video, he's sponsored by a testosterone pill.
Of course he is.
But the video, I got pissed off. I didn't care about that one. That's just like for whoever has testosterone anxiety. There's a video about mortgages and basically how getting a mortgage screws you. So I watched it, and at the very end of the video, you find out he's sponsored by this guy who sells courses on what's the best way to, like, you know, get buy real estate, basically real estate investing courses.
Oh my God. So
And
Kevin,
debt courses. No, more like a Dave Ramsey-esque, but shittier. Like, oh, why debt is bad and all that stuff. But you need to pay him in order to, you know, find out why debt is bad. So yeah, that I watched the video, and I was basically like, if anyone listens to Jake Tran's video and takes the advice and says the mortgage is bad, I shouldn't own a home at a fixed rate, etc., for 30 years. For, like, you know, we talk about index funds, how most people should own the index funds. Frankly, most people should own a home that they live in.
1000%. And
if you don't do that,
oh, bro, you'll be rented for. And dude, renters are gonna keep surging. That's not something you can control, especially when you're in retirement. You need to have a home, and unfortunately, most people won't. Most Canadians will not own a home in the future. So, well, I'm excluding baby boomers. I'm talking about like Gen Z, millennials. Majority of them will never own a home in Canada. Never.
Yeah.
And again, the circumstances isn't the greatest, but you can find ways. You can find ways to own a home even in Canada, even with the bubble that we have. Like, you can just look at literally different provinces. If you got decent skills, you can find work anywhere in Canada. Maybe not Winnipeg, but anywhere, all right? Pretty much anywhere. So that's why I've been looking at Alberta. Real estate in Ontario, pretty crazy. But in Alberta, pretty good. Growing economy, pretty solid. If you learn a little bit of French, Quebec's actually pretty underrated. Again, if you want to learn a little bit of French.
something my elements of my family had the wisdom to do back in the day was, and I think this was pretty common amongst many sections of my family, was to purchase large plots of land for the purpose of having it in case the family needs places to construct homes, familial properties, essentially, familial neighborhoods. There was one of my extended family groups in Venezuela did that. They bought a big area, and then in there they built the house. The parents built houses for all of their children. So it's like a neighborhood, but
That's
it's only
awesome.
yeah. It's and basically it's all like one compound, but they're all individual houses, like completely separated. And then they eventually did occupy them, like the spouse, kids, and everything, but all in separate houses. And it's just like the parents were securing that. And then similar elements of my family did that here in the States. Just purchased land. They didn't live in it for a while. They were raising their kids wherever they were. And then when they were older, they're like, hey, if you want to live in an affordable area, et cetera, there's land that we have here, build a house there. Because it's already bought. It's just develop it. And then that's how they also like left the houses to them. So they had homes at least, but it's a way to secure. But what,
Bro.
1,000-year mortgage, dear God. No, what they really need to do is increase supply. But
yeah. Yo, bro, low key, that's what I'm planning on. Actually, I'm planning on getting some land as well in Alberta.
Here, I'll throw you an investment that I haven't talked about on YouTube. I'll throw it all to all the audience watching. Yeah, you never thought you'd watch 5 hours in. I'd give one.
Oh Jesus, yeah. How many here?
We have
That's
60
wild.
people.
Oh, not bad. All right, 5 hours. That's good.
No, these are wild people, and Fuhat's been yelling at me constantly. Go to bed. Go to bed. Go to bed. Go to bed. So I'll finish this off. We'll finish before 5 hours. But I've been investing in a REIT. Yeah,
of course.
Kingdom.
Of
Yeah,
course.
there you go.
Oh my god. What is it?
American Homes for Rent.
I'm already not interested. Okay, what's the ticker on this thing?
AMH. There's a
Hey.
Canadian one, if it makes you feel better.
No, not really. AMH.
Well, it's funny because it's a Canadian company that invests in the U.S. housing market.
Of course. Good old Canada, bro. Canadian
Yeah.
companies. This thing's done surprisingly. Oh, American Homes for Rent doing. Actually, you can just explain it. So I guess these are what, just single home renting stuff?
Yep, they just buy single family homes all around the country. They actually have avoided California or California. They
Nice.
focused on high growth markets: Nevada, Texas, Florida, Sun Belt, Middle America, all over the place, really, but avoiding really California. And unlike Innovation Homes has a huge amount of Innovation Homes was spun out of Blackstone, so that's where they came from.
Okay.
But they're the biggest player. Innovation Homes is the biggest player. American Homes for Rent is the second biggest player. American Homes was always a pure play by itself REIT. They do a lot. They grow in a couple ways. They acquire new properties. They also build out neighborhoods for rent, for the purposes of renting. And they also there's a third one. How can I forget the third one? They acquire. Oh, and they buy out entire properties from builders. So they'll buy the whole neighborhood from a builder, for example, to give the builder liquidity, etc. Now,
Actually,
yeah.
Well, actually, you talked about all that. Actually, like, you should type in a BSR Real Estate Investment Trust. That's actually a pretty cool one.
I think I've already looked into them, actually.
Oh yeah,
BSR.
Yeah. That's a cool one. Yeah, that's a cool one because that's purely just Texas.
This is more apartment rentals, though, right?
Yeah. They look cool though, don't they? I don't know. They look pretty nice.
No, they're pretty good as well. The thing is though, 2020 3 is still like a pretty attractive year for a lot of REITs. Like they're trading at historical discounts on a relative basis. So.
Have you seen Crown Castle American Tower? Like, I don't even like REITs, and I'm like,
Oh, is American Tower getting smacked now?
Oh, they're both getting clapped, bro. They're just like,
oh yeah, wow. American Tower broke 200.
Yeah,
wow,
bro.
Wow.
You know how crazy that is? Both of these bad boys. I don't know, man. The best one the best one in the space, I still like Prologis, man. That's the one I like the most, but the rest are
Nah, you're capping on KRC.
I do like the CEO. I think me and the CEO, like, we could probably get a beer. I think he's pretty conservative, so. But
oh yeah, because you heard what he said in the calls.
Yeah. Yo, he's wild. He's great though. I like the CEO, and they're probably gonna follow their clients if we do see this massive surge, which it's happening.
Yeah, that's what people understand about KRC's culture. KRC has always been like a pretty adaptive business.
Oh, I mean, yeah, they'll follow.
But they also don't even only do office, but they're associated with office. Like they're one of those companies that's too diversified, so no one really knows what to call them. But they just lump them in with something. So they do, life science, office, apartments. Like they do too much, frankly. Instead of just being pure play focused, not like Boston Properties, which is just office. But KRC has had to adapt a couple times now.
No, like again, like KRC just became a meme because retail loved it. And I hated it. So there's that. Oh, Andrew's back. Or
What's
not.
up, boys? Can you hear
Look
me?
at that. Pitch black. Look at that. Nice.
Why is my camera working? The hell? Can you hear me though?
Yeah, we can hear you.
We can hear you, so I guess it doesn't matter. Is this a 24 stream? What's going on here?
I hope not. I gotta wake up to pick up my groceries.
Oh, you can do that later, bro. You got your Amazon, delivery.
Speaking of which, Amazon.
Yeah.
I heard you guys talking about American Tower, and I had to hop on because did you guys look at Digital Bridge's report?
No, but I'm loving my Digital Bridge,
dude. Their fundraising goal for this year. Remember how we talked about they're gonna smash their fundraising goals?
Yeah, they smashed it.
They raised almost $3 billion this quarter. Their goal for the year was $7 billion.
Jesus Christ. They're still, by the way, for anyone watching, they're still pretty attractive. If they're now beating our expectations, or sorry, their expectations / our expectations, you have to raise your expectations.
Wait. So are you guys talking about
So-
Digital Realty or Digital Bridge? Like
Digital Bridge.
Digital Bridge.
What's the ticker of
Let me
this?
see if I
I
can-
freaking
DBRG.
DDRG.
Who added me? Someone added me somewhere. Oh,
Yeah, let's see. Second quarter 23 fee revenue increased 47% year over year. Fee related earnings increased 35%. Raised 2.7 billion since last quarter, driven by initial commitments to the latest DBV series.
I think one of our Discord members is drunk right now, and then just posted a voice text in Discord, and it's hilarious. And it's like it's in deluxe general chat. You'll see it. It's actually funny. Oh, he's adding it at Leo, and he's directing it towards Leo, and but it's like a 2 a.m. voice message. But you hear the voice, it's hilarious. What was there? Oh, I'm reading the discussion above. Oh my God. He literally is yelling. He's saying, "You guys are fucking nerds." And you look above, and it's just Leo and biotech going back and forth about what stock is this even? Oh, it's Nvidia.
Oh my gosh.
You guys are fucking nerds. Oh, that's hilarious. I love the community. Anyways.
Yeah.
So Digital Bridge kicked ass.
Kicked ass, man. Should be up more. Sorry, the dogs are here. They're just like saying, "What's up, man?"
Yeah, we're just like watching Garner going.
Yeah. And then they had a long talk. It was really interesting. Like I'd say listen to the call because the CEO really laid out how important, and I mean, obviously he's going to be biased, but I think he does a very good job laying out why generative AI servers in the US are so important and like they have the ability to do it. Because he said when you're testing generative AI, it doesn't matter where your server is. It's just about testing it in the cloud. But when you actually have to have it be running and responding to people in a timely manner, it has to be low latency. And so like you can't have a server in India working with someone who's in the US. It was a pretty interesting transcript and like pitched by Ganzi. And
Oh yeah.
And so I don't know. I listened to it and I'm like, man, he's got me all pulled up on this. Not that I was like bearish, but
no, Digital Bridge was such a solid pick at that $10 price.
Oh, dude,
that was just like gum. I regret. My only regret is I did not buy more.
I mean, like, how big is it for you?
It's not very big. Let me tell you the percentage. Give me 1 second. 2.62%.
Okay, mine's a little over 5, so I like double what you have percentage wise.
Gondar's like twisting his hair. Like I have double.
Dude, I'm looking at these analyst estimates can't be right because one of the things I like about Quarter is like you can actually pull up the estimates for it, which is like nice because a lot of times it's
Are you sponsored by this app? What is this app? I'm gonna download it.
You don't have Quarter?
No,
dude, Quarter's great.
Dude,
yeah, Quarter's great.
Literally, as soon as the earnings call goes live, it's on there, and then they have the transcript on there and the report. And it's all.
I'm a Seeking Alpha loyalist.
Don't you use Twitter? Their Quarter's fantastic on there as well. I love their designs.
Yeah,
it's great.
I can't believe you don't know Quarter.
Yeah,
no,
they're like
I don't know Quarter.
Yeah. No, you'll love it. I think maybe. I don't know.
How do you listen to earnings calls?
Seeking Alpha.
Oh, they have an audio where you can listen to it. Okay.
Yeah, transcripts, everything. Yep.
Yeah. So because I am sponsored by Seeking Alpha.
Of course you are. I make $2 with Tom Nash. You know, it's all good.
Oh,
Wait, who made $2 with Tom Nash?
No, I'm just messing around, just because he's
Oh.
also partnered by Seeking Alpha. I'm pretty sure. So
Tom Nash, man.
what?
It's a Mexican standoff. We're all looking at each other like,
no, I'm just typing something. That's all. I just had to write a message. I think
Oh.
if you look at the private chat, I'm talking about Fabio. But and then the other thing was IAS had an interesting earnings call. I see why it went down, but I also think that company is like super set up to like be insane the next year. Like their growth in this past quarter, they signed an agreement to be on Meta Reels, Google Voice Player or Video Player, sorry, and Uber Ads to like be their partner. The numbers weren't that great, but I like looked at I don't know, they seem pretty set up, and they just expanded a partnership with TikTok and Netflix. I think they're like signing with everyone, but I think they're like one of two players in this industry. But anyways, Digital Bridge was solid. I think you can actually pick up more, and I still think they're super cheap.
Are you like an ad tech specialist? So it's like Perion, then it's like Pubmatic,
No,
and then it's this one, IAS.
It's what
What
I
else?
was,
Yeah.
Google.
Oh
yeah,
yeah.
his name in Discord is Google Lover.
What how does Jeremy say it? Google my Dougal? Google? I don't know, something. He likes to rhyme.
He's not allowed in the family.
Oh,
family.
Oh,
We kicked him out.
the fact that he tries, it's funny how he tries to rhyme with every company, right? It's like crazy. It's wild.
He's a madman. All right, we're gonna end the stream here, and then we can have that quick conversation off camera.
Yeah.
Mm-hmm.
All right, guys. Thank you guys so much for watching. Whoever lasted 5 hours,
5 hours. Who survived?
you're a
legend.
wild man.
Not bad.
You're a real one. Probably like half of those people fell asleep with their phone.
Oh yeah.
And then so I'm just whispering in their ear, just like telling them they're dreaming about stocks. They're just like, you know, they wake up on Monday, they don't know why, but they buy Digital Bridge. Like they don't even know why. They have this feeling. They type in the broker DBRG, never heard of this company. They're like, I'm gonna buy 100 shares. I'm gonna buy 100 shares.
Oh my god.
Yeah. Then our bags get pumped. We somehow pumped what's their market cap now? $2.6 billion company. Hell yeah.
Something like that.
All right, guys. Thank you guys so much for watching. We'll see you guys on the next one. Bye.
And
he left.
wait, he left? And it's still live.
It's still is that possible?
Bro. Is this how it works?